Good morning. Good morning.
We'll get to a bunch of the retail names. Of course, there's Kohl's and Best Buy, A&F, Burl, Dick's all on the tape today. Take a look at the pre-market split at the moment. Back in a minute.
Futures flat. It's off about 7 handles at the moment. We know that 6,700 starting to build some positive gamma. So that's good. We got put selling below. We do have a major support at 6,500. Looking for this. Yesterday, I pointed out late in the evening that the 6,750 level was building some gamma. Okay, so we're looking for a push towards 6,800 into Friday. Okay. All right, so note Brent's comments here. Keep an eye on 6,700. We need to stay above 6,700.
As well with the new Fed chair that Trump's going to appoint, is going to have a huge push and pressure to cut rates. And the only question is how much.
Yeah, and look, I'm reading through the ADP right now, and we really see an acceleration in the per week private payrolls job loss, which here it says 13.5. Another report saw 75, but either way, that's up from 2,500, which was reported a week. That was reported just last week, so it shows an acceleration here in the job losses or job slowdowns. In the meantime, the Fed really is looking to cut, and do you expect more cuts in the new year, and does that help stocks?
Yes and yes. We expect more cuts in the new year. The hard part, of course, for whoever Trump appoints is they're going to have to rally the troops around a board right now that is very fractured. I can't remember a time in memory where you've had competing Fed chairs coming out and pitching for rate cuts or not rate cuts in very public and confrontational ways. Now, Fed Chair Williams did a good job of softening and kind of dancing around it, same with Fed Chair Daley. But we've had some very bombastic comments, and that is very unusual. I think the new Fed chair, whoever that is, has a tough job. One, to placate the pressure of not just the president, but I think many in the definitely home building community who'd like to get mortgage rates down there to loosen it up. In the pressure of, hey, we don't want to cut too much in the face of what we'll need some ammunition on the sidelines in case of an economic slowdown, which the labor and employment data definitely raises as an actual fear to watch out for.
And I know you like small caps. You have some stock picks for us as well. Let's start with the small caps. Why small caps, and what kind of upside potential do
Yeah, I think small caps, look, we've seen a huge run up this year in the mega caps, right? Whether it's NVIDIA, we're going to, talk about Alphabet, Google, Meta has had an up and down year. There's a lot of the biggest names that have gone gangbusters, but because of high interest rates, because of challenges in the economic front, the small caps, we haven't seen as much or as great of movement there. I think if you see rates come down with those small caps that really struggle and feel the pain point of higher rates, I think you should be able to see some winners there. I will say from an individual perspective in the small cap space, it's going to be a bit of a tale of two cities of who benefits from the current economic environment.
All right, we got 9 minutes to go. 9 minutes.
Some of them have gotten a run up thanks to having any connection to AI. They've been able to run up. I think you're going to see a lot of the left behinds, those consumer staples, defensive names, things like that, start to get a better look in even in the small cap space as people start to shift in the investor sentiment that has shifted to say, hey, there's an over concentration of success in the market based on just a handful of companies. What about the rest? And I need to do more to diversify there across the board.
And while you like Meta and Google, that's where your equal weight call comes in for the ETF. Tell us about that.
Yeah, that's right. As we've seen the concentration, specifically of NVIDIA and Tesla, now about 10% of the S&P 500 weight, that shows concern.
All right, that looks good. All right, so we did sell a Iron Condor on Zoom. You can take the puts off at the open, right after the open if you want. Sold the 88s overhead and the 72s below, I believe. We're trading 82 pre-market. Zoom.
And then two, with some of the economic data, it's also a nice way for defensive measure in case we have something like 2022 again. Remember, in 2022, equal weight index absolutely smoked the S&P from a return perspective. It held up much better, and so that's something to keep in mind as well as you're looking for
Bitcoin giving back half of yesterday's gains. Bitcoin. Yesterday's gains, giving back about half. We're going to look at, we did the same thing yesterday. We gave back half of Friday's gains, and then buyers stepped up. So look for buyers to step up at the low of the day. NVIDIA is lower on news that Google's offering chips impacting NVIDIA and AMD. Starting to come off the low, NVIDIA. Meta's starting to move. You can also buy FBL, the 2 times Meta ETF. All right, got 6 minutes to go. 6 minutes to go.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
All right. 4 minutes. 4 minutes to go.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just
So Michael Burry closed his fund, and now he's offering a newsletter. That's very interesting.
trade brilliantly with Schwab.
Welcome back to Opening Bell. After a tech-fueled rally yesterday, you're likely to see some of that continue. For example, with Google, right? That's likely to hit $4 trillion. Nvidia will be pulling back. We'll have a mixed bag there. Some of the retailers will be watching. Joining me right now, Sam Bonus is with me. We're getting ready for the opening bell. We're also talking a lot about Scott Bessett's comments about whether or not we'll have our Fed chair by Christmas time. It's down to a small list.
That's right. He's got 5 candidates. He was speaking this morning to CNBC, that is Scott Bessent, and talking about how the Fed chair might actually be announced before Christmas, according to him, as far as what Trump is going to decide on. So that's obviously something that we're going to be watching very closely in the markets. Interestingly, Nicole, what he was speaking about also this morning was how the Fed almost needs to sort of fade into the backdrop here, calm things down, and work for the people. And that sort of sparked a little bit of a debate amongst the lot of attention to in the absence of the official government data, hanging on to every word these officials and members say coming from the Fed. And of course, we've seen these huge gyrations in the market off the back of that. I mean, just take Williams, Waller, and Daly's comments, which has allowed the probability of a December rate cut to shoot up to 80%. And that is without a lot of the information and the data. Now, of course, we did get more information out this morning, Nicole. We got some PPI, which shows a little bit of inflation coming through, particularly on the wholesale prices, 0.3% versus 0.1% of the decline previously. Remembering, of course, the data we got this morning is a little bit stale. It's a little bit backwards looking, but it's very much
All right, 2 minutes to go.
continue to show us what the trend is pointing to 2.7% year on year. Retail sales are coming up 0.2% month on month versus the previous 0.6. So that coming off a bit. Then we of course got the ADP, a new data set that we've been working with every week, which showed minus 13.5 as far as thousand, that is, of average 4-week jobs coming through from the ADP report. So it's been a little bit of a mixed bag in terms of the data this morning. We are dealing with geopolitical tensions as well. Take a look at the oil market. That's been a big focus this morning. We've seen that dropping to $57 a barrel. There are some reports talking about how Ukraine might actually agree to some terms of this peace deal. So keep an eye on that. Take a look at bonds. We're at 402 right now on the 10-year off the back of some of these comments from Bessent. Also what we heard from the Fed officials as well. And as far as the DXY, I'm looking at coming up as well this morning. 19.
Give it a few minutes for the markets to settle down. The first 15 minutes, not doing much anything except taking profits off the table. Reassessing the markets, looking for a trend after 950. Lately, we've been seeing at the 950 mark, trades will come in like yesterday at the 6,700 level. That gave us a target for those calls early on as soon as we saw dealer hedge flows bottom and turn back up. So we'll keep an eye on that. You can see what happened yesterday real quickly. Here's yesterday's reversal. Okay, that came in right at 1050. Here's 1040, 1040. Okay, you saw that 6,700 level. So here we go. And here we go. A lot of positive gamma right here at the 6,700 level. Okay. Give it a few minutes. Microsoft popping, Apple popping back up. New York Fangs are mixed at the moment. Futures fading. Futures fading. Here's price right there.
Celebrating a recent IPO. We'll talk to the CEO in about an hour. At the Nasdaq, it's Enteron, location and control provider of tracking and recovery services, celebrating 30 years. You're going to have a good year over there in Mexico because they're our number one trade partner. There's so many good things happening in Mexico, and we tend to have it colored by incidents that are historically unfortunate, but they've really come through, and I think dividends much more of a part of the fabric of North America than it would have been 10 years ago. Well, you spent a lot of time there.
Okay, got a bounce coming here. Got a bounce on the S&P. $6,800. We see a lot of coming off there.
How important is it that we punch through? I don't think it's important just because this is the very light week. I would like to see it happen because it's always been a
Okay, here's that Zoom Iron Condor. Let's see what we can close this for. Okay, S&P is starting to move. Maybe buy some 6,800s. 6750, sorry. 6,800 is resistance. Potential target by the end of the week.
Yes, Microsoft is quite powerful. Yes, although its stock is down at the outset here, and different than Apple, Meta, Alphabet, and Amazon, all of which start the morning ever so slightly. We're not talking about huge rallies. Meta actually the better performer here than Alphabet.
Well, why not? I mean, they're the ones whose capex is going to go down, and that's what I've been
All right, setting up my active trader windows with a put and a call. Puts on the left, calls on the right. Just in case we do fade. There isn't much positive gamma down below. Okay, so here we go. We're starting to move. It looks like we are pushing a bit higher now. Zoom starting to move a bit higher. Zoom's up quite a bit. I'm going to go ahead and close that position if I can. Okay, Zoom. Close the Zoom.
Is it even being counted fully in the liabilities for these companies when you're talking about commitments to build data centers? Sometimes they're
close the Iron Condor on Zoom.
And it may not actually be included in some of the liabilities. Something just to keep in mind. I have to do more work on that, but
$30.
I know, but when I talk about, it's funny, I was going to mention Oracle again, and I was like, I don't want to pile on, but this idea that, well, are they, does the rent always include the electricity? And take a look at Oracle, guys. Look at that stock.
We had an inside day yesterday, but we just took out Friday's low.
It's 189. We've lost one night. The move here has been dramatic. We've talked about it. It's a few weeks ago that I put that CDS up. It's been more or less nothing but straight down since. It's continued concern about their overall liabilities. We've talked about it endlessly, and we will continue to. In part because there is that question, and then of course the linkage with OpenAI, the questions about OpenAI's $1.4 trillion ultimately in spend that's coming. A lot of it using Oracle's balance sheet. Remember, because that's what OpenAI has to do. They have to use other companies' balance sheets in a sense to fund the build out.
But you see, as this is going on, well, this is really, I think, very important.
Letting the market settle down.
Morgan J&J market. As long as you don't stray too far away from the drugs and the financials, fine. Yes, we can have this whole market be part of Oracle and NVIDIA because they're so big, and Microsoft. Or we can look at where the money's being made. And I've got to tell you, the easy money is at J&J going from 19 times earnings to 23 times earnings. Why not? J&J's doing everything right. JP Morgan, David, other than that tower, which is just towering expense to me, JP Morgan is
Hedge flows turning up.
because they're not making any mistakes. No
JP
money.
Morgan building is beautiful too. It is. Oh, it's amazing. If they probably did spend more than the headline number, that would seem to be likely. Yes, we'll never really know what they spent.
No,
But it doesn't matter. It's beautiful.
they could sound like Jimmy Hoffa's in there or something. Which he's not. No, he's not. I just like, look at Merck is now up 20 straight points.
Hedge flows continue to move higher. We're just watching for now.
What's going to pass some of these hyperscalers? This thing is incredible. The money is moving to
Note the 6,800 level is building.
Healthcare was a massive underperformer in the XLV in the summertime, August, September. It's almost caught up to the whole S&P.
No, it's really an exceptional time, and we are all focused on a couple of hyperscalers. We got to try to help people make money. I'll give you something that just shows you what's happening. Like David, I'm going to come to you with just an incredible statistic. I'm listening. Bristol Myers is only down 13% today.
Is that all?
What a comeback!
It is.
What a comeback!
13.8% for the year.
There you go.
What do you think's up with AMD? They haven't lost the whole gap from the October 6th OpenAI announcement, but they're on their way.
It's too late.
Hedge flows rising and bullish.
That October deal makes people feel like, wait a second, it's such a good deal. Maybe now they're two under the thumb. I'm not buying this. Again, I think that you're saying Lisa Su doesn't know what she's doing. That's never been a way to. It's always been a bad judge.
But you call OpenAI the Achilles heel.
Well, that is, and you got to see OpenAI do something incredible because right
But
now.
they might. You can't discount the possibility that OpenAI may.
All right, give it a few more minutes.
Next version of ChatGPT will be
Around 9:50, we'll be looking for any changes in the gamma map. Meanwhile, hedge flows are rising. There's not a whole lot of positive gamma below. There's some at 66.50. Let's look at open interest. There's not a lot of open interest here. There's a decent amount at 6,700. We need to stay above that. 68.80 would be risk off.
It is 4.2 trillion right now, and it is still ahead. But Apple is at 4.1, so the old market cap, and then Alphabet comes in third because it far exceeds Microsoft's market cap. Obviously, that was last week. Before we move on, I did more money making coming from the likes of XAI, Elon Musk's effort towards NVIDIA chips. Remember back in May, he said they're going to buy 1 million. I thought he said he had his own 1 million chips. He did was yesterday or the weekend tweeting about having their own design chips for Tesla. But I did want to just update reporting.
Futures pulling back in a little bit. Watch the hedge flows.
Because of course they are raising it. Elon likes to say what I report is fake news.
Yes.
Don't know why he continues to do that.
You said false.
So he said false. But in fact, I would come back with truth. And the way I know it is because the latest memo from Jared Birchall was today's your deadline in terms of allocations for the $15 billion that we're raising at a pre-money valuation of $230 billion. It's not. And so they're going to close this on the 19th of December. They extended the close date by 1 week. And I just wanted to come back to it, in part because I don't know why Elon keeps doing that to me. It's the second
I mean,
time.
you're not alone.
No, I'm not
Reuters
alone.
has been there.
I'm not
So many.
alone.
Yeah.
He doesn't do it to Andrew Russell.
I'm not alone. He doesn't? Nope.
Sad face.
What is Andrew has said? Maybe Andrew hasn't said anything about him. He wasn't around in 1929, Elon. So, wow.
Apple's still moving. Apple on the move.
I'm up to Lamont has just David Sarnoff has just negotiated the thing with the Germans, which is incredible.
Apple with a nice breakout.
Yes, change in reparations. Somehow it didn't seem to work out anyway, did it?
Shaq was a Hebrew scholar.
Okay, Apple, you got 3 white soldiers on the breakout here. Apple.
So yeah, that's where I am. Let's finish that.
With the Titanic, with the
Now moving on to Charlie Mitchell, National City. All the buildings down here. You go up by literally all the buildings and see.
who was he being played with?
I don't know. Yeah, has it been cast yet?
Alec Baldwin? I don't know. I gotta think about that.
All right, you think about it.
In the meantime, Apple is viewed every time as the winner because whoever gets the edge, someone we think is going to write a check to Apple. But of course, by the way, when you speak to Tim Cook about this, he doesn't even acknowledge that could happen.
Apple, 3 white soldiers. S&P dropping off here.
Interesting example. Right now, everyone thinks of NVIDIA as the loser. How many times have we heard, even last week on our network, I heard people, Apple doesn't know what's doing in AI.
Yeah.
Really?
Yeah, you're
When
right. I mean,
someone
the
pays you,
fortunes, they shift so fast. Great piece in the Journal today looking at Cook, and there is no mandatory retirement age.
50-day test yesterday and today.
They do say that Furner is probably the
S&P dropping off.
Federici or Q or Jaws React.
well, I mean, if you speak to the company, what they'll say is, of course, we have a succession plan, and everybody does, but there's no time frame or anything. And I read those pieces, and I read their polymarket pieces.
Yeah, the poly meaning what?
Meaning it's someone
Futures off 17.
polymarkets will say, okay, who's the front runner?
And then you can make a market in it and just generate some more traffic and more betting.
That's what people do. I was
Fair value gap on the way down. Looking for a reversal. A retest of this fair value gap right here, potentially.
Wagering on who the next CEO of Apple's going to be.
MACD is still facing lower.
There was this piece yesterday also, Mark Gurman's piece about, you don't hear about layoffs at Apple too often, but in this case, some reductions across the sales organization.
Look, all I know is that that could be for like Mark Benioff's product with the Gentex. You maybe can let people go. I mentioned Benioff more because that's his. You hire them, and you don't necessarily have to have as many people in sales, right? Move those people to other areas is what people want to say.
All right, S&P continues to back off into yesterday's gains. Hedge flows turning back down. Just waiting for this early morning positioning. Not a whole lot of positive gamma below, so we could zip lower pretty quickly.
It's Elmer's glue. There it is, 84.80. You can't get by that. Every time it tries to go back, it's pulled right back in.
Guys, I was quickly taking a look. Oracle also may be getting hit because of another information piece about banks that are borrowing, or I should say the companies that are building data centers for Oracle, what they have borrowed to build the data centers to fulfill the 300 billion, obviously, commitment that they had to OpenAI.
Okay, NVIDIA, Netflix, Tesla, Broadcom, Snowflake, all of these are down. Apple's managing to stay at the highs. Apple showing relative strength. Google came off the highs. Still only 946, 946.
Say that Zuckerberg doesn't know what he's doing. I'm not going to say that Jensen doesn't know what he's doing, because this is all an information story. And if Jensen were here, I think he said, well, you know what? Take a look at our order. Why don't you? Yes, they put out a release they shouldn't have put out. That was a mistake. People make mistakes. And I think that was a mistake, and I'm moving forward.
How about some retailers? Kohl's almost back to that crazy update we had in July on their quarter.
They had better same-store sales. It looks like they've got a terrific new CEO. I really like. They enhanced their omni-channel platform, which is really
Okay, I would like to buy another broken wing call fly on this dip for the first week of December, second week of December, something like that. Let's see what I can do here.
Best Buy barely up. That makes a lot of sense. Burlington, I didn't like the number at all. That one was flat versus the others. And there we go. That's down 33. That's not impressive.
I mean, A&F will give you an 18% gain, but it's compared to the year so far, it's not a lot.
Hollister's back, but they too stumbled. A lot of these are like, we stumble, we're not stumbling. And that's not really what it's all about.
Walmart. Walmart good.
Yeah, I'm worried.
Target bad.
Worried. Target worries. Worries. TJX, not worries.
TJX.
Just looking at a potential call fly on SPY as we dip here.
The shareholders still get their dollars. Their dollars are still green.
Yeah, not at Kohl's though. Kohl's cash.
Cold cash, right.
I'm gonna take you to Kohl's.
Yeah,
Get a
please, sure.
Yeah, you want a shirt with a pocket in it?
I don't want to go to
You
Cold.
ever heard of French cuff?
Yes, I have. I don't have any.
You ought to think about it.
Tell you one thing.
Very nice.
Still some wild swings in this lighter volume week. Now we're down 22 points on the
That's what it's
S&P.
about, and that's why I don't.
Dow was up 300 a few moments ago. Now down first two.
But today should be up. That'll be tomorrow's business.
Obviously, a lot of retail or eco data today, although it's delayed from September between retail sales and PPI. We've been watching to see if the 10-year is going to break 4. Awfully close to it. We'll be right back.
Okay, SPY continues to move lower, S&P lower. Hedge flows continue to turn back down. We're below 66.80. That's a risk off level. All right, we're coming up to 950. We'll see if there's any new levels that develop here. Just going to pull this back to. Okay. 950. S&P continues to drop off.
projections is going to be incorrect in terms of what their assumptions were. And you'd have to say that those in the dovish camp seem to be a little bit more accurate in terms of the trajectory. What did we learn today? Well, retail sales were, they grew, but grew slower than expected. So let's say economic growth is slightly slower than expected. Well, you could look at the inflation.
Watch MACD.
They weren't really alarming. If anything, they were more of the same, which is sideways to cooler. And then finally, you look at the jobs data out of ADP.
Okay, S&P 500. Watch MACD. I want to see this turn as we're starting to bounce at 0 gamma.
I think that we're going to watch the dovish faction take a little bit more control of the committee. And I would expect, as the odds suggest now, that we're going to get a cut of 25 basis points in December.
All right. And Jenny, you have all these numbers memorized. You do so much coverage on so many of the tech names. I turn to you looking at
Watch your MACD.
stories or what you're watching. Yeah.
In the lower panel, watch your MACD.
I know it hasn't been a hugely positive quarter when you talk about some of the vast repricings to the downside. I still believe firmly that the AI
MACD is starting to turn.
It's just more about what that actually means for price performance. That's another story. But nothing right now in the narrative would tell you that there's any fundamental shift in the unprecedented.
Okay, we're looking for options here. Watch for a reversal now.
And NVIDIA does remain the market leader. with
Take a
its
shot.
GPUs that have become a pretty main piece of the hardware that underpins the huge AI infrastructure build. And while its dominance has been up for question for, years.
Watch for hedge flows to turn back up.
Major challenge. But I
Still
think
not seeing a whole lot of positive gamma below. Purple.
interesting. Like, for example, NVIDIA seeing some weakness now.
Could be a bear flag building, so be careful.
On the back of a report
This is not a trend yet.
Alphabet's AI chips.
Hedge flows are back and forth.
This will be right now Google's tensor processing units or TPUs, and it's
IWM with the bounce.
in 2027. So this is a latest development where we're seeing more and more competition enter the space. I'm sure this will be a theme to come, though, as we see more companies try to gain that lucrative market share of the GPU and TPU market right now.
And look, as Google.
Okay, let's look at IWM.
On the market cap says 3.9, so not right at the 4 trillion mark, not at this moment. But that's a name that certainly has been surging. Alex, what else are you watching, whether it comes to tech or anything else?
Well, Nicole, I think we're watching a changing of the guard in technology. I think Jenny highlighted the two primary players in that change. NVIDIA is now about $1 trillion off of its all-time highs, all the while Alphabet seemingly making new all-time highs.
Okay, puts getting
Both
started to look like we're going to get some puts being sold here. The darker blue puts are being sold now. As this candle at the bottom, this darker blue candle starts to turn up. That's telling you puts are being sold, calls are being bought up higher. That's creating some positive gamma. Okay, look for a reversal now. Looking for a reversal.
All of those names, in my mind, were sort of AI 1 or 2.0 winners, and all three or all four, actually, if you include NVIDIA, are starting to crack and starting to move lower. The only really key name that I can point out and say, hey, this is the name that's trying to take us to this next leg is Alphabet. It's going to need some help. It can't keep this market up on its own. I know Kevin Green talked about the broad nature of today's rally. Still over 70% of the S&P 500 is higher. But we need big companies to carry the burden. And right now, Alphabet is the primary big company doing that.
All right. And Jenny, anything else that you're watching? Some of these earnings I mentioned, a lot of the retailers, but there have been others.
IWM looking for the bounce
Busy week ahead. Friday will be
to continue.
trading too. Your thoughts on some of these big moves? I can't get over Kohl's 30% and Abercrombie nearly 20%.
Absolutely. And it does feel like for this retail earnings season, what has worked in these markets has been not only able to post comparable sales growth here, specifically in the United States, because it's a bit of a mixed picture when you go overseas, but also being able to find things that right now the consumer is willing to continuously pay for. Brands like TJX have been a really bright spot, as well as in Ross stores. Kohl's today
another really strong report. I mean, Gap last week saw unprecedented demand for denim specifically. So we're still seeing, again, that resiliency from the consumer. I know there's all the concern with a more tightened labor force and a more restricted jobs market and just the broader economic landscape where prices are frankly elevated still. I mean, just comparatively, you're seeing a consumer that is willing to spend, yes, just trying to be more frugal with those dollars. And it does.
All right, we got a nice reversal so far.
These names that have really emerged as leaders this year are where we can get that bargain hunting, like Walmart, for example. Not exactly a huge leader on the year, but of course you need the balance with the AI names for a more stability play, like Walmart really consistently has been now for the last, half a decade or so. And we're likely to get our third rate cut in December here in the meeting, which is on the 9th and 10th. We're seeing the 10-year bond yield now at 4.01, had been at 4.14 not that long ago. In the last couple of weeks, we've seen a lot of volatility with bond yield. So final thought, Alex?
Yeah, I think we're just seeing the risks of concentration. The S&P 500 ex NVIDIA would be up about 15 points right now. NVIDIA alone is contributing 28 points to the downside, and that's the risk with how big some of these companies have gotten.
All right, Alex Coffey, Jenny Horn, host of Next Gen Investing right here on Schwab Network. And thank you, friends, for being with us here on Opening Bell. I'm Nicole Petalides every day at 9 a.m. and 2 p.m. So I'll catch you at 2 o'clock for the watch list. Please join me.
All right.
And keep it right here. Morning Trade Live with Sam Vadas.
IWM. All right, so I might do a broken wing fly on this too. 245. What's the high? 245.
offers a webcast that's right for you. The platforms and tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Okay, that just bought a call fly on IWM. I'm going to buy some straight calls too. 0 day.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab
Okay, nice reversal so far. S&P back above 6,700. There should be some resistance here. We'll see if that we get resistance or if we just keep going. Okay, MACD has crossed.
Next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
FMFC. SYM. Hi, Triple plus 800.
All right. We're back to VWAP. Got rejected. Let's see if this turns out to be a bear flag or if we follow through. Hedge flows.
We have plenty to hit on both here and abroad over the next hour. It's been a busy morning already. Here's a look at what is coming up on today's show. We are just 2 weeks away from the start of the next Fed meeting. How much will the labor market come into consideration for the FOMC when it comes to a potential rate cut?
Okay, consumer confidence coming in lower than anticipated.
Dell, Alphabet rallying to another all-time high today, and Dell reporting earnings after the closing bell. Let's take a look at where markets stand around half an hour into trading, because as I mentioned, we've had some data out this morning. We are tracking lines from Betfent. We are tracking geopolitical tensions as well. So we've got the S&P 500 flat just to the downside at the moment, but managing to hold on to that 6-7 handle right now. The Nasdaq is coming off the best day it's had since May, so a little bit of weakness in tech, no doubt dragged down by the darling Nvidia, which is under pressure this morning. Of course, a lot of tech headlines with regards to.
Okay, watch the hedge flows. We're still chopping around here.
Going to be tracking the reaction in the market to that. The Dow is perking up at 0.3%, and the Russell 2000 up 1%. No doubt on some of this commentary, and of course more of a dovish tilt coming from the likes of Daly, Waller, Williams, and of course the market now pricing in an 80% probability of that December rate cut, particularly off the back of the data we got this morning. Let's take a look at where foreign markets stand, because we did see a nice follow through as far as the tech rally is concerned off the back of.
Okay, we need to stay above 6,700 and start to shoot
Up arrows across the board.
higher.
Index
Right now we're getting rejected.
Alibaba, a big part of that story, of course, off the back of its good earnings, particularly on the revenue side of the equation, and no doubt helped fueled by AI. We will dig into that throughout the course of the program. The Nikkei 225 playing catch-ups in the markets off the back of its holiday, ending flat just to the upside. The German DAX 0.8% higher. The FTSE just fractionally higher as well. So we did have some risk on across the global equities overnight and into the closeout in Europe, and we are looking at some of these futures products this morning off the back of plenty of moving parts here. So let's get you across here what we've got. A 10-year yield at 4.01, no doubt on some of these rate cutting bets now. The US dollar also backing off. We've got the DXY at 99. Gold is catching a bit this morning, up around 0.5%.
Still pretty choppy.
Crude oil on the back.
Okay, we got rejected here.
We are keeping an eye on these reports that Ukraine may be agreeing to some of the terms of the peace deal. We will keep you updated on that. We are down about 2.5% on the session. And Bitcoin, after recouping some of the losses in recent sessions, we're at 86,000, down around 3% in the session so far. So that's your scorecard as we get up and running for this Tuesday. A lot of moving parts, as I mentioned. Let's get out to Kevin Green now, a senior markets correspondent, because of course we've had some data this morning. We've had PPI, we've had retail sales.
No bounce yet.
A new, of course, data set that we are dealing with. But just as we hit the 10 o'clock hour, we've got new information hitting the tape. We've got business inventories, consumer confidence, pending home sales. Pick your adventure, KG. What are you seeing out there? 4.2%. And the expectations was it was going to gain 0.3%. It also marks a drop down from August, where we saw a 0.6% rise. If you dig beneath the surface, it wasn't all that bad. 8 out of the 13 categories actually grew. You did see some strength in places like gas stations. Remember, these aren't adjusted for inflation, so higher prices feeds into it sometimes on a monthly basis.
Okay, one day does not make a trend. Yes, Nvidia is lower on news.
Beneath the hood, besides gas stations,
AMD is lower on news.
furniture stores, also in the only
Just
services
one day.
report, which is the food services and drinking places, restaurants.
AMD lower.
Where some of the declines were.
It's below the 50-day, been trending lower. Nvidia,
Online actually saw a decline, which was unusual.
Nvidia
Clothing, including
also moving lower.
electronics, and I mentioned auto. So again, bit of a weakness and a dip in September from August, which pretty much jives.
Okay, S&P looking for it to bounce.
Some of the retailers, although I will note we got a lot of them today, and there were some better outlooks.
Hedge flows turning back up.
For instance, Dick's and Best Buy and Abercrombie all posted better guidance. You see it in some of the stocks.
Hedge flows turning back up.
Self-improvement
Still don't have a trend yet.
surging. But as far as what we're hearing, guys, from the consumer, let's just take Kohl's, for instance, because here's what we heard about the consumer.
Watching the hedge flows. They're still moving sideways at the moment.
Customers are becoming
Waiting for a signal after 10 o'clock.
There's that word. As their discretionary income remains pressured, this is especially notable in our low to middle income consumer as well as our younger consumers. These customers are becoming increasingly savvy and are seeking more value. We expect this customer
Kohl's.
behavior
I went into Kohl's the other day. Was nobody in the place.
Q4, and then
I couldn't believe it. I walked in the door.
on the
Look left, look right. The only people who are in the store were people working behind the counter. The store looked good. There just wasn't any shoppers. That's really weird.
Willing to spend on high price point products when they need to or when there is technology innovation. So retailers are just having to try harder because choiceful, value, deal oriented, newness is another one we hear about. They're just having to work harder for those sales right now.
Inflation adjusted, this September print would have been down a tenth. Redmac today kind of sums it up. Softer core inflation,
Yep.
softer core retail sales, ongoing weakness in employment, ADP down 13,000
Beyond that weekly number.
on the
yeah.
average week. Yeah, and chief economist was on with Leisman this morning, called it kind of a C plus, B minus labor market.
Okay, we don't have a trend yet versus what we saw yesterday. We had a yesterday at this time of day. Yesterday, this time of day, saw a quick reversal off the low at 10 o'clock, 950, 940. Here's 950. You can see that we got a very nice turn in the markets. Hedge flows continue to rise all day long. Okay, that was a good signal. Today, we're kind of choppy, so just keep that in mind. We're still very choppy here.
There's evidence that there's a little bit of a step down. It's not recessionary. It's not a drop. Things are still okay. But if the goal for the Fed is to preserve
Need to get above 6,700.
market, maybe that's why the market has gone up now more than 80% odds that the Fed's going to cut. Also, some of the Fed speak lately has helped. Mary Daly last night.
Wait, where are we in terms of December cut?
80. More than 80.
When we were, what was it, just a couple of weeks ago? We were
Under 50.
Yeah.
So what happened was John Williams of the New York Fed, who's considered a very key Powell ally, always a voter, kind of in the middle, suggested that he would like to cut in the near term. And so that, I think, coupled with as the data comes in, you could make a stronger case for a cut, i.e. highest unemployment rate since 2021 is leading the markets. Why we've seen
Okay, tonight we have our earnings.
Yep, I did notice that.
Tonight we have earnings.
For updating me on everything else.
It's always my pleasure. You and everybody else.
I appreciate it because I'm very much focused on technology. So let's turn.
Okay, let's see.
And of course, shares of Alphabet yet again.
Clean Spark.
2.3%. You can see it there.
Zscaler, $8, 8%. Okay, let me keep an eye on this here.
Christina Prince-Nobles has more on Alphabet's plans and perhaps a bigger impact as well. Christina.
Thanks, David. Well, NVIDIA shares, I actually want to start with them because they're down today after the information, down almost 6.5% after the information reported Meta is considering renting Google's Tensor processing units TPU from Google Cloud next year and could actually spend billions of dollars more to start using those same chips in their own data centers starting in 2027. That means breaking NVIDIA's stronghold on the data center chip market while you're seeing NVIDIA's sell off. And this also follows last week's Gemini 3 enthusiasm, which investors are calling the industry's latest, quote, DeepSeek moment since the large language model was trained solely on Google chips and not NVIDIA. The fallout is hitting other NVIDIA customers too. Oracle is down, we could say sharply today, almost 5%. They've bought billions of dollars of NVIDIA chips to rent out via the cloud. But if competitors build AI clouds with cheaper TPUs, those Google chips instead, Oracle can really just get undercut on price. So this is all about competition and offering the cheapest option. On the flip side, Google's hardware suppliers are climbing higher and have been climbing higher just over the last few days.
Need to get above this 6,700 level right here. That's 6,700.
10% higher on the week. It partners with Google on those said TPU chips, and it's been up and down. Jim Cramer points out earlier that Broadcom CEO Hock Tan sits on Meta's board, so Hock Tan could help influence Meta's board to pick Google chips designed by Broadcom. It's all connected. Google
Doji for now.
like Celesta,
Doji on the daily.
Momentum are also climbing as investors rotate into Google names and away from
Just waiting for a trend.
Microsoft, for example.
I suspect we're going to see some upside, but you know, with the lack of positive gamma building up a little faster, puts being sold, calls being bought below. Really need to see more puts being sold down below. That'll show up as positive gamma and will give us support. That lack of support is a bit problematic. Watching the VIX. VIX dropping off. VIX is fading. That's bullish. It's a doji still. Junk bonds.
Maybe we can start with the Fed because we were just having a
Junk
conversation
bonds higher.
about the Nick Timberose piece in the journal today. Maybe
Bullish
carving it down
equities.
to at least a hawkish cut in December. Does that make sense to you guys?
It did, because if you think about the case for cutting in December, not a lot has actually changed. You look at the Fed's own expectations from the summary of economic projections, and the expectation was core PCE to be around 3.1%.
Junk bonds look good.
Unemployment rate is edging towards that 4.5% level. So that would suggest
Junk
that
bonds are
there
bullish.
a series of risk
That's the
management
daily over there on the right.
less convinced is into next year. Whether you start to see more cuts heading into next year until you see a more dovish Fed, what does 25 basis points actually do? We have certainly seen the S&P 500
Junk bonds.
react more firmly to the prospect of another rate. Private credit. What are you guys seeing?
Junk.
What are you seeing, and how correlated is it with public
Let's
markets?
look at
One thing that's really important to
breadth.
notice here is a vintage risk. The deals that were cut during 2020
breadth.
where
Advanced
valuations
decline.
weren't that good, where the rate environment changed drastically coming out of that. We think that's going to be a very topical question going into next
Advanced
year.
decline is bullish.
Credit and credit largely is not a riskless proposition. That doesn't mean there won't be losses. We just think that the whole conversation over the last couple of weeks has certainly been lumped together. Is this a question of losses and defaults on the books? Is this a question of liquidity, which is a really relevant question in this market? A lot of people got into these structures thinking they were liquid and they were
Okay,
not.
so that looks good. S&P equal weight index.
So we think that these are really good questions heading into next year. Certainly at the margins,
All right, we still got rejected there.
but a lot of the market is not necessarily tied to that K-shaped economy.
Equal weights following through.
Where you're more weighted to the lower income consumers.
Number of stocks above the 20-day rising.
Consumer credit. If you look at the most recent data, even the PPI today, for example, insurance costs and auto and home still high, and that's something worth looking out for as we look at where we're going to look for credit quality deterioration.
Yeah, I do wonder. I mean, there have been questions, obviously, about underwriting standards. Marks are always a key concern. At the same time, I mean, Apollo did a big presentation yesterday talking about Athene and how matched they are, and rebutting a lot of really all those concerns that have seemingly come in the last, let's call it, couple of months in the private credit markets.
Yeah, as you guys have seen, the default rates have remained historical averages, but relatively low, between 2 and 3.5%.
Equal weight is bullish.
Another thing that's happening.
Okay, so you remove the weight of the top 10 over there on the left. 37% of the weight of the S&P 500. 15 stocks. Okay, you can see that we got very bullish action here. Number of stocks above the 20-day rising. Number of stocks above the 50-day rising.
As far as earnings go, discussion about tariffs and pass-through and whether or not that can protect margins going into 26. What's the general thinking for you guys?
No, the margins have been good. And actually, we think when we look into next year, the trade will really be on margin expansion, on earnings growth. If you look at the last couple of weeks, even, a lot of that story was clouded by the macro. We think that earnings will take center stage once again, and therefore investors can be more selective into a market that we think can still rise. But certainly, you look at the Mag 7 today, of course, you've seen the leaderboard completely flip over this year. And it's worth paying attention to that because we think investors are going to really look at the companies with free cash flow, with margin expansion, with not too much reliance on debt. That's going to
Okay, so that looks good.
Announcements are treated bullishly.
Junk bonds still hanging in there.
to some degree.
S&P rejected yet again.
One data point we're looking at is the Revelio data as far as alternative data sources.
Okay, so we got a doji betting on a direction right now, and you're probably going to get chopped up. So wait for the direction.
You actually saw some strength in private hiring. So are we actually seeing a stabilization of the job market start to come back? We're looking at
Tick
alternative
cumulative is green.
as we are still in a bit of a data vacuum.
Yeah, it's very tough to get the read given the lingering effects of the shutdown. Sonali, thanks. Good to see you. Good to have you in.
See you. It's good to have you here. Yeah, it's good to not be you would be a forget. Yeah, absolutely. Sonali, thank you. Here's our roadmap for the rest of the hour. When we come back, Dick's Sporting Goods Executive Chair at Stack joins us with the stock under pressure despite what was upbeat guidance.
Plus, we'll have more on Alphabet's AI game plan. We're going to talk to an AI expert. He worked on teams at Google and Microsoft. We'll talk about the fast-changing leadership race in that area.
And as holiday travel picks up, we'll talk to the CEO of the newly public airline Aeromexico as Walk on the Street continues in just a moment.
Okay, tick cumulative is rising too. Okay, so we should see some follow through at some point. Right now, we're just we are in a doji in the top part of yesterday's price action. Yesterday was pretty bullish. Puts and calls are gaining and losing value back and forth, back and forth. So rather than trying to bet which direction we're going to go with hedge flows continuing to chop sideways, we're right at 6,700. We need to get above it. I would just sit back and wait. Look at other things like what is actually moving in the markets right now. Okay, IWM just hit the highs, pulled back a bit. Stocks that are advancing, S&P 500, Keysight. Okay, immediately that's that's involved in quantum computing, right? Keysight, I believe they are. Keysight Technologies. Okay, they had earnings. Measurement solutions, communications, electronics. They have exposure to the quantum mechanics, quantum chips being developed. Okay, so you can see their earnings growth 27%, revenue growth 10%. So let's look at Keys, Keys, Keys. Big gap up. Don't chase it. Look for it to base up here somewhere. Bitcoin not doing much. Bitcoin still waiting on the S&P. Bitcoin, sorry. BTC USD. Bitcoin giving back more than half of yesterday's action. Same thing happened on Monday. Gave back more than half of Friday's action. Then buyers stepped up. Looks like we might be turning the corner. Watch for buyers to step up. We need the S&P to continue higher. We've got risk-on signals. Our risk-on signals are bullish. Okay, risk on. Junk bonds rising. Everything I just showed you in the last 5 minutes, supportive of more upside. However, we're just in a choppy condition right now. Need to get above 6,700.
Welcome back. Dick's Sporting Goods shares under pressure this morning despite reporting strong comp store sales, bullish guidance as well ahead of the holidays. The sports retailer recently completing its acquisition of Foot Locker says it's planning to close some of those stores. Dick's Sporting Goods Executive Chair Ed Stack joins us exclusively at Post 9. It's a treat to have you. Welcome, Ed.
Thanks for having me.
I mean, the numbers and the fundamental underlying business seems very strong. Do you agree?
Oh, they are. They're great. The Dick's business has been great for quite a while, and our comps at 5.7% were great. We beat the street's estimates around sales and EPS, and the Dick's business has been great.
I guess the concern centers around Foot Locker and this acquisition and how Foot Locker is performing and how aggressively you need to be cleaning it up.
Right.
So what's the story?
Well, what we're doing is really, I think the street, we're cleaning out the garage. I think it's good to give people a visual. And so the Foot Locker team, we talked about it. We said, we got to go in here. We've only owned it for about 10 weeks right now. We said, we need to go in and we need to clean out the garage. So we got to get rid of all the old inventory.
Okay, the cruise lines are turning.
Impair some underperforming assets. And that's what we're doing. Yeah, stores and then some other assets. And we're really being really aggressive to do this. I think our shareholders want us to do this and get it done one time between the third quarter, fourth quarter, be the vast majority of it's done, and then really get a fresh start in 2026.
Well, what does Foot Locker?
Cruise lines look like they might be turning here. All of them are turning off the low.
We'll definitely turn it around. We are extremely confident in the ability.
All of them are turning off the low. Royal Caribbean
All the vendors that we've talked to are really
looks good.
really supportive of what we're doing with Foot Locker. They want
CCL.
strong, vibrant, growing
CCL really needs to get their act together. They've had some recent news that wasn't good for the company. I got no less than 10 flyers, those little postcard flyers, and it got no less than 10 of those in the last couple of months. So they really screwed up with their low fee, and they keep perpetuating the same deals. They keep sending out really cheap deals that brings in the wrong type of crowd. So if you're going to go on a cruise, you know this if you've ever been on a cruise, Royal Caribbean is the place to go. Royal Caribbean. looking very strong. Now, last week we started to see signs that the builders were going to start to move. Builders following through. Okay, we got DHI, HOV, LEM,
We are extremely confident. We just started an 11-store test. Now, it's only 11 stores, but in 11-store test, we took all the product out and changed the way we.
Okay, builders are starting to turn. XHB following through. NAIL, nail following through.
You don't walk in, you don't see anything that's really important. We're not really communicating to the consumer what's important, what the hot shoe is. And we've changed that in these 11 stores. And we at Dick's we're pretty good from a merchandising standpoint. We can bring that merchandising.
Okay, nail. Let's see. Toll Brothers. Back above the 50-day. Lennar Homes above the 50-day. LGI Homes, LGIH above the 50-day. All of these are turning. A rounding bottom. Okay, what do I want to buy here? LGI Homes, they do pretty good. Let me just look a couple of these here. LGIH. I want to just see what their okay, earnings growth, not so good. All right, so I want to go to Toll Brothers. They sell bigger homes. Toll Brothers missed. Okay, but they got positive cash flow. Okay, that looks good. Toll Brothers. What about Beazer Homes? BZH. Okay, BZH. Negative. All right, so we'll pass on that one. Lennar builds very large developments, clear cuts, 200 acres, and then they just start building like crazy. TriPoint Homes. Let's look at TriPoint. TPH. TriPoint looks good, but the numbers don't look good. What else? KB Homes. KBH. Okay. So this seems to be a pattern in the short term. They haven't been making any money because they've been in a downtrend for 6 months. 3 months. They've been in a downtrend for 3 months. So the last quarter, they haven't looked that great. Lennar. What's the Merck hire?
What they did with Structure, this running construct has done extremely well at the Dick's site, and where it's been put into Foot Locker store, it's done really well.
Merck.
What about Under Armour?
Lily.
Yeah, I think that we're working with
J&J.
I think with Kevin back right now and what they're doing, I think there's we're seeing some green shoots with Under Armour.
But there's fierce competition. I mean, we covered On running.
Okay, the New York Fangs are off.
They continue to sort of defy, first of all, what's happening in the overall market, but with prices, higher prices. I mean, even tariffs, they're not concerned, and they're taking price.
Yeah, I think this is where when I said that the consumer out there wants products that are new and different and innovative, and if they've got that, the price, I won't say it's not.
S&P not moving much.
Pay for that product that
6,700 is the line in the sand.
How's House of Sport doing? My kids are obsessed with this. You know about this?
I don't.
Giant store. I mean, giant for New York City. It's right over on the Holland Tunnel in New Jersey. That's not even probably one of your bigger ones.
It's not. So that's 87,000 square feet. And the House of Sport stores are somewhere between 120 and 150,000 square feet. A lot of them have a field right next to it. So it's really interactive. So we've got kids who'll come and practice. Right now in the northern stores, we've turned it into a half sheet of ice so that kids are coming to practice hockey there. We've got a community skate. The House of Sport concept has been a home run for us.
Well, are those stores more profitable, or is it about just bringing in consumers young?
No, they're very profitable. So we tested these stores and make sure that they're profitable, and they're a profit machine. They've been really great.
Okay. There, you can do the.
Fear and greed indicator is pegged on the fear side.
You and David could race to the top of the wall.
Sounds great. Yeah, that was
I'll time them.
There goes our Achilles heel.
yeah, maybe 30 years ago.
Thank you, Ed. It's good to have you here.
Great. Thank you for having me.
Ed Stack, Executive Chair at Dix.
Still to come this morning, the future of the AI trade as Alphabet hits record highs, looks to try to become the new king of the hill. Plus, what is hitting Oracle shares again in early trading today? This is now a 5-month low back to 190, trying to defend levels that we saw at the end of last week. Later on, Thanksgiving travel expected to smash some records this year, just weeks after the shutdown strained those air traffic operations across the country. CEO of newly listed Aeromexico will join us with a read on demand.
Fear and greed indicator is pegged at extreme fears. That usually indicates we're going to see upside in the short term over the next 5 trading days. Okay, so we're just waiting for this to move above 6,700 perhaps. Hedge flows continue to chop around, not giving you much to go on. Okay, there's really no trend. 6,700, very noteworthy area. Above that, you got 6740, 6750, and 6755. I'd like to see a test of 6755. For now, we got a doji and no trend.
TSLQ.
If we were to get a Fed announcement of a Fed chair sooner rather than later, that would be something very notable to the markets itself. But if you look at a lot of the a lot of commentary by the executive office towards the Federal Reserve, obviously it has been very negative over the time. And so I think that that's going to be something to continually to watch, see how they navigate through it. I do think that the Fed is in a difficult position because we are seeing some softening in the labor market.
6,700 is a major level. We need to get it back above.
They aren't coming down as much as expected. They were close in line with expectations, a little bit below, but they do show to us that inflation is still elevated. So with inflation elevated, labor market.
So pharma looks good. Builders look good. Cruise lines look good. S&P is just kind of chopping around. MGM on the move. Casinos, Wynn. What about Las Vegas Sands? Elvis. Elvis, a pretty chart here. Nice little 2-week flag, breaking to the upside. Look at the volume in the preceding several weeks. S&P pushing back up. Okay, we're pushing above 6,700. Maybe. 50 days just overhead. We got volatility getting crushed. Let's see what VIX looks like right now. Note Las Vegas Sands. Okay, look at their numbers. All 4 metrics are green. Okay, there goes the S&P. Starting to go now. Okay, now we're starting to go. Hedge flows ripping. Okay, hedge flows looking good. Okay, looking for a follow through. If you took IWM with Mondo, that's looking really good. Okay, all of these looking good. A lot of travel related names are working. Royal Caribbean, the cruise lines, the casinos. Now let's see what the S&P looks like. The Dow Jones, rather. Dow Jones, Merck, up 3.5%. Another follow through. Nike, looking good. Signing Seth Curry recently. Who else are they going to sign? Home Depot, Walmart. Walmart turning back. Everything is starting to work now, folks. Starting to work. Disney, coming off the low. Disney got to adjust that. Oh, you know what? I took Disney off yesterday for a loss on the put side.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE right now.
Okay, watching hedge flows. Want to see these start to trend, not just chop around. Okay, let's see who's doing what. Lennar, okay, showing up on the most actives. Okay, so that's going to they're selling puts on Lennar. Lennar 750s. Lennar 750s. 150s. That's interesting. S&P moving.
You know, as far as some of the commentary around just, I mean, the fact that it's closing in on this 40 mark, which is significant. What stands out to you today?
50-day.
The nail on the head there, Sammy. Good morning to you. The $4 trillion market is the biggest conversation here. We're just shy of it. Right now at almost 3.96 trillion. Shares would have to rise 5% today to hit that $4 trillion mark. We're up about 3% right now. And like you said, we've seen these impressive moves from Alphabet over the past couple days, last month, 6 months, up more than 12% just in the last 5 days. We're up more than 25% in the past month.
50-day. All right, so we want to see this follow through continue.
Monday, they announced their deal with NATO. Not a huge number deal. They called it a multi-million-dollar cloud deal to help NATO with its digital modernization project, but very important to the company as it is a multi-year deal. And anytime you're dealing
Hedge flows, need to see those pop above price and start to lead. We got a target up here at 67.50.
That's another boost that they've gotten. But I would say the biggest one that's really giving a boost to Alphabet today, and also a lot of what's pulling NVIDIA down, which is down close to 6% right now, is this report from The Information that Google is pitching Meta.
Okay, hedge flows turning back down.
This data center starting in 2027. That deal would be worth billions of dollars to Google Alphabet. Now, they have previously rented their GPUs to other cloud customers, but pitching Meta and these other large financial institutions is a big pivot for them. Their GPUs have been around for about 8 years now, but they've just recently begun designing them to handle these AI tasks with efficiency.
IWM still pushing here. IWM.
setting them up to be a massive competitor to NVIDIA. You know, they are the leading supplier of AI chips right now. So if Google enters the space in a meaningful way, it could mean some trouble in terms of the market share that NVIDIA has. And also, I saw a metric this morning from Bloomberg analysts trying to estimate about how much CapEx spend there would be from Meta in this space.
Still don't have a good trend yet in hedge flows. Hedge flows still chopping around. This needs to start trending. Not trending yet. 7,500, excuse me, 6,700 is a major level. We need to stay above that. Hopefully get some more positive gamma to build. Looking at 0 day, you can see a lot of people are short 6,700. Dealers long. Okay, looking for a follow through.
With regards to this story, I mean, no doubt everyone is frantically trying to get up to speed with what a TPU is, a GPU this morning. But you know, you've also had NVIDIA that's been facing some of these capacity constraints. I mean, this is not a demand issue for NVIDIA. It's been saying that it's sold out. So maybe there is some more love to kind of share around here. But it's interesting also the Wall Street Journal putting it as someone forgot to tell Google about the whole AI bubble thing. So I thought that was quite interesting as well. It's up in what is otherwise a real concern right now about some of these valuations. But thank you so much, Marley, for getting us across some of those key stories, which is driving
Hedge flows turning up.
continuing to do so to these all-time highs this morning. Let's trade it now with Mike Shaw, Director of Trading Education from the Trading Academy. How are you approaching your example trade for?
Hedge flows turning up now. Boo. Google's going higher. Okay, as long as we stay above 6,700, this is somewhat more bullish. We need to get above the 50-day now. 50-day. Merck still pushing. All right, those Merck 100 calls yesterday was a good idea. It sold the 95s that I had for December, and I bought the 100s. I rolled some more into the 100s. I bought some 100s on Friday, added to it on Monday. Merck continues to thrust higher, looking good. Let's look at the 60-minute. 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 Merck is full on bullish above the 20 EMA. 20 EMA is rising, looking very strong. Tick cumulative is green. Breadth is bullish. Okay, let's check on bullish on breadth again. Advanced decline percent for the S&P 500 in the top panel. Mid caps, small caps, and Nasdaq in descending order. These all four look good. Let's see. Still bullish. S&P equal weight index. Let's double check on that. S&P equal weight. All right, back to the 50-day S&P equal weight. Removing the weight of these 15 stocks on the left, 37% of the weight on the index. Equal weight, everything's equal, as the name implies. We got the number of stocks with the 20-day charging higher off of that reversal. I told you I like these reversals. Whenever you get these reversals is when you want to start thinking about taking some risk on. Okay. Number of stocks above the 50-day also looks good. Okay, Nvidia is starting to turn the corner. S&P still looking good. Need to get above that 50-day. Okay, we're still sitting here at the highs on futures. Oh, please, these people talking. Watching hedge flows. Riot turning off the low. Let's see, what's IREN doing? What's IREN doing there, Armando? IREN still off a bit. Okay, S&P trying to push a little bit more. Watch your hedge flows. Watch the hedge flows here. Hedge flows zipping higher. S&P working, pushing through the 50-day.
there's an interesting point. Also, you've got AMD down almost 8% in trade today as well. May have been some sympathy here, but yeah, some big moves in some of these chip-related names. Alex Coffey, thank you so much for getting us across some of those key themes in the market today. Let's widen our scope now and take a look at global markets, because Asian and European markets mostly tracking the gains we saw on Wall Street yesterday. Tech companies rallying after Alphabet did help power the Nasdaq higher. Japan's Tokyo Electron, with supplying chipmaking equipment to foundries like TSMC that make NVIDIA chips, jumping over 3%, Samsung surging over 2.5%. Alibaba shares, the big focus this morning after a beat on quarterly revenue. The company raking in $34.8 billion, a 5% jump on last year, thanks to a strong performance in its cloud business, which grew 34%, better than the 26% growth we saw last quarter. Baba's cloud segment has been a big focus for investors, as the company has been making huge investments in artificial intelligence. It recently announced its plans to increase that spending on top of the $53 billion over 3 years it had initially pledged. At the same time, the company has been spending big on its core e-commerce business to compete in the fast delivery space. That's been weighing on overall profitability, which fell over 50%, but it seems to be paying off because more people are using its shopping apps like Taobao. E-commerce revenue grew 16%. Quick commerce rose 60% year on year. Investors also appear to be willing to look past the profit hit because of the strides that it is making in AI. Its latest Quena was downloaded more than 10 million times in the first week. Now, Alibaba shares were higher, but are in reverse right now, down around 1.5% in the session, have been dragged down by some of the weakness we're seeing in some of these key tech names. Coming up, it's time for Inside Out. We'll take a closer look at Dell ahead of earnings and bring you an example trade on that name when we trade live returns.
Okay, S&P doing well. Okay, Apple doing well.
Whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, all so you can invest your way.
Okay, vol crush continues. Okay, puts are losing value rapidly. Prices moving higher. Puts losing value. VIX is dropping. Vol's crushing.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly lead to near-term capitalism. Next in investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including approach, value, income, and more. Best of all, you can ask questions by chatting directly.
Okay, futures pulling back a bit.
It's interactive learning at its finest. Tune in live or on demand.
Okay, looking like we're going to step higher, higher highs, higher lows on hedge flows. Hedge flows look like they'll keep stepping higher the way they're working right now. Okay, S&P. All right, pulling back a bit now.
Data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live.
Apple
Free at Schwab Network.
at the highs. Apple looking good. Pulling back from the highs now. 3 white soldiers on the daily. Okay, Bitcoin. All right, so buyers are starting to step up at the low of the day. You can see price action on the left is moving higher. And on the right, you can see buyers at the low. Friday also had the same kind of thing on, Sunday. This is Sunday. I keep thinking weekend. Bitcoin moving higher on Sunday off the low. Monday, we dipped into it, bounced. Buyers stepped up at the low of the day. That's what we're looking for in a push higher on Bitcoin by the end of the day. Futures, still pretty choppy. Futures.
Such an interesting point. I think it's all going to be about that margin resilience.
The pharmaceutical stocks continue to show a lot of strength. Merck,
I think it's going to be the commentary that we're going to have to focus on because the belief is that Dell has had a large amount of inventory on the memory chips, but now that's going to become more of a problem as they've had this increasing demand for their AI servers. And so that's where I think the problem
J&J,
this is going to be. And it's all what caught my
Lilly, all of these doing very well.
the company is
The banks, Goldman Sachs,
to get that operating margin
above the 50-day. Morgan Stanley.
by the end of the fiscal year, which
Let's see. Industrials, Caterpillar,
last quarter the margin was 7.
3M.
That's a pretty big goal.
Okay, those looking good.
Right, it certainly is.
Danaher,
Through the estimates as far as that.
Danaher breaking out.
EPS of $2.48 on revenue to $27.2 billion. Interesting. I just did see a note out from Bank of America actually lowering the price target into earnings ahead of results, though expecting the report to be in line with those numbers, but also talking about how they'll likely price and reduce OPEX to offset the memory increases. Do you believe that we could see some of that?
I think that is possible, and it's interesting. It's especially with this particular sector. Analysts typically don't like to make a call like this before the earnings estimate, so that tells me there's some real concern here that they don't want to be blindsided for their clients.
Yeah, no doubt about it. I mean, just if we look at the earnings season that has been, I mean, Nvidia some fairly strong numbers, although we did see a sell-off post-earnings, certainly on some of the AI valuation concerns. Do you think some of the underlying worries in the market about this whole sort of broader bubble talk and, what we're seeing as far as the circularity of financing is likely to hit a name like this post-earnings?
It's all part of that.
Okay, Apple hanging out at the highs. Meta looking pretty decent. You can also buy 2 times Meta in the FBL, 2 times Meta long. Okay, I bought some of these shares pre-market. That continues to look good. I'll add to this as we start to rise over the next few weeks. What's Microsoft look like? Microsoft. Okay. Microsoft at the 200-day, look for a turn.
Okay, I'm just looking at you've got a price target of $165.
Oracle, huge volume coming in here.
You do suggest that there could be further upside from here, but
Oracle.
Michelle, thank you so much for giving us a preview of Dell ahead of its report card. Michelle Connell, CFA President, owner, Portia Capital Management. Appreciate it. Let's trade it now with Tom White, host of Fast Market, an example trader for us this morning for Dell, Tom.
Yeah, it's neutral to bullish here, Sam. Taking advantage of some higher implied volatility.
5-minute chart. We got huge volume coming in here on Oracle. Just notice this popped up. Alert just popped up. We're building a hammer.
You could still be profitable on this four-legged spread. So let's break it down. November 28th, weekly options that expire in just 3 days. We're going to sell an out-of-the-money put vertical.
The top 10 on the NASDAQ 100, GE Healthcare, Lulu, Biogen, Analog Devices, ADI, Airbnb. Let's take a look at Airbnb. I haven't looked at that in a couple of days. Airbnb. Airbnb reversal. Biogen. We've been noting the biotechs for the last few weeks. XBI, IBB.
This four-legged spread, you're actually going to collect a credit of 40 cents. You can see here from the risk profile, you want this to go up near that 133 strike. That's about that one standard deviation move that the option market's pricing in.
Biotech's leading. XBI, IBB, these looking very strong. REGN, INCY, INCY. Let's see. What was the IDEX, IDXX, IDEX.
strike on this one. So trying to play for that one standard deviation move to the upside. You're selling that out of the money put vertical to take advantage of that higher implied volatility levels.
IDEX continuation.
Offsetting all the costs on the bullish call calendar in this.
That's gone. The weekly is gone here. IBB, XBI. Yikes. It's hard to bet against these. They just keep going. Keep moving your stop up. Okay, hedge flows quickly reversing. Feels like chop is going to continue today.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
Okay, let's look at some of these credit spreads. We're going to probably do something on Dell, HPQ, HPQ, HP Inc. All right, that's coming off the low. Dell, that was also at the low recently. Dell, 200-day.
Head over to schwab.com/coaching and start learning today.
Okay, so earnings tonight. Workday, let's see what Workday looks like. Workday. Yeah, Workday looks better. What I'm trying to get is something that's inside the middle of the Bollinger Bands. Okay, not at the low. You see HPQ. That's starting to move back up towards the 50-day. Maybe something on HPQ. I'm talking Iron Condor. Workday. Let me see what we got on Workday. Workday with earnings tonight. Workday. Workday. Selling Iron Condor on Workday for Friday. We've got enough time if we need to adjust it, roll it out, do whatever. Sell Iron Condor. I've been selling 15s lately just to be a little bit more safe. 15 on this would be 250, 250. A 20 would be 250 on the upside. Let me mark this up. Okay, Iron Condor, 250 is the upside. To short, with short 250, that is a 20 delta. 250, 250, a little bit higher. That's a 16 delta. I'm going to do 250, 250. 250, 250. 250, 250. And go 5 wide, 250, 250. 250, 750. And on the downside, 10%, $22, 23. Let's go $25, 25. Okay. All right, so let's put this down here. 208. Let's just do 205. 205 is a nice round number. Put 205. 200. Okay, that's $132 credit. I'll do 10 of those. Let's see. 252. Okay, this is 16 delta. 252, 15, 16.
Then for our 360 round, Alibaba posted strong earnings, but shares are slightly lower so far on the session. We'll break down the report and its AI future after revealing that its ChatGPT rival surpassed 10 million downloads in just its first week. Before we get to that and more, though, let's see how the markets are faring so far today. Bit of a mixed picture here. The S&P just up about 0.1% at 6711 right now. The Nasdaq trading about 0.5% lower, drawn down by some of this tech sell-off, 24,744. The Dow trading about 0.7 higher, 46,764.15 right now. And the Russell 2000, our winner on the day, up 1% and a third at 2445.99.
All right.
10-year down significantly.
250, 250 is a 16 delta. The 205 put, 205 put. Let's just try to 205 put is a 205 put is a 205 put workday. Let me see. 205 is an 8 delta. Probably too far. 210. Let's do 210. 210 put. 210. 210. 210. 210.
It should be said that this is a quarter of progress, and
205 put.
Jay Bender, newly appointed CEO, I thought said it best in one of the quotes from the press release. We're pleased with Kohl's third quarter results. It marks the third consecutive quarter of delivering performance ahead of our expectations. These results are a direct reflection of the progress we are marking against our 2025 initiatives. And when you look at this is a company that is trying to recover and find its way. They feel they're moving in the right direction. Now, some of those numbers that you mentioned, EPS swung to a adjusted profit, 10 cents. So it was expected to be a loss. That's a materially better than expected number. When you look at net sales, $3.41 billion, well ahead of the $3.33 that was expected, but it's still a decline year over year. So it's nuanced in the sense that this is not a company that's thriving, but it's ahead of schedule in its recovery, and it's giving confidence that they're on the right path.
210. 210 is a. Bear with me one second. S&P is just sitting here chopping around anyway. 210 is a 13 delta. 210 is a 13 delta.
It certainly was. We've seen a lot of these turnaround stories and what people are looking for. And I wonder how much of this move, this massive move, it was 32 right before the show started. We've up 3% more than that just in a couple minutes since we opened the show. How much of this is driven by either their commentary or just the recent reports we've seen from like TJ Maxx and Walmart saying that people are continuing to hunt for bargains, and it's not just low-income shoppers that are doing that. We are seeing people in the upper tax brackets also shopping at stores like Kohl's and TJX looking for those deals because the costs are hitting everyone.
I think it's a combination of both. The reason I say that is the other companies doing well gives an underscoring to Kohl's turnaround, where it was more kind of why is Kohl's struggling? Now it's like, okay, there's a path to success because these other companies are doing it. You look at the city.
All right, let me try this again. Sell. Iron Condor. 250, 250. 250, 250.
Perhaps you feel even with this jump and perhaps driving this jump, you see a company now that has a chance to become the next TJX down the line, maybe a couple of years from now.
Yeah, certainly. And in this turnaround story, they did decide to make Michael Bender the permanent CEO after firing their previous one after just a few months because of this turnaround. Alex, thank you for breaking that story down. Alex Coffey, host of Next Gen Investing here on the network. I do want to welcome in our next guest, Jed Ellerbrook, of course, joining us this morning from Argent Capital Management. Jed, thanks for taking the time, a big day. I'm looking at the board. The Nasdaq
210 put.
right now. We've got a lot of these major tech headlines to talk about. But the first one I'd love to get your thoughts on is
205 put. Okay.
story with the TPUs and how potentially big this could be if this deal comes to fruition.
Yeah, hey, good morning and happy Thanksgiving, everyone. Yeah, I think it's good news for Meta. Access to more
What?
AI
No.
accelerator chips is a good thing.
I want to do 10 of these. That's why.
GPU internal ASIC program that they're developing with Broadcom, but it's nowhere near as well developed as Google's. So buying Google's chips will be cheaper than NVIDIA's. The performance will be quite as good, but the cost difference will more than make up for that. So good news for Meta. We see NVIDIA down and AMD down today. I do think this is worse news for AMD than it is for NVIDIA. AMD has that second position, and I think that is the most threatened by this Google Meta deal. We also see Microsoft down today. Anything that's bad news for for OpenAI is considered bad news for Microsoft here in most recent weeks, and anything that's good for Google is bad for OpenAI. So I think this highlights Google's really incredible strength across the entire AI technology stack. So yeah, lots of implications from today's announcement. It was a thin announcement, though. There's a lot of unanswered questions. The biggest questions unanswered, in my opinion, are what kind of gross margin is Google going to earn on these sales? And then second, how much capacity does Google have to sell of these GPUs? We know TSMC remains highly constrained.
Yeah, and you bring up a really good point that they're all sort of tied into Taiwan Semi, and without that integral linchpin functioning at peak operation, you could potentially bring down the entire trade in terms of their production numbers. But you mentioned that this is a bigger deal for AMD than NVIDIA, so you don't see this as a potential massive market erosion for NVIDIA. You really think the bigger issue here is for the number two player, that right now Google is not positioned to potentially take on NVIDIA, but only jockey for the second spot.
Yeah, that's right. I think just a little bit of context. Google tripled their purchase of NVIDIA chips this year, 2025, compared to 2024 for their GCP cloud computing unit. So Google knows NVIDIA's chips are better on a performance, per cost basis than their own TPUs.
All right.
TPUs are very valuable, especially for inferencing. So, yeah, I think that this announcement threatens AMD more than it threatens NVIDIA. I think it's a small negative for NVIDIA. Another competitor, of course, is never good news, but I think it's a fairly small negative for NVIDIA. It's a bigger negative for AMD.
All right, and so you also mentioned Microsoft there and its tie-in with OpenAI. And I've seen some research coming across this week since Google released Gemini 3, saying that in certain tests it's outperforming ChatGPT 5. Also Microsoft.
Okay, I'm trying to sell these here for $162 to $165 per contract.
I think that we live in a world where the models are going to be maybe not interchangeable, but there will be several excellent models for all use cases. And so OpenAI has a very strong position in the consumer market. Most of these are not paying, but OpenAI
See if I can get a fill.
monetize those over the next couple of years, whether it be subscriptions.
That one's going to be a little bit more difficult. These spreads are huge. Bitcoin still pushing a bit higher. Okay, what else can we look at here? Workday, Zscaler would be a decent one too, possibly. Zscaler. That's okay, Zscaler. What do the options spreads look like on Zscaler? Zscaler.
made Alphabet since it's the best performer now in the Mag 7, is this now the new must-own stock, or have we gotten a little bit ahead of the fundamentals here on some of these recent headlines?
I don't think that the strength in Google stock
Okay, S&P is still chopping around, not giving us much to go on here. S&P.
stock market, perhaps not up there with Nvidia, but approaching and not far behind. Google has so many competitive strengths as it relates.
50-day looks okay. All right, we don't need this note anymore. Well, you know what? I'll leave it on here. I'll leave it on here.
They have unmatched distribution in the consumer market with all the things that us consumers are using every day. YouTube, Gmail,
50-day, still encountering resistance at the 50-day.
they have a strong position in the business market with GCP and their cloud computing unit, all the productivity apps that they built. So really incredible strength from Google. I think it was massively underestimated or underappreciated by the market 6 months or a year ago. And I think that was due to the regulatory, court cases, the anti-monopoly lawsuits. And once those were resolved in, I believe it was August of this year, it's just been off to the races. And I think that their strength, the company's capabilities, like I said, across the full stack, are now witnessed.
What's IWM look like? IWM. Okay, IWM still pushing.
Dan, I saw in the notes that you sent over before our talk that you said that you also feel that Amazon now is underappreciated, sort of putting itself into that camp that Google was in before they fixed all of their potential legal issues. What specifically do you think the market is missing about Amazon, and should it be a bigger part of this AI cloud positioning conversation? I mean, I'm looking at the chart year to date; they're only up 4%.
Yeah, that's right. Yeah, so 6 months ago, I just said I thought Alphabet was the most underappreciated AI winner in the market. I think now that role is held by Amazon. So many of the things I listed as strengths for Google also apply to Amazon. Amazon has their own, pretty well-developed in-use internal chip program, balancing their dependence on NVIDIA chips. They have the leading cloud computing unit for businesses and government in the world. Their retail business is performing exceptionally well. It's the fastest growing large retailer in the world. Costco and Walmart are trailing there, doing well, but trailing Amazon's revenue growth. And then, of course, big profit improvements in retail due to all of the
S&P, no follow through. Hedge flows, just sitting here.
I think Amazon is a big AI winner. I think the appreciates it. I think the valuation is attractive. And as you said, the stock has been an underperformer this year in a strong
Hedge flows just chopping back and forth. You have no trend like yesterday. So you're not going to have the same trade. The setup isn't there. We're sitting right below the 50-day moving average. We moved back up to the 50-day moving average yesterday and stopped. Significant in that we're doing it again today, hovering right below the 50-day moving average. So if we pop above the 50-day, perhaps we can have a follow-through in Wednesday. Thursday, we're off, and then Friday, shortened day, I think. Or is it Wednesday? We're off on Thursday, so short week. Puts are starting to see a bid. Puts on the S&P. Okay, so those aren't working. I'm looking at iron condors, but not getting a fill on workday. The spreads are really wide. They're almost $1 wide on some of these options. So unless somebody gets desperate, it can be kind of hard. Both wings, 4 different strikes. I doubt I get filled. I'm trying to get filled at around $1.55 per contract. Not a whole lot of open interest. Let me see what CLSK looks like. CLSK. IWM looking okay at the high of the day. CLSK. CLSK. It's only $11, but it's sitting on the 200-day. I don't know. I don't like this one. Dell probably gets some movement. So I can position above and below the 200-day maybe. All right, let me take a look at Dell. Dell's probably a little bit easier, a lot more open interest. Dell. Sell an iron condor for this Friday. So we'll have a Thursday off as well. Okay, so let me sell an iron condor on Dell. Let's see. So Dell, 15 delta is 139, 20 delta is 136. 140 is a 14 delta. Okay, let's start with the 140 and see what that looks like. 140 call, sell a 140 call, buy a 145. 5 strikes wide. 140, 145. You might want to price these out yourself while I'm talking about it. 140, 145 on the upside. On Dell for earnings, 140 is just below the 50-day. Possible we could get back up there, so it's a little bit more risky. 145 for protection, the wing for protection. And they're looking at 7%. Dell 7%. So if we use 10%, Dell 10%, be $12. So 110 on the downside. 110 is priced out at what? The 110 put priced out as a 9 delta. Wow. Okay, let's see. That's not even going to get us much. 110. $115. The only thing about Dell that bothers me is that there seems to be some concern about AI, and these could get affected. All right, so you get $122 in contract in premium. 115. 115 is pretty close. I don't like that. 115. 115. 110 is 50 cents. Not even worth it. Dell's not even worth it. Dell, I can't get what I'm looking for. So I'll pass on Dell. HPQ we talked about. It looks a little better. Let me see what HPQ can do. HPQ. I'll save that. I'll sell that. Save that Dell position. HPQ. Let's see. Call side. 27. 27. That would be above the 200-day. So sell. 10% would be 2.5. Yeah, that works. We did this with what was it? Zoom. 27. Let's go 3 wide. 27.30. And then on the downside, let's go 20. 20 put. 20 put. Nothing. There's no money in this. You have to go out a week maybe. 20. Go out to 5 December. 20. Yeah, it's not even worth it. Not even worth it. Okay, there goes the S&P. S&P on the move. Okay. S&P on the move. Here we go. Back above the 50-day, almost taking out the high of the day. That's the high of the day right there. That's the high of the day for now, right? That's the high of the day. Let's see what hedge flows look like. Hedge flows turning back up, 11 o'clock. Sometimes we'll get a hedge flow change in direction after 11. What was it, like 2 weeks ago, Monday? No, Tuesday. 2 weeks ago, Tuesday, we had a turn. Or was it last week, Tuesday? Last week, Tuesday, we had a turn at around 12 o'clock, and the markets trended thereafter. All right, so here we are, 11:10. S&P continues to rally. We look very strong here.
So when we're looking at TPUs versus GPUs and the competition that's heating up with NVIDIA, it is competitive in terms of hardware, not software. NVIDIA is more than just GPUs, and they've created a moat with the software aspect. So we're talking about CUDA and other aspects that NVIDIA offers. So we have these GPUs, yes, that's the hardware. GPUs are more generally started as a graphics card, now they've been utilized as AI, whereas TPUs are a little more focused on AI, hence why the enhancement. But if that makes me really go back to what happened with DeepSeek when we had a sell-off on NVIDIA, when in all reality there's a huge TAM for all of artificial intelligence and a lot of room.
All right, the 6750s are almost up 100% now. If you took those lottos earlier, around $1, $1.25, it's 100%. Still battling with the 50-day moving average. People still trying to short this.
Here between about 165 and 185. Then after some fluctuations, we had our highs here near 212. And another thing too that you could consider is it looks like a head and shoulders type setup was developing here. You can see our shoulders.
Hold on one second. Cold call asking me if I want to sell my house from Nevada.
point, and that would also mark the point where we start to move out of this big volume node here. So that's the heavy volume area. That's where the bulls would want to clear in order to resume some kind of uptrend here. Really very little in terms of heavy trading activity. It's all the way down here near 155 with our moving average R250 2-day EMA.
Yeah, and Nvidia right now trading at 173.98, down a little bit more than 4.5% today. Now, Jessica, your last pick, another big AI tech name here, but Oracle has been punished this last month, trading down more than 30%. Lots of people we've spoken to argue it's not fair, its treatment over the last month. Can you walk us through your pick here on Oracle, and are we bearish or bullish here?
I'm still bullish on Oracle, and it's definitely been punished because of this AI narrative of repeat capital and the leverage that's going into the AI trade. If we look purely from a number basis and the mega cap securities.
Okay, 60 minutes on a buy signal, 5, 15, 30, 60 minutes on a buy signal. We got tick cumulative rising. We got all of our bullish indicator, all of our risk on indicators bullish. Okay, junk bonds. Junk bonds looking very strong. Junk. Okay, so junk looks good. Let's look at the New York Stock Exchange, 2,000 stocks, broad measure of market participation. Let's see what we can glean here. We've got the McClellan volume oscillator turning from the lows near the green zone. That's telling you should be buying when that turns from the green zone. That you should be buying. New York Stock Exchange high low back above the zero line. Day 2. Advanced decline moving back up, and we have green elder sticks. Everything's bullish. Palantir turning up. Palantir. Palantir dip buyers. Okay, looking for the S&P to turn back up. High of the day, 50-day. We're dealing with the 50-day. I'm looking for this to just scoot higher. Look for the shorts to cover. Apple just off the highs. Nvidia, nice turn on Nvidia. All right, dip buyers, Nvidia dip buyers continue. You want to throw away? You want to throw away your shares? I'll buy them. Okay. New York Fang's looking better. Short's starting to cover on some of these that dip more, like Netflix and Tesla. Broadcom, those are starting to turn. Google off the highs. Google got a little over its skis just for the week. I think it's going to be much higher, but that's just me. Looks good. Of the four companies that are reporting, nothing really worth trading. Iron Condors. I would love to take something, but I'm not going to take extra risk just to make a few dollars. If I get filled on Workday, that'd be great. I'm looking at $150 in credits.
Kick off the morning with the data and the decisions moving markets. Morning trade live breaks down the macro moves.
Okay, let me go back to that. Workday. Workday.
Fast and always live from Wall Street to your screen. Morning trade live where the markets meet the macro weekdays at 10 a.m. Eastern on Schwabnet. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Kimberly Clark's acquisition of Kenvue that was announced earlier this month and what kind of impact it could have on the consumer. Joining us now is David Clement, North American Affairs Manager, Consumer Choice Center. David, thank you so much for being with us. I'd love to just start with your general thoughts on the potential implications of this merger.
Yeah, I think it's overall a big positive for a couple of reasons. The first is that it strengthens supply chains in U.S. manufacturing. So we're in a time politically where the Trump administration may upend supply chains at any given moment. With tariff policy, well, the merger of these two companies helps solidify American manufacturing to ensure that American consumers have continued access to these household brands that they've come to love. It's also potentially a cost-saving initiative on some of these products because as the companies come together and merge, we're seeing effectively synergy.
Okay, Workday.
According to
Having a good day.
some of the projections, see about $2 billion.
All right, Microsoft and Nvidia turning very sharply, looking good. Amazon at the high of the day. Apple just off the highs. S&P is trying to go. Okay, a close above the 50-day would be great. We got a hanging man candle. Some people would call it a hammer. It's actually a hanging man when it's inside a price action. 59% probability of a follow through in the direction of the current trend. The current trend is up the past two trading days, looking for S&P to continue higher into year end. As we get vol crush, puts are becoming less expensive. As they sell those puts, the dealer can close their positions. You get this tailwind effect and a grind higher. I do have an IW. I don't know if I posted it. I took an IWM. Took an IWM call fly. I believe I've got filled, right? So busy here. Yeah, IWM.
And this would position the company significantly better to respond to those week-by-week disruptions because it would just have so much more power in terms of its ability to solidify its U.S. manufacturing base. And so, yes, I certainly understand that when people hear synergies, they think cost cutting, but I would actually more look forward in the forecast here in the sense that this creates a more resilient entity that can respond to those fluctuations that are have become very much part of the course for the first part of the Trump administration.
And as far as antitrust hurdles, because they both compete in consumer house and household goods, do you see any potential major hurdles here that could stop this merger from going through?
Well, the FTC and the regulators for too long had this idea, this negative idea, that big is bad. And they really, for the most part, disregarded
consumer welfare. And so at the core of any regulatory decision on this would have to be, are consumers better off by these companies merging and combining
S&P.
dozens of brands that Americans love and creating a more resilient manufacturing base for those in the United States? I think the answer is obviously yes. We haven't seen much out of the regulators right now, and I would hope that remains the case, because this is one of those instances.
Okay.
I do believe that American consumers are better off.
Merck. Okay, the pharma stocks looking good. Merck, Lilly. Wow, these are just going ballistic. Okay. So I might take half of these Merck calls off and look for any pullback in the short term. Merck contemplating. It tends to move higher and then fade towards the end of the day. So we'll look for a little bit more upside in Merck. I got the 100 call. Walmart, I have the 100 call as well. Walmart. Let's see what Walmart looks like. Walmart pushing back up. After earnings, we had the next day into yesterday pulling back after earnings last week. Friday, we pulled back into Monday. Now we're starting to bounce, looking for Walmart to continue higher. I have January 100 calls. I'll hold on to Walmart for now. Looking for a rally into year end. Merck. These don't show any signs. Lilly, Merck, Johnson & Johnson. They don't show any signs of pulling back. Don't forget the casinos as well. Real estate, the builders look good. In particular, Lennar. Lennar looks really good. The cruise lines look good. S&P, looking for that breakout. Looking for the breakout, S&P. Okay, looks like we're going to start going here. Watch the S&P. Let's see what the hedge flows. Hedge flows are still chopping around. Next level overhead is 67.55. 67.40, 67.55. You can see those levels. Okay, hedge flows pointing up. All right, S&P breaking higher. Futures taking out the high of the day. Okay, we'll continue to grind here. Trying to take out the high of the day now. You're kind of behind. About 2 hours. We're past 2 hours. You guys need to get on the program here. Vinny, you're so bitchy. Yeah, I know. These talking heads, I mean, a lot of times they're just like talking bullshit. You know, excuse my French, but they're just like pulling stuff out of their caboose. Sometimes I hear them say stuff and I'm like, that's not true. That's not the case. You know, I'm looking at options. This has nothing to do with what you're talking about. Whatever. Mostly noise, the news. The only reason I listen is because every once in a while they say something that you need to pay attention to. Like right now, Michael Saylor's talking. He looks very sad.
Our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protection to protect it. You want low volatility. You should buy a credit instrument. Like XTRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. You'll outperform the money market. You might very well do.
Okay, we could get a short squeeze here.
You'll be able to buy it and sell it and get your capital back, in a month, in a quarter, in a year, and you don't have to, worry about the roller coaster.
2025 is already almost in the tank here. You got to think about December trading.
Yeah, I agree with you, Mondo.
Towards the end of the year, just in time for the Santa Claus rally, with a few exceptions. And on today's Stocks in Translation, we break down how stocks tend to trade in the last month of the year to help get your portfolio ready for 2026. First, let's take a look at how the S&P 500 index tends to perform in each month of the year. So there you go, 12 months, 12 bars there. The only down month here, and this is going back to 1990, tends to be September. And I'm using the median, which is kind of like the average, going all the way back to 1990. Now here's December, and you can see it's a little bit less in November, which happens to be the best month of the year. That's what we're wrapping right now. And it's kind of in the middle of the path, but nevertheless, it is positive, or it tends to be positive about 80% of the time. So
Okay, futures continue to rally here. Futures, S&P continues. Hedge flows turning up. Nice dip here. All right, so what we had yesterday was an early dip and rip. That's what it looks like right now.
What you need to focus on here is the month of December. Here's where we are. As we enter December, this just gently drifts up into the end of the year. But I actually have a different model that I found to be very accurate, not only this year, but the last one. And this is based on the median since 1928. So that's going back a really long time, but it actually doesn't include most years. It only includes the years where we match up perfectly with the day of the week. And so what this is saying is we tend to get a nice rally into the end of November, which is kind of what we're having right now. And then we take a little bit of a dip into the middle of the month, and then we accelerate into new highs into year end. I would separately add that by the work of Almanac Trader, that's Jeff Hirsch, he's a friend of Stocks in Translation. He has also said that when markets are big the way they are now coming into December, we tend to see consolidation for the first half of the month. So we might expect a little bit of sideways, but again, anything can happen because what we call seasonality, those tendencies based on history, well, that only accounts for about 1/3 of price action. Reality, what the catalysts are and what we face on a day-to-day basis, that's at least 2/3. Now, I want to cover another market that's related to all this. This is the VIX Volatility Index. And a quick refresher here, the VIX goes up when stocks go down, for the most part. That's just kind of a loose interpretation there. But the green line is what has happened this year. And again, I'll point out this big post-Liberation Day spike. I haven't seen anything like that in quite some time. And then we had a couple of volatile.
Okay, rejection.
And then I believe just a few weeks ago. And those were pretty muted. Nevertheless, the white line is the average from 1990. And you can see that after peaking in October, it just kind of gently.
All right, so casinos, cruise lines, pharmaceuticals, home builders, all of those looking really good. Merck up 4%.
December trading. First of all, we have markets. Well, they tend to go
Nike. What's Nokia doing? Nokia with a bounce. Nokia starting to base here right at the 50-day moving average. Okay. McDonald's, UNH. UNH turning back up. Disney, I closed this yesterday for a loss. Disney, I had the put credits. Call side worked, put side, not so much. Rather than rolling it down, I just took it off. Everything else is working, so why be annoyed by something that hardly ever does what you think it's going to do? Disney, a waste of capital waiting for that to do something. Keysight, gap up. Builder's First Source. Okay, Builder's First Source.
Stay tuned for more Market Catalyst up next.
Hey, Perry. Muscard. Why don't you get Simply Safe like us? Muscard House.
Simply Safe has proactive monitoring. An AI outdoor camera alerts 5 Simply Safe agents of a crime before it starts, not after.
Stop. This is Simply Safe. Police are on their way. Who can compete with that? Pretty cool, huh? Simply Safe. Real security stops crime before it starts. There's no safe like Simply Safe.
You know, there's millions of people without the health insurance they need. You deserve something better and better.
Plans with low out-of-pocket premiums, local doctors, and rewards for healthy choices.
That's why we're America's #1 marketplace health insurance.
Okay, Builder's First Source. I'm going to buy some Builder's First Source. This trend is probably going to continue. Builders constantly going to this company, BLDR. Builders, I'll go out to say June next year. Let's see what they've got here. No volume. May, a little bit of volume in May. The 110 call. 130s. March. A little bit more activity in March. Wow, this has no volume. $115. 50 delta, buy a 50 delta, sell a 37 delta. Let me see what a vertical looks like here. Vertical on Builders. Maybe buy some 110s. 52 delta, 110. What's Lennar look like? Builders First Source. Sorry. Lennar looks good. Lennar above the 50-day and going here. Lennar. What about put credits? What about put credits on these? Lennar, L-E-N, Lennar put credits for December end of year. $115. It's a 17 delta. There's not much volume down here. Shoot. What about XHB? XHB. There's no volume in these builders. XHB. Excuse me, what's Nail? Nail trading 57. I want to just buy some shares of Nail. Looking for a breakout. S&P looking for a breakout. S&P looking for the breakout. Futures pushing higher. 5, 15, 30, 60 are on buy signals. Tick cumulative is getting more bullish, not less. There we go. Breaking out. Breaking out.
We're seeing this year, a record amount of people planning to travel at 54% of our respondents to our survey, which is up 5% from last year. So that's good news. Consumers are valuing time with loved ones over the holiday season. And that's any time between this Thanksgiving holiday break through about mid-January. But the way they're traveling is different this year. They're planning to spend less, as you mentioned earlier. It's 18% down on average with their budget. They're planning to spend more stay, for example, with family and friends at 22% of our respondents, and that is up from 19%. And good news for folks who are a little bit worried about congested, airports. 57% are planning to drive, and that's up from 10% last year.
So I was going to ask you how they're going to save that 18%, but I guess you just gave me a couple of ways. They're going to drive instead of flying. They're going to stay with friends instead of maybe getting a hotel or Airbnb. And obviously this reflects, we keep talking about affordability. And I guess this is a factor of that sentiment. Did you ask people also kind of how they're feeling, what's leading them to make these kinds of decisions?
Sure. Well, we've been tracking an overall consumer trend since last spring around value seeking. Consumers looking to get a bigger bang for their buck in all of their spending. And this holiday season is no different. In fact, 70% of consumers in our broad survey said they're...
All right, we're pushing a bit higher, trying to take out the highs. Was watching Kevin Hart last night, new special out of Miami. It was super funny. Actually watched the whole special. I don't usually do that. Pretty particular about my comedians that I like. Don't like politics. If we talk about other stuff, it's great. This special was really good. S&P continues to move higher. We got cyan bars on TTM. We got momentum clearly bullish. Tick cumulative is green and rising. Breadth is bullish. Junk bond is bullish. All right, we should see a follow through. We're above the 50-day. We're finished fighting with the 50-day. Looks like we might go a bit more now.
Yeah, that was a bit of surprise.
Hedge flows still making higher highs and higher lows, looking good.
To your point, are planning to take less trips this holiday season, so it's on average 1.9 down from 2.5 last year. And they plan to decrease their budgets by 60%. So it sounds like both the lower income households
looking for that break higher. We just took out the high of the day, pushing a bit more. Looking pretty bullish right here.
Yeah. So for those that are planning to spend more, they're willing to take longer trips. They're looking to spend a little bit more once they get to the destination, have a really good time. We're also seeing a little bit of an increase this year in international travel. Luxury lodgings up a bit.
Hedge flows driving higher. Hedge flows.
Better lodging locations up 4%, and upgrading their fare class is up.
Hedge flows higher.
using that to help them make their travel plans? How many of them and kind of what are they using it for?
Yeah, so it's around 25% are using generative AI to plan itineraries, research, travel options, whether it's airfares or hotel and lodging. But certainly finding activities, how to spend time with loved ones, really maximize that time. One thing I'm pretty heartened by in this data is we saw this trend happening prior to the pandemic, and it accelerated a bit after the pandemic, but people still value travel and experiences with loved ones, even when they're feeling financial pressure. We saw about folks spending 10% less on holiday this year, but the bulk of that's about 16% is in buying, goods, where the decline is less in experiences. So for me, that's heartening. Consumers are value seeking, like we said, and there's a lot that travel companies can do to provide higher ROI on consumers' travel spend. Things like reliability, making sure their bags show up on time. Seamless check-in, things like that consumers.
S&P still pushing higher.
That we're seeing in our data.
Can we get some more out of this? 6750 is not too far away.
Not a given, unfortunately. Mike, thank you so much for your perspective, from Deloitte's perspective. Appreciate it.
Thank you, and happy Thanksgiving.
Thanks, you too. That's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. We have more Yahoo Finance.
Come on, S&P, let's go. It's 11:58, almost 12 o'clock here on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 25th. Hedge flows continue to grind higher. We do have resistance overhead at 6750. As long as we stay above 6700, that's a big plus for today. In addition to being above the 50-day moving average, this is a big, big plus for the bulls. Okay. 50-day, the blue line, looking really strong. Looks like we want to follow through. Okay, tick cumulative is very bullish. Yeah, Michael Saylor didn't look very happy in that interview. Stupid commercials.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook.
About to go here.
Guide to the forces shaping stocks, global markets, inflation, rates, and more.
Looks like we're going to push a bit more. Look at your MACD down below. Okay, look at MACD. Okay, we got a MACD cross. Earlier, failed to mention it as the hedge flows continue to rise, but this MACD cross, a good way to tell whether or not the trend could possibly continue. Looks like we're going to pop some more. Taking out some stops overhead.
trading activity is mixed so far today. After a strong push higher to start the week, let's get into it with a check of your scorecard. The S&P 500 is better by a little bit more than 0.4%. Healthcare, consumer discretionary, and consumer staples pacing the gains. You have some weakness in information technology. The Dow has a gain right now of nearly 1% at the moment. NASDAQ 100 is under a little bit of pressure, off by a little bit more than 0.1%. NVIDIA is causing some of that pressure. We'll get into that shortly. Russell 2000 is the star of the show today, up more than 1.5%. Here's the roadmap for today's show. We'll look at example option strategies for Dell. It's got earnings due after the bell today. Plus, the team from Lightfolio will join us with new sentiment data on Costco and Workday.
5, 15, 30, 60 are still on buy signals.
In the post market. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio and Kevin Green parachuting in virtually from Colorado. Kevin Hanks has a day off. All right, we got a slew of economic data today. A lot of it, though, was September data playing catch up. You had some soft
Hedge flows look like they're topping out right in this area.
as the Fed rate cut odds increase. Tom, when you think about all the data that we got to dive into today, plus you had consumer confidence.
MACD still rising. MACD.
Yeah, I think the key one was probably consumer confidence. This has been a rally in the overall equity market until earlier this month when we started to pull back a little bit. That been an not unwanted, but a hated kind of rally. And you're seeing that reflective in consumer confidence. It fell over 6 points to the lowest level that we've seen since April. And remember what happened in April, that big scare that we had would send markets down nearly 20% for the S&P 500. So a lot of that consternation is still out there as far as maybe the consumer goes, maybe the economy goes. The Atlanta Fed GDP now came in 4%, ticked down 0.2% from the previous read that we had late last
Okay, there goes Amazon.
It's still pretty robust at this point. So it's a little bit of a bifurcation here. That consumer confidence number, look at current conditions index fell. Expectations component dropped.
Amazon going.
Your inflation rate held steady at
Meta next.
5%. So maybe the overall consumer or the economy maybe not feeling that great about it, and that's why we're seeing quite a bit of volatility. But we have seen markets recover from session lows. I mean, the Nasdaq 100 is nearly flat now. That was down over 1.3% earlier on in the session.
Microsoft, nice call there. Corey's starting to move higher. S&P looks like it wants to go.
Third straight day of gains here for equity markets. But as you mentioned, the expectations for a rate cut are above 82% now, according to the CME FedWatch tool. Just last Friday morning before Fed Williams spoke, I mean, that was near the 35% level. So that's adding a little bit of support here to equities, and that 10-year yield down to 4.01%. I mean, this is the lowest level that we've seen in nearly a month. So that's helping.
Here we go.
At this point.
Okay.
Here we go. S&P breaking out.
Some of the weakness that we saw on consumer.
Okay, here we go.
University of Michigan surveys of consumer, and this is a broader report. You had Dana Peterson, the chief economist, saying consumers were notably more pessimistic about business conditions 6 months from now. So there are certainly some worries about the future. And then the question they asked about how hard is it, essentially, to paraphrase, to get a job, and that's increasing how consumers look at this. KG, what's your take when you think about just not just the consumer confidence, but all the.
Okay, here we go. Hedge flows taking off to the upside. S&P looking strong.
And I think this is actually probably one of the best days that we've seen over the last 2 weeks when you're looking at the market internals. You have the S&P 500 equal weight aggressively in the green. You have regional banks moving a little bit higher as well. Pretty much every single sector, for the most part, is getting a little bit of love, except for technology, which is trying to turn around here. And the economic data really does lend, maybe a little more support for a rate cut in December. You're looking at consumer confidence. I agree with Tom. Obviously, there's going to be some weakness there, but what also could take place is consumers stop spending as much. Prices do move to the downside here. That gives you a little bit more leeway when it comes to the inflationary picture. And then you also may have a situation where the Fed does take some action, maybe QE in Q1, and maybe some fiscal policies to provide the stimulus for the consumer as well. I mean, obviously, that's not great. A lot of people are going to hate that.
but at the end of the day, that could actually fuel equity gains to the upside here. Retail sales was actually very interesting to me as well. Core retail sales coming in at 0.3% on a month-over-month basis. This is the September report, matching the street's expectations. When you're looking at the retail control number, though, which is kind of a little bit unique, that's going to actually have a direct input on the PCE component of GDP, and that came in actually a little bit soft. And if that's going to continue, we could actually see those expectations for GDP growth coming in to the downside here, which once again could create maybe a little bit of concern for a lot of these Fed members. But if you're just looking at the market overall today, Diane, this is exactly what you would want to see from yesterday. Broad participation.
Yep, looking good.
Technology space, but you are seeing that actually coming off the lows for today's session as well. If you're looking at the S&P 500 equal weight, it's up almost 4% over the last 3 trading sessions here. That's exactly what you want if you're a bull in this market.
Okay, that's a good point. Let's talk about, we just had the heat map up, and you could see the pressure on NVIDIA. So you got cross currents hitting the AI trade. So you got NVIDIA under some pressure. At the same time, you have Alphabet, Google. It hit new highs. It's still a little bit higher off the highs of the session. But this comes amid these reports of a potential new big chips order from Meta. Tom, what's your take when you think about this one? When you look across Alphabet, Google versus NVIDIA?
Well, I think this is probably just the start of it, Diane. A lot of the other big tech companies are working on their own chips, and they're working with Broadcom. Broadcom actually went negative here. It was up over 3.5% earlier on in the pre-market based on this news, because Broadcom is going to be making these chips for Google Alphabet. But they're out there trying to create some competitive pressures with their TPUs, not GPUs, but you start looking at costs. Technology eventually gets to everybody where the costs start to come down on these products. Demand's still out there. We all know that. But this is another avenue for potentially other tech companies and any other company to start using other chips that aren't made by NVIDIA, aren't made by AMD, which is getting hurt today, too also. I mean, NVIDIA has rallied about $6-7 off of its session lows. So it's made up some ground. They did come out with some commentary, that competition in this space isn't going to be warranted because their chips are so much more advanced. They're innovating at a faster pace. But, you look at the costs of those GPUs out of NVIDIA, and this sector is ripe for some competition, and that'll lead to some margin compression probably. And that's maybe why you're seeing NVIDIA take the hit that it is today. But Google Alphabet already had a spectacular run. Not surprising. There's probably some people taking some profits on this potential news. But this report out of the information, pretty not surprising, but I think it's coming a little bit sooner than maybe people anticipated, because we all know some of these big tech companies have been working on their own chips.
KG, you and I were talking about this earlier today, and I'd asked the question, why does it have to be a zero-sum game? But what's your take now?
Yeah, I think the market probably overreacted when it came to NVIDIA. We did see some buyers stepping in at that 170 level. You and I actually talked about that early on this morning. What was going to be the reaction? Look, the TPU story is a unique one, but Google actually has had this in their data stack, if you will, or their cloud stack for over 10 years. So the cost for them is a lot cheaper than any other company that's going to go out to Broadcom and try to make new chips. These ASICs or these TPUs, these custom ASIC chips can be 3, 4, even 5 times as much as the GPU. So we also then have to talk about the cost over time. The depreciation expense has been a concern for this market for the last 2 weeks, 3 weeks when it comes to the GPUs. But what about the TPUs? Are you going to be putting up more money up front in order to get the returns on the back end, because the TPUs themselves actually use a significant amount less energy than what the GPUs have. So at the end of the day, yes, is it something that could actually create a little bit of competition over the long term? I believe so, but they're both needed when it comes.
All right, we're getting very close to 67.50.
And you have a specific task. TPUs are the way to go, but not everybody really needs them. Not everybody really wants them, and so Google may make a little bit more of a splash when it comes to taking market share from cloud players rather than the hardware side, which is obviously once again the partnership with Broadcom here. So I think it's a little bit of an overreaction right now. Once again, you got companies that could look down the TPU route, but it's going to be very expensive for them. I'm not sure that a lot of companies are going to go that route over the long term.
Interesting. All right, guys, let's talk about the memory stocks. There got some focus today. This is because of SanDisk, the news that is going to be added to the S&P 500 this week. There's been chatter about this. Now, the stock initially rallied on the news. It is pulling back a little bit, but look, I mean, it is up more than.
Ticulum is still rising. Let's. I like Kevin, but let's go ahead and switch to CNBC. Lovely Stephanie Link. Stephanie Link, very smart lady. Pays to listen to what she has to say. All right, we're at the one-day estimated move. Right now, we're at the one-day estimated move.
I'm sure that's fair.
You know, and so that's how I invest, right? I don't want to be on one side of the boat. I don't necessarily need to be on the boat by myself, but I want to be somewhere in the middle with great leadership, great free cash flow, industry high margins. And so I still like the story, but I told you this, I wouldn't be buying it here because it's had such a nice run and it has re-rated, but I do like it very much for the long term.
You've never been the shiniest toy investor out there.
No.
That's sort of in your DNA.
Yes.
You want to make sure the toy's good and popular, but it doesn't have to be the shiniest one on the shelf.
Good bones, mismanaged, maybe new management coming in that can actually correct the company, and operating leverage, of course, is the big one.
There's a lot of derivatives off of the news that we're speaking towards this morning, and one of them is Broadcom. The relationship that they have with Alphabet and the TPU chips is remarkably important, and it's one of the reasons why you saw yesterday on the news that Broadcom rallied so much.
To the 11% customer.
Right. So, conversely, you have the challenges that are in front of AMD because of their relationship with NVIDIA.
AMD's down today, and part of like why NVIDIA's down on the news of the Alphabet TPU thing with Meta rather than the GPUs from NVIDIA.
Because Meta, the reliance for Meta is on the AMD chips and the NVIDIA chips. So AMD is going to be down on that. So I think there's a whole universe you have to be careful for here from a second derivative.
We haven't, like, Microsoft was the first sort of out of the barn, right? And then, it seems to have fallen to the wayside a bit. Bernstein's defending it today, making the case of why you want to own it. That's what their note is titled. Positioned to be one of the major winners in Gen AI, and yet the stock has been down significantly recently, even after a positive resolution to the OpenAI negotiations and a solid quarter. After having spent time with the company, we believe the concerns are either overstated or simply wrong. Brian.
I think that's right, because what you've seen in Microsoft and Apple in particular, Scott, this year is that they've kind of traded places in terms of what's your defensive pick within the Mag 7. So we've seen so much more momentum, and now Broadcom, and then the NVIDIA stuff. And so I think we're going to see flows back into Microsoft, especially into next year, and Apple, just because I do think the market's going to become more defensive over the next 6 months, and it makes a lot of sense.
Both Microsoft and OpenAI have very strong relations. Microsoft and SoftBank have strong relations.
Okay, S&P is still going.
Pull back the lens here over the last month, you'll see that Microsoft's
All
down
right.
12%. If you look at SoftBank over the last month, it's down 43%. Why is that? Because right now the valuation of OpenAI in the private market is questioned, and now in the public markets we're looking towards which companies have the strongest relationship. It's Microsoft and it is SoftBank, and you're seeing them used as a proxy to figure that valuation.
That might be the case, but commercial bookings up 111% and RPOs up 51% in the past quarter, and the stock is down 13% from that.
I understand that, but
to me, I understand.
You call it silly season, and I don't disagree with you, but sometimes the fundamentals disconnect from the reality of what's going on in the market.
For sure, but that's your opportunity, and that's where I started buying it, and I didn't.
We own it. I don't disagree.
You know what the bottom line of this conversation is? Before we move to something else, is like Tony Pasquarello is talking about today, Josh from Goldman, the dispersion among these names. This is no longer a monolith story. Just forget that. It's not going to do that anymore. These companies are out for blood on each. They may have relationships with one another. It's like, a lot of the UFC fighters know one another out of the octagon, but when they're in the octagon, they want to kick the you-know-what out of the other guy. So this is it's a battle. It's an arms race. It's a fight. Whether it's a fight to the finish or what have you, these companies are not going to trade the same way anymore.
I'm so glad you said that, Scott, because I think that is
the capstone point to this discussion. In the early going of a growth business, let's say like cloud or now like generative AI, the success of your competitors actually helps you because it validates the category. In other words, you could say to your investors, look, we're spending a lot of money, but so are they, and so are they. Look at all these contracts they just got.
The debate over AI is just, yeah, I get it, but just follow price action.
As things mature, it's like, oh, wait a minute.
What happens when what happens when Nvidia gets knocked down off the high or off of current price action? Buyers step up. That tells me all I need to know. Sure, there's some short covering in there too, but if buyers step up on a move lower in news, I pay attention. With the S&P rallying and a lot of sectors starting to go green, the choice is yours. You could stick your head in the sand. I'm not saying anybody in our trading room would, but it's funny just listening to some of these things that these people say.
And I think we all need to start thinking about the AI trade, quote unquote, going into the next year as not all one big theme that you just throw money at the 20 biggest market caps. Now we got ourselves a ball game.
Yeah, we do. And I'll tell you what, if we just continue with that, the name that's been, gotten a lot of pitches up and in is Oracle in this ball game. Shares are down again, almost 3%, down more than 17% in 3 months, down 25% month to date. The stock got downgraded today to a hold at CFRA. The target got dumped to 200 from 300 at DA Davidson today. Its CDS is up again. If we can show you the CDS, it's going to show you again. That's where the green has been in the credit default swaps. And that is the story in and of itself. And by the way, a credit investor at a major bank telling our own Seema Modi, who's been on top of this story from the beginning, that they're starting to get a lot of inbound calls from equity investors who are trying to understand the structure of Oracle's debt. Joe owns it in the T. He can't do anything. He said as much. He's not happy about it. You don't have any rules around your position in Oracle. So what are you thinking about these days?
Well, we'll use the baseball analogy. They have to take some pitches here. You talked about high and tight or high and inside. They need to take a few pitches here and see how this balance sheet situation follows through. But I think it's a whole notion of needing to go out in the public market or wanting to go out in the public market. I still that they've gone out in the public market, and we're taking a look at it. We still own it across the board in terms of our tactical portfolios that we oversee. And it's becoming even more of a value call for us. And we've had it for a while. So I'm not concerned at this point, Scott. I still think from an operational perspective, it's still the best in class software name.
He loves to pick a fight with
We're doing nothing for now.
What would cause you to do something?
Belsky. He loves to pick fights with him for some reason.
Or if we see some sort of a reversal here and the stock spikes up here a little bit, I might lessen my position just because we've gone back and talked about for the last year, we're entering this high dispersion markets, Scott, and you want to be more of a stock picker. You don't want to be too concentrated. So I think that will give us an opportunity if we see a spike here. We would lessen the position. All right, Steph's trying to be a stock picker.
Okay, there goes Meta. Meta keeps going. Buy some FBL if you don't want to fork out $600 for. I'm sorry. Buy some FBL if you don't want to fork out $600 for Meta. That's about to break out. Apple's looking good. There goes Amazon. We got dip buyers, shorts starting to cover on Google. Microsoft is gone. Nvidia back to the high of the day. Yeah, everything's looking good here.
2%. Thank you. As Stephanie Lane buys this name.
Yep. First time ever, by the way.
Yeah. What was the big draw?
Could I just go back on retail sales? I mean, I know it's September data, but it was up 5.7% year over year. So it's still quite healthy. That's up from 3.5% the prior month. But this is really old data. The other data I'm looking at for the consumer, JP Morgan comes out.
Okay, S&P is still going. S&P is still going. Woohoo! Look at that go. Let me see where we could go after this. We're up against 67.40. Can we get 65, 67, 65? That's 97 percentile, 67, 65. let me look at some of these as well. The 6750s worked really well. Those are trading almost $7 now. 6750s from the open. Now, if you had taken a higher delta, obviously you would have maybe gotten shaken out of your position because those are pretty expensive, and they could drop a couple of bucks on every little dip or rip. Pop $2, down $2. A lot of times get shaken out. So the lottos, not so much. So let's see. We can get the 6755 maybe. 6755 perhaps. It looks like that's where we're headed. 6755. Maybe some lottos up there too. 6755. We're at the high of the day. I generally don't like to buy this time of day, so I'm probably gonna wait. Don't think we're gonna make it all the way up there. This is looking good though. Okay, so we're topping out at $7. Okay. S&P 6750 lottos.
Notable there. Chipotle, Texas Roadhouse is a big there. There's Brinker. You bought
$7.10.
now your largest discretionary position out of this group. Why buy more now?
It's really done nothing since May.
All right, I'm going to take some off.
Was announced, Brian Nickel, and so I want to take advantage of that because he is best management in the whole industry. In all of
Okay, I'm going to take some off here. We're at 750. I'll keep some on.
They said that they were ahead of the plan last quarter. They had the first positive comp in 2 years last quarter, and they are fixing the store experience and the menu changes and mobile payments and that sort of thing. So I think that there's a lot that can happen that could go right for this company. It's not priced that way, and so I add to it, and I'm going to continue to add to it on any negative days.
Shack is up near 3% today. Josh, again, almost everything in this space is having a good one.
Yeah, look, I think these stocks basically.
Oh man, look at this go. 860. Oh man, we're going, baby. We're going. Okay. Wow. They're going to crush the shorts. They're going to crush the shorts. Looks like we're going to keep going. All right. Hedge flows continue to rally.
I don't think it changes anytime soon. Shack's really unique because it's a growth story within the space.
Okay.
And I think investors are paying for this stock.
6750s are now $8. 840. Woohoo. What a day, huh? What a day.
It's an A-block story, I think, still. Until it isn't. It's down again.
Okay.
Coinbase got downgraded today at Argus. So, there's a belief that the market overall is not really going to be able to fully stabilize until Bitcoin does. You own Coinbase in the ETF. So what's your view on that?
I think I said yesterday, I said last week, and I'll say it
Holy smokes. These things are ripping. They are ripping. Oh my gosh. Look at the market go here. Look at the market. The $10 now. $10. 125. $10. We'll get 1,000% out of this today.
reason for it, but in terms of observing momentum on a very near-term basis, there's no signal that I see in front of me.
Oh, shit. Oh, man, this is great. This is great. 700%, 700%, 800%. Okay, I got to beat Mondo. Mondo's been like catching these moves in IWM, 800%, 1,000%. If you're not trading, if you're not paying attention to Mondo's trades on IWM, you need to. In my opinion, if you're a new member, watch Mondo. He talks funny because he's from New Jersey, but other than that, looking good. All right, so we're off the screen here. Wow. Wow. Okay, looking good, S&P. Wow. Wow, that was a pretty nice move here. Okay, very happy. Okay, I'm going to take some off here. Okay. All right, consistently hedge flows. Once you get the trend, these have been consistently profitable, right? Once you get the trend, you've got a pretty good setup, and then you look for the target overhead. Look for at least 2 billion, look for at least 2 billion in flows. Okay. What are we at right now? I need to zoom out a bit, I guess. Let me zoom out. Okay, we're currently at 5 billion. So we were at 2 billion on the turn. All right. So one of the things that Brett talks about that I don't often mention, once you get the turn, look for your target. Look for your target overhead, 6,750, 6,800. Once you get the turn, look for at least 2 billion in flow. Okay. So at that point, right here at right here around 1140, we had about 2 billion in flow. Okay, now we're starting to see profit taking. So take some profits off. Very nice day. Very nice.
Let's hit some stocks on the move as well as some calls. We're going to start with Zoom. We talked about it yesterday, Josh, with you, and heading into the print. They did post a stronger than expected earnings. They upbeat guide as well. Take a look at that. You made a nice call on that yesterday. They also increased the buyback. What do you think now?
I mean, you can't sell it. They just delivered everything that people have been waiting for 4 years to see this company deliver this entire post-pandemic period. So I think you have to ride it. The risk reward going into the number, as I talked about, was asymmetric. There was almost nothing priced in. They did way better than nothing. Third quarter total revenue was up 4.5% year over year. GAAP operating margins 25%, pretty good. Non-GAAP 41%. Things are trending in the right direction. Cash flows were up 30% year over year, and they have traction with the $100,000 plus enterprise customer. That's up 9%. So, like, what else would you really want to see? I got price target raises all over the street. I'm gonna stay long.
All right, next one. Applied Materials got upped at UBS. Target goes to 285 from 250. Joe T.
There's a surge in memory. DRAM demand continues to increase. Pricing continues to increase. For this company, look, it's been KLA Corp, it's been Lam Research, it's been Applied Materials. I would say you've seen more strength in KLA Corp and Lam Research than you have Applied Materials. Applied Materials is now seeing a little bit of a mean reversion, positive performance, and that's on the fact that wafer fab equipment in 2026, you're expected to see a 20% surge in demand there, and that's really where Applied
Okay, hedge and close look good.
is most centered on. All right, Snowflake, target to 280 from 270. Loop Capital makes the move on encouraging channel checks. Steph.
Yeah, so on the 27th of October, they pre-announced the quarter, so I don't expect any fireworks next week, but I do expect good product revenue growth of 25% plus. Operating margins probably beat. They were expected about 9.
All right, so we're still looking really good. Everything is pointing higher now, so let's see if we get the bounce here. And the follow through. I'd rather get a nice B and C pivot. Right now we're at the highs. A little profit taking. Look, with this this particular strategy, right? Let's say you buy one lotto and you make $500. On average, you make $500. Many times you're going to make more than $500. You make $500 a day. Do the math. That's $10,000 a month, right? So you don't really need to do a whole lot. Maybe you take 1 or 2 other trades, but wait for the 10 o'clock or the 11 o'clock reversal. Look for your target. Is it showing up on our screen here during the live session? We'll usually be telling you what we're thinking about taking. And if you can manage anywhere from 250, that's 5,000 a month, right? 250 a day. 250 a day each trade. If you manage that, you know, you also have to account for your losses, but if you can manage 250 that's 5,000 a month. I always look at it just from the number side. You know, it doesn't always work out. Some days you're going to have, you know, $1,000 day. Some days you're going to be down $500. So on average during the week. So these keep showing up though. They keep showing up. Watching what the dealers are doing and just follow along what they're doing. And here we go. It looks like we're going to go again. We're at the high of the day, so I'm not going to get too overzealous right here, but it looks like we're going to pop above 67.50. Those 67.50s are now going for $10. That's 700%. Okay, 20-day, 200-day. Let me mark this up. The lady's asking for a markup here. Okay. 630. 200-day. 200-day equal 673. 673. Okay, 630 pivot. Meta, cancel, bullish, bullish. Look at the volume. Okay, that's good, right? All right. Okay, we're still pushing. Feels like the high of the day. I'm not going to chase anything up here. I take some more profits off. Take some more profits off. This is a very solid day. 3 white soldiers. Okay, so S&P. Technically 3 white soldiers on the reversal. That's pretty good. That's pretty good. MACD cross.
Hello there. We're back on halftime. I'm Contessa Brewer with your CNBC News update. Israel says it has received human remains handed over by Hamas to the Red Cross. Prime Minister Benjamin Netanyahu's office says the remains will be taken for forensics testing and identification to determine if they belong to one of 3 deceased hostages remaining in the Gaza Strip. Today's handover is the latest since last month's ceasefire began. West Virginia Republican Senator and former Governor Jim Justice, along with his wife, are being sued by the U.S. government for more than $5 million in unpaid taxes, penalties, and interest dating back to 2009. A motion filed with the court just hours after the suit was docketed indicates the couple agreed to pay the amount requested. It did not indicate when or if they can pay the money. The senator's office has yet to comment. And Tokyo is no longer the world's most populous city. A new United Nations report finds Indonesia's capital city, Jakarta, now has that title with an estimated population of nearly 42 million people. It soared from 33rd place in 2018. That is tremendous. tremendous growth. Scott?
All right, Contessa, thank you very much. I want to hit a story now which has seems to have moved the market in multiple places. A report that Kevin Hassett is the front runner to be the next chair of the Federal Reserve. Bringing our Steve Leisman now to discuss this because the movement in markets is notable on this reporting. Steve, the 10 years below 4% for the first time since October 29th. Stocks have pretty much hit the highs of the day. The Russell 2000 has added to its gains on the idea of lower rates. The dollar is down. And I don't think this would be much of a surprise to those who would say that the president wants to put somebody in that role who is going to do what the president says he wants him to do or her to do.
Yeah, and just to be clear, Scott, we don't have confirmation of this story. We're running our usual traps to see if we can do so, but we have not. If it's not that big a surprise, I think, as you suggest, that Hassett is a front runner, has been thought to be a front runner for a while. The two Kevins is the phrase that people have used, Warsh and Hassett. We did hear, and I was able to report several weeks ago, that they also liked Rick Reeder, over at BlackRock. So that's a possibility out there as well. I think the story here is that the market, as you suggest, does see looser Fed policy coming from a Kevin Hassett-run Fed, and that would be for two reasons. One is principally he is one who is seen doing more of the president's bidding than perhaps some of the other candidates, and that would be a reason why he would be a front runner. The other reason, though, is not just doing the bidding, but more believing in the longer-term effects of the president's.
All right, we continue to push. Oh man, they're just gonna light this candle. Palantir is gone. Palantir looking good. Oracle, nice reversal on volume. I did buy some puts this morning. For the record, probably bought them right at the lows. That's okay. I would rather see my Oracle shares and position move higher. Okay, everybody's negative on Oracle right now, so hopefully we can rip back up towards 300 soon. 350 would be nice for a Christmas present.
Powell to take the attitude towards productivity and technology investment that Greenspan took in '96, where quite famously he went against a bunch of the hawks in his committee and did not raise rates because he believed in the productivity that was coming from technology. Bessent wants to do that now. That Hassett more likely to do that than perhaps some of the other candidates.
Yeah, and I mean, Bessent obviously saying on Squawk today too that they could actually name this person before Christmas. You know, also on the idea of the type of person that the president would want. All you need to do is look at the way that the Fed governor role was filled. Not to take anything away by any stretch from the bona fides of Myron, but he was put in that role presumably to do what the president wanted him to do, and that's argue and if he had to vote for interest rates to be lower. I mean, can we agree on that? Without being controversial, I don't think it's controversial. I don't think it's controversial to say that.
Disagree. No, it's not. It's also not controversial to point out that he is on leave from the administration, and that has never happened before, as far as I can tell historically. So, and that's been a point of controversy about Myron, and he is in there doing what the president wants. And as you say, it suggests he has given some intellectual and backing in the data for his points of view. That the funds rate ought to be lowered down. He does say towards neutral, so he's not embracing all of what the president says. Hassett, you could imagine, and I think we've had him on saying the same thing, believes rates ought to be lower. And then, you know, the question becomes, okay, two things. One is you're going to bring rates down. You know, if there's inflation, are you ready to go back the other way? And then the second thing is, are you the kind of person that would give the same leeway to a Democratic run administration as you would a Republican one, or are you being and playing politics with it? That would be a matter of concern. But hey, the market doesn't care about that. The market says, hey,
Okay, we're still pushing here. This feels like an A pivot up here. I wouldn't be chasing this for sure. Okay, look for a B and C pivot. Okay, looking for A. There's your A pivot. High of the day. Wow. Wow.
Likes the idea of somebody in that role who is going to advocate for lower interest rates, who is more aligned with what the president's view is. And that is a man who wants interest rates to be lower. All you need to do is look at all of the asset classes that are moving on this conversation that we are having based on the report that was put out, and it would tell you exactly that story. Small caps, they like low rates. Tech, the NASDAQ was flat 41 and a half minutes ago. It's now up 0.5%. The cyclical stocks that would play a role into the Dow, for example, up 1.2%.
Okay. Watching for a fade now.
The discretionary sector is up near 2%. Follow the money.
Yeah, I would make a point, Scott, of something that I learned during the pandemic, and I'd be interested if you have a chance to see what your traders think about this. But one of the things that I thought was most remarkable about the pandemic, and they all may have known this already, is companies make plenty of money during inflation. And if the stock market itself is not concerned about inflation, the bond market ought to be, but it isn't. Individual Americans are concerned about inflation, and that creates a political dynamic. But when prices go up, input prices go up, companies were perfectly able to raise prices and keep their profitability high throughout the inflation run we had from the pandemic. So if you're concerned mostly about the stock market and the level.
Thanks, Michael, for your posts. Appreciated it.
Up there as a real high concern, other than down the road.
All right, looking for this A pivot to play out. Looking for a B and C pivot. Look for us to close up here. Doesn't mean we will. Watching hedge flows. Hedge flows still rising.
Steve, thanks. Appreciate your insight into what has been a market-moving report, no doubt. That's Steve Leisman joining us there. You guys have a thought on that?
A few weeks ago, I bought the GLD. That was my entry into owning gold. I will probably buy more of the GLD, and the reason being is we are going to see certainly a Federal Reserve Board that wants to adopt easier monetary policy in 26. Gold is the way I think you play that.
And you don't fight the Fed, which is why the market likes this maybe
That-
announcement.
right? That's my point.
Of course, but I would also say, like, the market doesn't care so much or gets so alarmed about inflation if growth is better than expected. And I've said that a lot. We're growing at 3.5%, 4% GDP. Inflation is sticky at 2.5%, 3%, but earnings are growing at 12%, much better than expected because of what Steve said in terms of the pricing power. And then companies also being really good about restructuring, reorganizing. Maybe they lay off some people and being more productive.
We've reared an entire generation of investors that believe you buy stocks if interest rates go down. And so that's a key thing to remember. And I think the other thing too, that you got to throw in this dual mandate stuff. And I think as long as growth remains,
All right, looking good.
it makes sense that we.
All right, still a pivot forming here. They're not showing like they're going to give up very easily, the bulls. Bulls got 3 white soldiers. Very strong reversal pattern. 3 days in a row when you get kind of bullish action like this. Palantir looking good. Palantir. Okay.
I guess I would just say be careful what you wish for. We just saw this morning.
Exactly. Be careful what you wish for. Careful, as Joe T would say. Where's Joe T from? He's not from Queens.
Definitely not the stock market. Definitely not the
Palantir looking good. Okay, watching this A pivot. Watching this A pivot.
I wish you luck. I wish you luck. Great luck.
We will take a break. We're at the highs of the day or the lows of the day, depending on which asset class you're talking about, because it's all relevant. We did mention the Russell continues to elevate, which is why next is the perfect time to give you some small cap picks. We'll do it.
Okay. Ba-ba-ba-ba. Do. All right, well, we got our A pivot. All right, looks like we got our A pivot. Okay. A pivot is confirming now. Okay, come back after lunch. Okay. All right, so we got our A pivot. Looks like we'll get a B and C pivot after that. I'm going to take a 5-minute break, pop something in the oven maybe for lunch. Let's see what Yahoo Finance is talking about. Okay. I'm going to take a 5-minute break. I'll be right back. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Tuesday, the 25th. If you started the morning early with us and you were able to get into those S&P 500 calls, okay, they ran from average $1.25 up to $10 and change. The high of the day was $13.80. High of the day was $13.80. So $1 to $13.80, not a bad return. $13.80 was the high of the day. Okay.
At Amazon, hourly employees earn an average of over $23 an hour.
All right, what are we thinking?
Megacom.
Megacom. Oh, guess this is mine now.
Where is the TV remote? How many times have you heard that? Well, scan the code on your screen now, because the searching is over. The Remote Tote is a multi-pocket armrest organizer. It can hold all your remotes, snacks, phones, glasses, books, whatever you want. All your couch needs right at hand. It folds up, so it's easy to store and easy to clean. Stop searching and start watching with the Remote Tote. Scan the code on your screen now to take advantage of this special TV offer. Get your Remote Tote today.
At FrameBridge, we believe the items you frame tell your story. Since 2014, FrameBridge has been making it easy to custom frame everything you love, online and in a local store. Transparent pricing, beautiful designs, handcrafted using the highest quality materials, delivered to you in days. This holiday season, give a gift only you can give from FrameBridge. Start gifting today at your local store or at framebridge.com anytime.
Where is the TV remote? How many times have you heard that? Well, scan the code on your screen now, because the searching is over. The Remote Tote is a multi-pocket armrest organizer. It can hold all your remotes, snacks, phones, glasses, books, whatever you want. All your couch needs right at hand. It folds up, so it's easy to store and easy to clean. Stop searching and start watching with the Remote Tote. Scan the code on your screen now to take advantage of this special TV offer. Get your Remote Tote today.
When anything falls between the seat and center console,
Okay. We'll see how far they let this dip. Given the strength, I wouldn't be surprised to see B.
it's flexible, easy to clean, and even easier to install. Simply place the console catcher around the base of the seatbelt buckle, and that's it. Now nothing will ever fall between the cracks again. Scan the code on your screen and get your console catcher today.
Car breakdowns can wreck your wallet.
I had a sensor light up on my dashboard. $2,600.
But if you got Endurance, you could never pay out of pocket for a car repair again.
In my first year with Endurance, they covered a $14,000 engine replacement.
Right now, you can get $300 off any plan. Plus, a year of elite benefits, a $2,000 value, free. All backed by a 30-day money-back guarantee. Call 1-855-575-1309.
Currents of change flowing together. They converge into a powerful oasis of technology. Hanwha builds what the world needs. Hanwha turns innovation into
So far, fairly shallow
sustainable solutions
dip here.
for life.
Given the 3 white soldiers pattern, the move back above the 50-day, this feels like institutions have been buying the crap out of the markets. We're only at about a third of today's volume so far. So I got to take a break though. Give me 5-10 minutes. I'm just gonna go stick my head outside. It's kind of overcast, raining.
Yeah, well, to be fair, the stock popped 5% yesterday on their announcement that their planned AI model has been downloaded 10 times in the week since release. So that sort of set a high bar for today's earnings release. Although it is somewhat concerning that the stock was up pre-market 5% this morning, is now down about 2. That could be also in sympathy with NVIDIA coming off and some heaviness in the U.S. tech sector. But I think the big picture question for Alibaba is one of scale versus profitability. So you mentioned the 5% revenue gain that Mark was looking for 2 or 3. That was good. On a like-for-like basis, if you remove units that disposed of, revenues were up 15%, 34% in their cloud computing business, and up 60% in the quick commerce dominated by the food delivery sector. So very strong revenue growth, but earnings down 72% because they are investing very, very heavily in both AI and in this quick commerce segment. And both of those segments come with great questions as to whether the heavy upfront investments will at some point pay off in terms of high profitability in the end.
Well, obviously that's a familiar narrative because it's one that we've been debating for the U.S. tech giants as well. So what's your assessment then as an investor? Do you think that it's going to pay off, and do you think that, that it's a good bet?
Yeah, it was an easy bet to make a year ago. Alibaba's doubled since then. So, the valuation is not the strong driver of an investment thesis for the stock as it might have been a year ago. And at this point, I'm mixed at best, frankly, because, let's talk about the quick commerce business, where they're investing very heavily. Sales and marketing expense above $9 billion that doubled on last year's third quarter. So they're spending a lot of money to gain share. And the U.S. paradigm is, look at Amazon. They had this very long runway of, spending to gain share, and then ultimately, produced a dominant market position in which they could generate profitability. The track record for that kind of thing is not so great in China, because you just tend not to see the same kind of market consolidation. Businesses don't tend to go bankrupt in China, particularly large, sort of dominant businesses that have a provincial or central government protector. So it's not clear that the same story will hold for Alibaba. Frankly, I'm skeptical. And, I think more broadly, the Chinese markets look to me like the top. The economic backdrop in China is quite negative. Alibaba is still somewhat settled with a core e-commerce business that is just not doing great in an environment of deep-seated deflation and slow growth in China. So I'm not real enthusiastic about the shares from here.
It's interesting because I've heard a lot more optimism about China, this year at least, than vis-a-vis expectations, Brian. But do you think that's kind of behind us and that it's already priced into your point about what Alibaba and many other stocks have done?
Yeah, so paradoxically, I think the trade truce with the U.S. is a bit of a negative for Chinese equities, because when Chinese leadership was in this existential fight with the U.S. that's on hold for a year, supposedly, it was really in their interest to get equity markets off the floor, generate some excitement in Chinese assets. It helped shore up their currency, and that, so that was a strong policy push from the central government starting, about a year ago, that I think was really a great tailwind for Chinese equities over the last year. Now that we're in this détente, it doesn't make sense for policymakers to push these stocks into an area where they might be, vulnerable to a sell-off. It just creates a negotiating vulnerability for the Chinese government should tensions with the U.S. reemerge. So I think that tailwind, the policy tailwind, is lessened, and that goes for stimulus. I don't think they're going to do a big economic stimulus, despite some very, very weak data, particularly in the fixed asset investment category. Double-digit declines year on year the last few months. We've never seen this before, really, in China. So I think they're going to be reluctant to stimulate. They're not going to want to cheerlead the equity market the same. And again, with valuations having doubled, it's just not as exciting a proposition as it might have been a year ago.
I mean, we know that Trump and Xi spoke yesterday, although that seemed to be more about what was going on with Ukraine and Russia. But they touched on some trade issues as well, I believe. Do you think that there might be the potential for any kind of short-term catalyst when the two meet, if there's some more announcements?
Well, potentially, if China were to accept an offer for the U.S. to sell NVIDIA chips, because one thing that came up on the Alibaba conference call was that despite the 34% increase in cloud revenue, they're capacity constrained. They have more demand than they can offer clients. So there is a question there, given the very strong policy push for domestic chip usage, whether they can continue to grow that business or whether there's going to be a constraint created. And I think in a way, if they were to open up the door to some NVIDIA chips, it's not clear Chinese policymakers want that. I think Trump would offer it. I think that actually could be a tailwind to Alibaba's cloud business in terms of it being able to sustain continued high rates of growth, which again are in question because the Chinese policymakers really don't seem to want these NVIDIA chips, and they do want to force domestic compute to be run on homegrown chips, which is easier said than done.
Yeah, that's definitely a point of suspense in the whole story, and we'll be watching it closely. Brian, thank you so much for your perspective. Appreciate it.
Thanks, you.
Coming up, we'll have full market coverage ahead in the second hour of Market Catalyst. We'll go anywhere.
The early bird catches the gains. This is Morning Brief Market Sunrise. Live from London, we deliver an early read on global markets, from overnight action in Asia to real-time sentiment across Europe's major trading desks and a live look at US futures. We cover the stories that help you, the individual investor, get the edge with actionable financial information and unbeatable context. So grab that coffee, tap in, and let's own the morning.
CET1.
It's time for Yahoo Finance's Market Minute. U.S. stocks are gaining today for a third day as tech pairs with losses and continues to lead the market higher. Meanwhile, Bloomberg News is reporting Kevin Hassett has emerged as the frontrunner to be the next Federal Reserve chair. Hassett currently serves as the White House National Economic Council Director. Jerome Powell's term as chair of the central bank ends in May of next year. Bond yields dropped following the report. And in corporate news, Spotify is planning to raise subscription prices in the U.S. That's according to reporting from the Financial Times. It would mark the first price increase for U.S. customers since 2024. Some estimates say a $1 increase would amount to an additional $450 to $500 million in annual revenue for Spotify. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the trading session.
Start of U.S. trading. I'm Julie Hyman. Let's get a check of the markets here as we take a look at the major averages. We continue to see a mixed picture on this holiday shortened trading week. The Dow is higher by 315 points or so, but the S&P 500 very little change, slightly to the upside. The Nasdaq is down about 0.4%. I'm just looking at the groups in the S&P and what's on the move here. Healthcare and consumer staples are performing the best in today's session. Tech and energy are a drag. So that's the sort of balancing act that equals a 10% gain in the S&P today. Consumers are cutting back on their holiday toy budgets this holiday season, with 14.3% of people expecting to spend much less. More than 26% expect to spend somewhat less. Joining me now is Jay Foreman, Basic Fun CEO. Jay, it's good to see you again. Obviously, people are trying to kind of make choices, balance their budgets this holiday season. How are you guys seeing all of this play out for your business?
Well, right now, I would say Santa's sled is revved up in third gear. We don't see the most robust holiday season, but we're in the toy industry, and generally people don't skip on toys for their kids. There's other products they might not buy over the holiday season, but they're kind of going to buy toys. But our season has really been impacted this year by tariffs. There's no doubt about it. Between the closure or the sort of de facto embargo with Liberation Day in April, 145% tariff, it's really stunted the opportunity for growth in our industry this year. But we think the consumer's going to show up, but it's not going to be the most sunny Christmas that we've seen in a long time.
Well, Jay, let's talk about that. Let's sort of break that down, right? Because the tariffs, obviously, we're not at the worst case scenario where we were in April, but we're not in the best case scenario where we were January 1st either, or the better case scenario, right, in terms of tariffs having been imposed. So I guess let's take sort of it in two buckets. One is supply chain and inventory, and the other is price. So price-wise, how much have you all had to raise prices in order to account for the tariffs?
So the first part of the season, when tariffs first hit, pretty much our costs were already baked in with the retailer. We had already quoted those prices last year. A lot of the goods were already shipping it on the water. So for the first, let's say, 9 months of the year, very difficult for us to push too much of that cost across to our retailers or the consumers because it was in. But for the last quarter of the year, for the fourth quarter, consumers are going to start to see the tariff pass through a lot. I'll give you a perfect example if you'll allow me. This Tonka Mighty dump truck, which is a great item, steel dump truck, was $25 pre-COVID. Post-COVID, the price went up to $30 through the supply chain crisis, 23, 2022. It's now $35 to $40 online because of tariffs. So, you're seeing the price go up. Now, this is a great value item. So even for $35 or $40, it's a nice value for the consumer, but it's still $10 or $15 more than it was, previously. So the consumer's going to feel that, and they're going to have to decide how many toys they're going to be able to buy, as well as all the other Christmas gifts this year. So prices are definitely going up.
I know it's not what it's meant for, and it's too small, but I definitely remember my kids trying to ride themselves around in some of those trucks when they were much smaller, Jay. Okay, so that's the price part of the equation. What about the availability part of the equation? Because of these increases and, the sort of stop and start and not inconsistency of how the tariffs have been applied, is there some stuff that there's not going to be enough supply of?
Sure. When Liberation Day hit, especially for China and a lot of other countries in the supply chain for toys, there was really a de facto embargo. Everybody pretty much stopped shipping for 6 to 8 weeks. So that stunted the supply of goods on its way. And then the knock-along effects of whether tariffs would go up or go down over that period of time, and the uncertainty with the consumer really has gotten the retailer skittish. So from what we can see, the retailers have purchased less toy product this year than they did last year. There will always be products to buy in the stores. There will always be things you can find. It's always a question of, will the things you really want get sold out quickly? So consumers will be able to find toys. It's what kind of toys will they find, and is it the right thing that your child really wants? And is the price going to be a little bit more expensive? And the answer for the first is you won't see as many of the toys your child wants as the season goes on. And yes, the prices will become more expensive for toys.
And Jay, we're showing some of your brands there. Of course, you showed the company.
Still producing a fade into a B pivot eventually.
Trend-wise, sort of what are some of the most popular items that you're seeing this year? And is there going to be enough of them for people to buy?
Right. The biggest trend we see this year, interestingly enough, it's not really traditional toys, it's trading cards. So Pokemon, Major League Baseball, Magic the Gathering, NBA, those are super, super hot, and you're going to find those really hard to find. Of course, you may be familiar if your kids are getting a little bit older with the Boo craze. So what we call blind box toys, surprise open toys are in demand, lower price, somewhere between $5 and $15 or $20 a piece. Those toys are selling out and they're going to be in demand. So those are the biggest trends we see. Lego obviously continues to do an amazing job with the product safety. And that's kind of what's happening. Like I was doing store checks over the weekend, and I can tell you that it's very hard to find a lot of the trading cards that kids want to buy. And there are a lot of holes in the shelf because things are selling out that are most desirable, and it just seems there's less of a product flow coming in from Asia for toys this year.
Thank goodness my kids are not into boo-boos, Jay. But are you guys in the collectibles business at all? Do you have anything in those lines?
Yeah, we're definitely in the collectibles business. You know, we make a line of toys called Littlest Pet Shop. So little, really cute figures of Littlest Pet Shop figures. We make little squishies. So we're definitely in the collectibles business. And it's been really thriving because these are, you know, what the English would call pocket money toys. You know, so these are toys that might be 3, 5, 10 for young adults, even 15 or 20 bucks. And they bring a lot of joy. You can buy them in little bits and then end up with a big collection of them. So collectibles is super hot right now. Things like Littlest Pet Shop, things like Five Surprise are really in demand at this point for consumers.
Jay, finally, you know, getting back to tariffs for a moment, I think the last time we talked to you here at Yahoo Finance, you talked about the exposure to China for your manufacturing. Have you guys diversified at all? What kind of?
I'm just eating. I'm here. I'm just eating lunch off mic so that I'm not in your ear.
Well, you know, we had some big decisions to make whether we moved out of China to places like Vietnam or Indonesia, India, Cambodia. We made a decision to stay in China. It's the most reliable supply chain manufacturing hub for toys that there is. And we really felt,
Future's trying to turn the corner. New York FANGs look productive. Netflix is starting to turn. NVIDIA back up near the highs. Meta doing very well. I bought some FBL shares earlier. That looks good. Apple near the highs. Oracle, I'd like to see a bounce at some point. Oracle. Merck. At the highs of the day, Merck.
And it has been quite a ride since then here for this administration, for the industry. When you look at the charts on Wall Street, maybe save the last week or so for some of them, you know what I'm talking about. But the leadership role appears to be evolving here. It's not just about NVIDIA. And certainly the stock is showing that as Meta enters discussions to use Google chips in its data centers that could help to establish TPUs as an alternative to NVIDIA's GPUs. Those TPUs are designed with the help of Broadcom, which has been enjoying a nice run up recently as well. When it comes to that AI action plan, it was written, as I mentioned, in part by Dean Ball. When President Trump sits back, closes his eyes, and thinks about what to do with AI, he thinks of this man, senior fellow at the Foundation for American Innovation. He was senior policy advisor for AI
Walmart.
technology at the White House.
Have the January 100 call. Walmart doing well.
Among the rest of us in the civilian world. Dean, it's great to see you. Welcome back to Bloomberg. I'm sure I overdid your intro, and you can tell me about that later, but I'm just curious. Does a Dean Ball wake up and see headlines like this with everyone pulling their hair out? We're putting in buy and sell orders based on this story, and roll your eyes? Do you have a
S&P is starting to turn.
than this particular news flow that might be missing the point?
No, I think it's a pretty substantial story, actually. So Google's TPUs, tensor processing units, as opposed to GPUs, graphics processing units, have been around for about 10 years. Google started creating them in 2015 for its own internal purposes, right? Google was running a lot of
Funny thing is, NVIDIA, Google, Microsoft, Apple, they don't make their own chips. They design their own chips, but Taiwan Semiconductor is the one that's actually creating and making them. And I believe Apple has scheduled 2026. I believe they're in the queue. They've scheduled it. They paid for it, etc. Apple looks good. Apple at the high. See what I have. Apple here. December 5th, 280 calls. They're just out of the money. Apple.
A lot of folks have been asking whether there will be a real competitor to NVIDIA. Did we finally find one?
Well, I think it could be. I think there's a lot of obstacles that Google faces. The most important one by far is not actually just performance of the chip; it's the software ecosystem. So
Yeah, CUDA's got NVIDIA's got that hands down.
the iPhone, Apple's iOS has this huge developer ecosystem, and all these developers, when they make mobile apps, they usually target the iPhone first because it's kind of the premier smartphone market. And Android being a close second there. There's something similar that happens with NVIDIA chips, where all the developers of machine learning models kind of use NVIDIA's software ecosystem, which is called CUDA. And that's a huge moat that NVIDIA has, possibly more significant even than just their hardware performance. So the question will be, can Google?
Okay, so the
And it's a big challenge when you consider
the hedge flows have tapered off. All right, so we saw this yesterday too, if you remember, at the high of the day. The hedge flows kind of tapered off right in here. That was around 120 or so. They went sideways, dipped a little bit, and then ran up end of day. So that's what we're seeing right now. We're seeing the hedge flows flatten out. Basically, they turned it off, and we're just seeing what's going to happen next. Watch the hedge flows here.
We'll see, right? I think the idea, Meta is going to be using NVIDIA chips for a long time to come. And by the way, Google uses NVIDIA chips too.
I was going to say, Google is a client.
Yeah, Google is, I'm sure they're one of NVIDIA's largest customers.
And then I'm supposed to ask you again about circular investing, which do you see as misguided in this case?
Not really in this case, no. I mean, look, again, are there some transactions that happen in this that seem sort of a little fishy?
Yeah.
Maybe, I'm not expert in such things.
Right, sure.
I'm more of a policy
You're not an
person.
accountant.
Yeah, I'm not an accountant. I do have opinions about depreciation schedules, but I'm not an accountant.
Well, those depreciation schedules are a big deal for the investment community right now. And when you look at all these data centers popping up that are going to, pay a lot of money for cooling, they're going to try to harness enormous amounts of energy. Does a TPU or the next generation make all of this unnecessary? Are we going to have data centers on mothballs when the technology catches up?
I don't think so. I think that there's just an enormous amount of underlying demand for AI services. And so, I think the companies that are building these data centers are building them primarily because they have trouble meeting demand right now.
Yeah.
OpenAI, Anthropic, these companies are always talking about how limited they are on compute and how they could serve more models, better models, different kinds of products to customers, but they can't because they're compute constrained. So I think they're making a logical calculation. At the end of the day, when it comes to these sort of frontier data centers, you do need to maximize basically computations per square foot. So that becomes very important. But at the same time, Google, on their most recent earnings call, Google talked about how they had very high utilization rates of the NVIDIA V100, V as in Victor, from 7-8 years ago at this point. So that chip is still being used for different kinds of developer purposes. So it might not be that you use the Frontier chip, for everything. There's a lot of other use cases, and so I think that the sexiest use cases of AI will probably always be on these big training.
Yes, okay.
They'll be on the latest models, but I think there'll be uses. We'll see if that changes, but I tend to think that the appreciation standards that we see right now are actually quite reasonable.
Fascinating. And good for us to hit that before you go. We've got about a minute left. Do TPUs accelerate the end game here, where you and I both have a digital twin?
I mean, at the end of the day, competition is inherently accelerationist, right? So competition is great in that regard. I hope it makes both NVIDIA and Google better.
Can you sell them to China?
The TPUs? I don't think Google currently does. I think
this could be the next big argument for export controls, huh?
There could be some chips. We'll see if Google wants to.
Right.
But it's very possible. There could be some chips that fall into the sort of export control regulations.
Well, there needs to be a new AI action plan. Do you go back and rewrite that thing at some point?
I don't know about me, but I think that something like that, a plan like that is worth updating every once in a while. Yeah.
Dean, thank you. It's great to see you back. Dean Ball, Senior Fellow Foundation for American Innovation, with us live on Bloomberg TV and radio, and it's just the voice that we wanted today. As we watch shares of these companies react to the news at hand, it's been a good one today for shares of Google, and they're still hanging in, up about 1% or $4. NVIDIA down 4% or $6 a share. We'll assemble our panel next on the fastest show in politics. This is
Formula One has never been more competitive. If you're standing still, you're actually going backwards. We're trying to beat our competitors on the track, but to do that, we need to be able to beat them off the track. We need best-in-class partners in the technology space to help us make all our investments, bring performance to our race car. Workday is a critical partner of ours to help us forecast and help us run the most efficient business possible.
After last month, massive solar flare added a 25th hour to the day.
I'm not sure what you mean, MMD. A pivot is usually the high of the day. We'll look for B and C now. Is that what you mean? It's not a buy up here, no. It would be a buy down here on B and C if we get a turn back up. Oh.
It's about time. I had a true partner in my health, that my aches and pains aren't dismissed.
I would use an ABCD entry on Agilent. Okay, so it's just kind of sitting up here right now. You'd be buying the high of the day. The risk is that it could pull back.
To help me be my healthiest, our newest CenterWell location is welcoming new patients. Schedule a tour today. CenterWell Senior Prime.
Okay, watching hedging flows, looking for that to turn back up.
So cute. But I don't know, something's off. Should my teeth be lighter? Not your fault. Teeth naturally yellow over time. Dr. T, what's up? Reality.
CST.
IND.
Oh boy. All right.
Melted butter?
With a little salt on top of it, okay?
Why would we do this, Stu?
You know why? Because it got how many millions on TikTok? I mean, it was trending. And we did our own little thing about how to make this butter ice cream cone. In the store, we got 15 million views on this thing. That's why we're doing it. It's like a social media craze. You got to jump on it. So here's the thing. I'm going to take a bite of this.
Yes.
It's crunchy. It's crunchy around the top, which is sort of cool. And like
like stick to the roof of your mouth butter. And you get a little bit of salt on there. It's really good. Okay, who doesn't like butter?
I'll have to take your word for it. I used to like when I was a kid. There was a place I would go to that would do the like chocolate dip cones or the caramel dip cones. Those I
All right, starting to move here. S&P potential pop. Hedge flows turning back up. Let's see where we go with this. S&P, B and C pivot.
All right, Stu. It's great to see you as always. Happy Thanksgiving to you.
Thank you. Happy Thanksgiving to everybody.
Take care. Coming up, we're going to pivot from Thanksgiving to one AI guy that might be gobbling up NVIDIA's GPU business. But we'll bring you the
MACD crossing. Okay, so we got S&P turning back up. Okay, so you got hedge flows turning up. S&P. Watch your MACD. That'll tell you whether or not the momentum makes sense. Okay. The trade, does it make sense? Okay, here's a B pivot potentially. B pivot. Okay, you got a MACD cross. MACD cross here. There we go. Another MACD cross. I don't talk about this that very often, but you know, when I'm taking an entry, a lot of times I'm watching what MACD is doing. Okay, that gives me an idea whether or not the momentum makes any sense. And then I look at the volume, look at trace, look at all of these at the same time. We're above support. We got resistance at 6,800. I don't think we could get there, but looking pretty positive so far for the day. S&P pushing higher. 5, 15, 30, 60-minute are on buy signals. Tick cumulative is rising. Institutions appear to be buying. NVIDIA grinding back up. Snowflake at the high of the day. Broadcom making a nice reversal off the low. It tends to do that. Palantir doing the same thing. It tends to dip and then rally during the day. S&P trying to push a bit higher. Looking pretty good. So hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at 1:26 p.m. Tuesday, the 25th of November. One more day before Thanksgiving on Thursday. I got to call my mom. It's her birthday. S&P trying to push a bit higher.
They won't have to pay taxes on things like tips and overtime. So there's going to be a little bit of a boost there for those groups. But by the end of the year, we will see.
Okay, we're right up against some supply. This is where we had some sell orders earlier. Got a buy order block as we break the structure. Once you break structure, you get a buy order block. It's not a chicken or the egg. You got to get a break of structure to get a buy order block, or break a structure to the downside to get a sell order block. Looks like we could be following through. The odds of it following through look better because of volume and MACD at the moment. Let's see if we keep going. Okay. S&P, no follow through on that one. Okay. Needs to squirt through this area. It needs to get above 37.55 and get above 37.55 or so. 55.60. That one it should run. It should run. Looks like we're going to squeeze. If I was short right now, if I was short and I had stops overhead, I'd be a little bit nervous at the moment. If I had stops right above this level, Okay, if I had stops up here and knowing what I know, and most likely these traders know, if they're short up here, MACD turning up, they're probably watching the volume as well, thinking to themselves, oh God, I better get out of this before it like rips to the upside. Looks like that's what it's going to do. They're probably watching something like similar to what we watch with Trace as well. They know where the option levels are. And if this keeps going, the daily chart is suggesting enormous strength as you get 3 white soldiers. That's a key reversal pattern. You usually don't see that unless institutions are buyers, right? And if we look at the volume, we're almost half of yesterday's volume. Not quite there. Not quite there. Yeah, definitely looking better. All right, looks like we're going to pop here. S&P looks like we want to pop. 37.60 calls are $4. 37.60s are $4. If we pop through this area, that could get some traction real quick. Let's see what they're going to do here. Are they going to pop this through? It looks like they're going to go. Looks like they're going to go. I would say 37.60s, 37.60s, 67.60, sorry, 67.60. $4 to 425. Oops.
Welcome back to the exchange. I'm Contessa Brewer with your CNBC News update. The FBI is working to schedule interviews with 6 Democrat lawmakers who appeared in a video urging service members not to follow illegal orders. That's according to NBC News. The Pentagon yesterday.
What illegal orders are they talking about? That's what kills me. They tell them, man, if I had, what they don't tell you is that the Uniform Code of Military Justice, you don't do what the commanding officer tells you what to do. Your ass is in military prison, you know, with a court martial, dishonorable discharge. That's what boot camp is all about. You don't question authority. You just do what you're supposed to do. It's not can I, should I, or would I? It's you have to. So bizarre. Okay, S&P trying to push a bit higher. Watch that MACD. MACD is telling you what to do here. Okay, MACD. MACD is still very bullish. Andrew. Okay, if you keep an eye on MACD, it'll keep you in a trade a lot longer, or keep you out of a trade if it's trending lower and you think it's going to pop.
I was going to say, I'm always back to work the day after the Super Bowl, but I wouldn't be opposed to taking it off. Contessa Brewer, thank you very much for the news update there. Coming up on the show, our next guest still believes in the AI theme as a secular trend. Why, though, is he trimming his exposure to AI? We're going to ask him about that and where he's deploying that money instead, coming up next.
Momentum is still pushing higher. MACD. Little profit taking there, it looks like. The bears, the shorts, got a lot of work to do to push this back down.
I was able to find a medical grade factory in China to do that for me at a price point that all families could afford in America.
Oh, jeez.
For 8 years. This is not a new product, but they've
Are we going to go or what? What are we going to do here?
AI workloads and tasks with efficiency in mind, and also with the potential integration of this Gemini 3. And with those reviews of how strong this Gemini 3 AI chatbot is performing, it's very important. Meta, one of the largest buyers of components that go into AI infrastructure, and NVIDIA, of course, we know, is the leading supplier of AI chips. Now, there seem to be differing viewpoints onto whether or not this will actually erode NVIDIA's market share. But just taking a look at the charts and looking at NVIDIA still down 3 1/3%, and we are seeing Alphabet up.
Okay, watching the futures look like they want to go. Futures look like they want to go here. Trying to pop through the highs. Here we go. Futures trying to pop through the highs of the day. Pushing higher. Here we go. Here we go.
Guys, I mean, we might be watching a changing of the guard. We might have a new leader for this next inning or leg or whatever we want to talk about in this AI trade. But I also look at Alphabet. They're a leader in digital ads. They're a leader in the cloud. They're a leader potentially now in AI application and potentially a major player.
High of the days at 57, 57, 58, 67, 58.
I don't know if that means it's worth what it's worth, but NVIDIA does one thing. You know, Microsoft does another. Apple does another. It sounds like Alphabet kind of does everything now.
Yeah, they're all over the place, and also the best performing stock of the Mag 7. So if we want to take a look at it like that, Alphabet's up, almost 88% year to date. They're outperforming the rest of the Mag 7 in part because they do have so many different hands and different pots. They're more diversified than some of these other big companies. But interestingly enough, I was talking to Jessica Inskip and Jed Ellerbrook on Trading 360 about this deal, and both of them sort of said it's a great thing for Google. They thought it was a small negative for NVIDIA because of the argument you just said, Alex. It is a major shift in
Okay, hedge flow still rising.
a lot of their bread and butter is in the software component as well, which is different from Google here. But they said really AMD is who we should be focusing on as really eroding the market share. It's the number 2 spot.
Market agree is 7% decline right now with AMD.
Exactly.
I know. I think it's interesting to see that the initial drop in NVIDIA shares, and it's like, are we so quick to want to see its dominance threatened? Like, are we so quick to say this will threaten? I mean, NVIDIA's overall command of GPUs. I have a hard time making necessarily that jump because GPUs are very GPUs in the sense of like they have different processes, and so I know that TPU is more cloud focused. Obviously, they both are, but I don't necessarily know if this means that NVIDIA's strength will be threatened, but it does, I think, mean positives for Alphabet.
And Jessica Inskip basically made the same point. She said the same thing. They're not the same function. TPUs compete with GPUs, but only on the hardware. It doesn't have the software component, and that's really where NVIDIA's product shines. She said that's really their moat. So in her opinion, she doesn't think there's a huge erosion potential there. TPUs are a Google advantage, not a market replacement, was exactly how she phrased it.
What if I
Okay. S&P 500, Albemarle, Keysight, Builders First Source, CMG, Chipotle, moving into the gap. CMG.
That could maybe offset some of that positioning. It seems to me more of a rotation out of NVIDIA.
Looks bullish.
Not because one is going to beat the other, but because now they provide similar exposure and you aren't as concentrated in that kind of uncomfortable nature of concentration risk can sort of be spread apart.
And I will say both of those guys.
All right, CMG, Best Buy, BBY, looks bullish. Best Buy looks bullish. Q's, PLTO. Okay. Lennar. Okay, so if you look at the S&P 500 most actives, Builders First Source, another builder, DHI, D.R. Horton, Lennar, big move on Lennar today. Very bullish. Volume looks good. MACD, RSI, everything's following through on Lennar. S&P turning back down now. S&P. Okay, hedge flows peaking, but not like turning dramatically lower. Like around 12:30 or so, we got a little turn lower.
We didn't have today. We have infinite free music, infinite free television, infinite streaming video, infinite free YouTube. You can get lost, fall in the TikTok hole, an Instagram hole. You can get on stream and Twitch. There is infinite. We have managed to manufacture infinite everything. used to be you had to have money to get a newspaper or a magazine. And now you can see we live in a world where we have, to say a million times more content would be probably an understatement. So the entire society is being inundated with information and their attention span has shrunk. And so people just don't have an hour to listen to what you have to say. Sometimes they don't have a minute. Oftentimes I think, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? Sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence, and then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words. And so sometimes I don't give you 1,000 words because you would lose 99.9% of the audience. In fact, I would say you'd probably lose 99.99% of the audience. If it took 1,000 words, show me the picture, and that will go viral. And you're doing people a service to give them an idea that travels 1 million times faster, that is 1 million times easier to digest, because people just don't have time. They're busy. They're being inundated. And when you see those images, that is us communicating something cheerful, constructive, useful, perhaps profitable to someone. But like if someone says, hey, I wrote a book on this, here's the book, do you want to read it? I mean, how many books can you read? Literally every book written in the history of the human race is available for free to you right now. Do you really want someone with a good idea to give you 250 pages and tell you to read it? Or do you just want them to boil it down to one sentence, one tagline, or one picture? Because, show me the picture. Okay, got it. Now I can move on with my life. Thank you.
You're making a lot of sense to me, Michael. Stay with us for a second. Let's bring in our social correspondent of the day, Gal Francis Allie Canal, with some of what she's hearing from our online audience during this interview. Allie.
No, Brian, Michael Saylor just talking about infinite content on social media, which is the perfect segue. Since we are talking and taking your questions on social media, plenty of viewers chiming in. Starting off with a strong one here, Michael. First question, do you see Bitcoin catching up to and surpassing gold's market cap by 2035? What say you?
I do. I think we're in Bitcoin. We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
And another social viewer wants to know, why should an investor buy strategy stock instead of a Bitcoin or spot ETF?
If you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, our mission and strategy is we want to give a
Just sitting here watching. Market's tired at the moment, just consolidating. Daily looks fine. 5 minute could go anywhere at this point. High of the day, just overhead at 67.58. We've got a C pivot now. Looks like a C pivot.
If your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit, a treasury credit product like STRC. You'll outperform your money market. You know, you might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, you know, in a month, in a quarter, in a year, and you don't have to, you know, worry about
Right now we're looking at a potential C pivot. MACD is still pointing lower.
Is already almost in the tank here, and we got to think about December trading, which tends to be quiet towards the end of the year, just in time for the Santa Claus rally, with a few exceptions. And on today's Stocks in Translation, we break down how stocks.
Dow Jones, Merck up 4%. I did take a little bit of these 100 calls off. I'll buy some more on any dips. Pharmaceuticals not showing any signs of dipping anytime soon. Why did you take profits then? Because I had a pretty large position in Merck. 100 calls. I had the 95s last week. I sold the 95s yesterday, rolled some into the 100 strike. And I still have a pretty decent sized position, but I just wanted to take a little bit off. Okay, here's J&J. Lilly, XBI. If you don't want to buy individual names, XBI, the biotech ETF, or IHE, the pharmaceutical ETF, IBB, the NASDAQ biotech ETF, trending higher. Individual names like Regeneron continue to rip. Applied Materials, chips, looking good, back to the top of the range. You could sell an iron condor on this one. Possibly stays in a range. I'd go out maybe 2 weeks. Analog devices. Big move today in analog devices. Lulu with a nice trend break back above the 50-day.
Into the middle of the month, and then we will accelerate into new highs into year end. I would separately add that by the work of Almanac Trader, that's Jeff Hirsch, he's a friend of Stocks in Translation. He has also said that when markets are up big, the way they are now, coming into December, we tend to see consolidation for the first half of the month. So we might expect a little bit of sideways, but again, anything can happen because what we call seasonality, those tendencies.
Back above the 50-day. Lulu looking good. Christmas should do well, I would think. Lulu. What's TJ Maxx doing? TJX breaking out.
This is the VIX volatility index. And a quick refresher here, the VIX goes up when stocks go down, for the most part. That's just kind of a loose interpretation there. But the green line is what has happened this year. And again, I'll point out this big post-Liberation Day spike. We haven't seen anything like that in quite some time. And then we had a couple of volatility spikes in October, and then I believe just a few weeks ago, and those were pretty muted. Nevertheless, the white line is the average for
Vanna squeeze, yep, looking very good.
October. It just kind of gently stair steps down into the end of the year.
Very nice.
And that's as traders go on holiday. We don't typically see a lot of volatility, so it would be really unusual.
Okay, S&P turning back up pretty briskly right now. S&P turning back up briskly. VIX dropping off to new lows. VIX dropping off to new lows.
First of all, we have markets. Well, they tend to go up or at least sideways as volatility drops. Stocks rarely crash, but 2018 that was a big exception. When we do see big.
All right, about to break out here. S&P. VIX moving lower.
That observation actually comes courtesy of Almanac Trader, who also notes that when stocks are up big into the end of the year, as I just noted, we tend to see that consolidation for the first half of the month, and then a rally into the second half into the end of the year. Also, although we didn't talk about it today, small caps, they tend to do better than large caps, the S&P 500. And finally, you probably heard of the Santa Claus rally. It is actually the last 5 trading days of December, plus the first 2 of the new year. So that's your start for 2026. And for more portfolio tuning tips and tricks, tune in to the Stocks in Translation podcast.
New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast. Stay tuned for more Market Catalyst up next.
All right, VIX, big, nice big reversal here. Continues to move higher. Big breakout, S&P 500. Okay, latter half of the day. Okay, MACD did turn up. MACD turning up. Back up to the high of the day. So far rejected.
Currents of change flowing together. They converge into a powerful oasis of technology. Hanwha builds what the world needs. Hanwha turns innovation into impact. Sustainable solutions for Earth, for life. Hanwha.
Let better than bouillon magic begin when you scoop a spoonful and stir it in. Breakfast casseroles and green beans with flair, prime rib or deviled eggs to share. Because everything is better with better than bouillon.
All right, let's see if we can't get a breakout here. ABCD pattern.
You scoop a spoonful and stir it in. Chicken noodle, creamy rice, and more. Beef stir fry or fettuccine to adore. Because everything is better with better than bouillon.
I'm a former NASA mechanical engineer. I originally started on YouTube showing off some backyard science experiments, and now I'm doing experiments for viewers all around the world. Please welcome Mark Wilbur, everybody.
Did you know there's more than one Captain America? My dream is a super team with all the Captain Americas on it. But that will never happen.
We can make it happen.
What about Juggernaut versus Doctor Strange?
We can make it happen.
Stupid commercials. Stupid commercials. Jesus. Oh, boy.
Expecting here this earnings event.
Fair value gap.
I think, yeah, when you consider the AI trade, we've obviously been focusing on, and the market has, on the artificial intelligence, GPUs, data centers, enterprise computing. And Hewlett Packard is one of these names that does provide imaging and printing solutions for enterprise customers, personal computing for both the private and
Okay, Amazon more.
sales service technologies. The stock has been down if you look at it in the last
Amazon breaking out.
or in fact in the year-to-date
Meta
basis around
more.
25 or so percent, but they are
Breaking out. Meta breaking out. Microsoft next. Then Nvidia.
They're estimated to be around 15.02 billion, higher by about 6.8% compared to last year, around 14.06 billion. But earnings per share are expected to be down just slightly to 91 cents versus 93 cents for the same quarter last year. I think when it comes down to this business, you have to consider the nature of it. This is a very steady cash flow generating business. When in terms of growth,
Broadcom.
to be in the low to mid single digits, both in sales and earnings. and the earnings multiple for Hewlett Packard companies is right around 7 to 8 times earnings. So it's actually trading right around its historical averages compared to the growth estimates.
George, so that kind of ties into my question, which is what role is this company seeking to fill in a portfolio? I see the yield for dividends like 4.5, a little bit more percent. Yeah. Treasuries aren't that far from that. So you can make the income rate. You have way more principal risk here. It doesn't have a lot of growth, as you just mentioned. It's not a value play based off some of those metrics. Technically, it's struggled on like every time frame but the last week. Like, what investors looking at this over some of the other opportunities that are out there?
Well, a couple things. I mean, I was just looking at technically, you're right. If you look at the last 4 quarters, it's really near the lower end of a trading range, right around the $24 area. High of that range is close to 29. So you could make the case that based on that, there's a possibility from a capital investment standpoint that it goes back to the top end of that range, which is $3 to $4 just estimated where it's at right now. I think it comes down to 2. There's a possibility that if you consider personal computing as a catalyst right now, AI is creating a large demand on computing technologies. And, for what it's worth, maybe there are some folks out there that really haven't upgraded their home computing since the pandemic. That's about 4 to 5 years now. So there may be a catalyst there going forward. But again, the other thing you have to keep in mind is the public sector. Federal government does provide a lot of revenues for Hewlett Packard. If there's some additional contracts going forward, that could be a catalyst. So again, it's really a business that is one that is cash flow rich. They do pay a dividend, as you mentioned, Alex, about 4.75% yield. But relative to that yield, you have to consider the last year the stock has been down over 30%. So that yield that you generated from the dividend has been offset because of capital depreciation. But nonetheless, there may be, like I said, some upgrade catalysts for this name.
Okay, and so how do you see this name right now faring, say, against, I know not necessarily a perfect competitor, but we also have Dell earnings after the close. I mean, are we seeing some of that market share eroding to its competition, or are we seeing it still hold its own right now in this specific market?
Well, that's a good question. So Dell does have a dual business. They're in high-performance computing, which Hewlett Packard Enterprises is in, which is cloud and servers. And keep in mind that HPQ, which we're talking about, is personal computing and printing services and hardware. So I think Dell's catalyst really is effectively the high-performance computing, cloud service, software, and so forth. Whereas, again, if you look at Dell's PC segments, those have been relatively stable but not been growing very much. So you have to kind of separate these two companies out because they're not one and the same like they were in the past, because Hewlett Packard Enterprises is no longer part of Hewlett Packard Computers or HPQ. But nonetheless, again, I do think there's a possibility that being at the lower end of the trading range, that there is some positive momentum going forward, considering, again, it's trading near the bottom end of that range.
Yeah, and we close things out on a bright spot as we're up 2% today, and also pretty much at the session highs in the overall market. So we appreciate it, George Chillis, for that breakdown on, of course, HPQ into earnings. That'll do it for Alex and myself for Next Gen Investing for this Tuesday. We have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab.
Okay.
Market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. 2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
BOIL. OBIO. OBIO.
All right, so Broadcom, I'm looking at 10% and 20% as targets. If this does break out, it's pretty much a volume compression pattern.
Highlighted within this report. But as we have seen in the past, usually when consumer confidence starts to wane and move to the downside, that could also discourage purchases and consumption just in general. That could actually have a positive impact when it comes to inflation and the direction of inflation
here in the near term, which is once again another thing that the Fed actually could focus on. If we kind of move over and look towards retail sales, I would say that number was actually fairly mixed. Headline retail sales came in at 0.2% on a month-over-month basis. That was weaker than the expectations of 0.4%. But when you're looking at core retail sales, that actually did exceed the street's
Amazon, let me take a look.
At the end of the day, we are seeing a little bit of a mixed picture. Some of this data is a little bit delayed here, but if we continue to see this trend with consumer confidence or consumer expectations moving to the downside, as well as retail sales starting to stagnate here a tad bit, the Fed could get a little bit concerned that the economy would be weakening, and that could also once again support monetary policy that could be a little bit more favorable for consumers.
Indeed, understood. I mean, most of the latest prints that have come in really still support now and give the Fed Monetary Policy Committee a chance to do that cut. I mean, that's really what we've been seeing. What about the news on Alphabet, Google, and the opposite news on NVIDIA?
Yeah, this is definitely probably the biggest headline that we have seen today. We are seeing Google up around 1.3% in the session, well off the highs, but still positive and in the green, while NVIDIA is down about 3.6%. Once again, kind of off the lows, actually, if you're looking at this news. There was a report from the information that Meta is looking at actually purchasing TPUs from Google potentially, and that they could actually leverage within their data center rolling out in 2027, and also looking at purchasing some capacity from Alphabet in the near term as well, starting in 2026. And that could actually potentially dampen or diminish some of the demand that we have seen for GPUs, which is obviously what NVIDIA is providing. Now, GPUs and TPUs are two different type of processors in a sense here, but the TPU space is starting to get a little bit more traction after Google rolled out its Gemini 3 update. And so we are seeing a little bit of a gyration.
Okay, Microsoft trying to go more. Amazon's still going. Nice reversal on Amazon.
Just in general. Now, if you're looking at the SOX Philly Semiconductor Index, it's actually down about 0.7%. Nicole this morning was down about 4%. So we are seeing a recovery off the lows here, but this is a narrative that if it does hold and we start seeing a lot more announcements being made around these TPUs, maybe the market gets a little bit concerned that NVIDIA may lose some of its strength here in the near term.
Okay, Kevin Green, great to see you. Thank you so much. Appreciate it. Let's continue to talk about the markets, get a big picture here. Chris Kempitsas, managing partner at Barnum Financial Group, is with me. Of course, the AI trade has been exciting over the last few years. It's driven the markets. When there are dips, people bought them. And we've had some recent volatility. Do you have a plan on what to do with your AI trades?
Yeah, absolutely. Good to be here, Nicole. When it comes to AI, the reality is that we have not begun to see the tip of the iceberg of how additive this technology can be when it comes to corporate profits and even the consumer potential uses, let alone the corporate uses. So we're tremendously bullish long term. Now, has the easiest money been made? Perhaps that's a fair argument to make, but that doesn't mean that there's not a lot of room to run here in the intermediate and long term.
So when you see names like Google running, NVIDIA pulling back, you look at that, and of course I had a guest who said, I really like Google today, said I'm not touching NVIDIA and Tesla because they're just overexposed right now. Are there names in the Mag 7 that stand out to you more than others, or how do you decipher between them?
Yeah, we've liked Google all year, and we continue to do so. Google has been lagging its competitors in the space now for years, and it's finally now getting its moment in the spotlight, and we're seeing what potentially could be a tremendous tee-up to 2026 in the work that they're doing and the potential deal that they're about to possibly ink with Meta. It's a great tailwind going forward for sure.
And then you do have a barbell approach, I believe, or you had at some point. Is that still applicable now?
Yeah, it absolutely is. Now is the best possible time to have dry powder in the portfolio and look to take advantage of these dips as they come along. And even a correction is not an unhealthy thing. The market is priced to perfection here, and even
No, it's not.
earnings have not been able to quite sustain
No, it's not.
the current rally. So it's fair to say we're going to see near-term volatility. We want cash on the sidelines, and for clients that have diversified portfolios, a classic rebalance here, a good old-fashioned rebalance, might be just what the doctor ordered to take some profits and buy some of their year-to-date losers. Not a bad thing to employ here.
What about utilities? Where do utilities and maybe some other sectors fit in a portfolio?
We love utilities here for the reason that they're going to provide us income while we get paid for the market to settle down and begin its growth story again. And there's a tie, it's an adjacent play to AI because of the need for the energy and resources related to the data centers and the build out that's happening there. So there's a lot to like about utilities, and they have a much lower forward PE ratio than some of the more elevated sectors such as technology.
And then at this point now, when you think about the other areas, for example, Staples has been one area showing a little strength. Some of these are real defensive plays. I mean, international, emerging markets and Staples. Tell me about those.
Well, there's a lot of different ways to play defense, and one of those is to have cash on the sidelines to buy the dips in your growth names. But the other is to look for areas that are potentially on sale, and that's an approach that we want to take wholeheartedly here. So there's a couple different ways that you can do that. Consumer staples is a sector that's going to rise when the rest of the market, the growth names, are pulling back. You're going to get a healthy dividend, and you're not going to see quite the same level of volatility. Similarly, you might want to consider employing an equal weight S&P index here. So in essence, you're sort of creating a natural rebalance in one fund by getting exposure to a lot of sectors that have pulled back and are really just starting to see a little bit of an advance.
What do you think about the 4% on the 10-year bond yield right now?
Yeah, who knew we would get here just a little while ago? It's interesting to see how we've come so quickly, quite frankly.
I know, that's the whole thing. It's the trajectory that I was thinking. We were at 14, and it wasn't long ago that we were at 398. We went up, we went down. Ultimately, mortgage rates should probably come down. We've had 3 weeks of gains. I got to see the latest one. But that could help housing and the economy and things like that. How do you feel about the economy right now?
Overall, the economy is starting to show cracks. You look at the data, housing inventory is up something like 15% versus a year ago. And now consumer confidence, the latest reading, has plunged. The University of Michigan reading, it was near all-time lows. So that's a major concern. But what people want to keep in mind is that consumer confidence can often be a contrary indicator. So when it goes low, historically, we see the market rally months after. And so that might be a sign that we may be seeing an opportunity to the start of 2026. And I really like that positioning in my portfolio here.
What happened to seasonality? I mean, the Dow's having its worst month since April. November, December, January, usually good news. Some Santa Claus rally. Do you expect some more turnaround volatility? Because right now, when you see down arrows for the month,
Amazon continues to push. Looking for S&P to do something here.
It's easy to get nervous here. The last time we had a down December was 2018. And look, sometimes the market can't just go up, up, up. It is okay to take a little bit of a breather. But when corporations are registering triple plays, revenues up, profits are up, and they're raising guidance, that's not a sign to be fearful. That's a sign to be prepared. That's a sign to get ready to deploy that cash. It's a sign to be able to take advantage of a rally to come, as far as we can tell, and we're excited about that.
Look, you have names that are doing well today: Merck, Home Depot, Nike, Salesforce, Walmart. Some of the best performers on the S&P 500 today. Chris, good to see you. Thank you so much. Chris Kampitsis.
S&P continues to fade.
Coming up, Options Corner, and Rick Ducat will join us and highlight unusual options activity from the day, how investors are looking to trade on recent news of Wynn, United Therapeutics, and Eastman Chemical. We'll be right back.
S&P continues to fade. Yeah, 3 white soldiers on Amazon, definitely.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing Online series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, we got an hour and 45 minutes to go. Hour and 45 minutes to go. Been a good morning. Lunchtime, a little fade, a little choppy price action. Feels like we're going to get going here again.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
All right, continue to drift lower.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We welcome in Rick Ducat, lead market technician, is with us, and we're looking at some names that you found some really big, interesting trades. We'll start off with Wynn Resorts, which is just below, about 5% below its 3-year high. Tell us a little bit about the trade you found.
Yeah, and just to kind of explain this segment today a little bit, the theme here is extremely outsized trades. So I'm talking about trades that are a very
Okay, we'll continue to drop off here.
volume in names that you might not recognize as household names, but when we get to the dollar amounts, I think you'll be a little more interested than you might think at first. But to start off with Wynn Resorts, not much specific news other than some positive analyst coverage here. Citigroup upgrade today, price target bump, a nice move from 160 from 124.50 to buy from neutral. A bit more of a mild price target increase from Morgan Stanley, 132 from 130, and they also kept their buy rating. But really not a ton of specific news. Seems like Thanksgiving travel season is looking pretty strong here. The trade in question, minus 7,500, March 20th, 140 strike calls, and a 650 average credit. So this was done as a sweep type trade. It was several different transactions that took place all at the same time here. $4.8 million credit received. So quite a large dollar amount here for this. Open opening trade. Remember, all three of these are indeed opening trades. The volume is greater than the open interest for all three of our trades today. 115 days out, so we got a few months here for this one to play out here. Break even 146.50, about 15% to the upside or so. Our expected move for that same time horizon, according to the options market, about 19.5%. So within the boundaries of this potential expected move here, but near the upper end here. And remember, even though this, as it stands alone, a neutral to bearish play, that's how short calls would play out here. It makes me think that we could see this being paired with an existing stock position to give us covered calls. Otherwise, it would be naked short calls, which could be extremely risky, as they would bear the potential.
All right. Hedge flows lower.
Could theoretically go up to infinity.
All right. Well, right now, wins at 126.96 off the 134 high and up off the 65 low. So we'll wait and see what happens. What about United Therapeutics? Now, this is a name also not too far off the highs. You found a bullish trader making a
Walmart looking good.
rate. Tell us about this.
Yeah, for sure. Once again, not exactly the most common name that you might hear about. A biotech
Merck off the best levels of the session. I took a little bit off into strength. Home Depot turning.
Pulmonary, arterial, hypertension, some of these more rare diseases. September 2nd, if you look at our chart, we saw a huge rally on positive data for one of their drugs for another type of heart disease. Their shares are up like 60% since that September 2nd spike here. But not really a lot of specific news today once again here. But the trade in question was quite large here. So this was a trade with three different legs here. So plus 3,800 January 16th, 480, 520 call vertical. So a long call spread there. And also it was coupled with minus 3,800 January 16th, 440 strike puts. So buying a call spread and also selling puts to give what's commonly called a risk reversal type of trade here. So what we do see then is that we had a $5.65 million debit paid here, and we can see as well that we have that long flat area there that represents the debit paid. Then we have where we would have our call vertical come into play, topping out with our max profit at $10.5 million here. Max loss could be quite substantial there. We do have the situation where we have these short puts here, so that could be something to keep in mind here. If you were planning on a similar strategy at home, the short puts there are not covered in this case. But when we look,
Okay, we're looking for a pivot.
Shorter term trade, 52.
Looking for a pivot around 67.40. Moving back down below this level.
2.3% to the upside there. Expected move about 10% here.
67.35 could be an area we might bounce.
Options volume here, 178 when I checked it earlier today. So extraordinary activity.
67.45.
This trade alone was about 34% of the total market.
I love these trays. I mean, talk about size. You really are finding some good ones. They'll definitely be of interest to folks. What about Eastman Chemical?
Right. So this is another company, a specialty chemical company, all kinds of industrial products, a wide range of specialty chemicals here. Photography fans might recognize it as being a spinoff of the Kodak company, Kodak Eastman in the 90s here. But for now, though, again, very little actual news here. Earnings seem to disappoint earlier in November this month. Price target cuts from
Put sellers have tapered off.
after that announcement here. But what caught my eye is that Vanguard.
All right, the whole market's tapering at the moment.
They now own about 12.7% of the company. So about 14.6 million shares worth like over $1 billion here. So that was the only news that I saw about this particular name here. Once again, though, a very outsized trade with a pretty darn big dollar amount here. So what we had here was two sets of long calls here at the 70 and 80 strikes, plus 8,000 March 20th 70 strike calls at a 230 debit, and also the same amount of the 80 strike calls at a 70-cent debit here. So about a $3 net debit for everything put together. That equates to about a $2.4 million debit paid.
MACD still trending lower at the moment.
About 73, the expected move
I need to see that turn up.
right in line. So you'd need about a 19.6% move to break even. Expected move moves about 3%, plus or minus here. So someone making a very large bet on a bigger than expected move in a company that sees not really too terribly much trading activity here. So when we do look here, our break even $73. We've got 115 days out, much like our first trade. In this case, 16,000 lots here. If you put both legs of the trade together, total volume only 16.7 thousand today. So 95% of the total volume. The sizzle was around 30 when I checked last time here. So again, a very notable trade and a rather a quiet name today.
Okay, thank you for that. I saw a few. Wells Fargo has an overweight, and Wells Fargo has this price target of 70, but it really it's a real. We see Mizuho at 68 with an outperform, so we see a wide variety. Rick Ducat, great to see you. Thank you for Options Corner today. We appreciate it.
S&P fade.
We'll take a look at crypto. Obviously, crypto's had a tough time. We've seen
Hedge flows fading.
85,000 or so. Why the recent weakness, and does it continue?
Hedge flows fading from the high. All right, I'd like to see those turn back up.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
All right, just watching the put volume.
We're just getting started. Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns.
S&P is trying to bounce 15, 30, 60 euro on buy signals.
You can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hedge flow starting to turn. Let's see if this develops into anything.
Identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
We're sitting on top of the 67.45 zone right here. 67.45. Positive gamma. I'd like to see more positive gamma below build.
Curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. We have a few movers for you in the market right now. Keysight Technologies opened at 3 years.
Looks like a bear flag on the S&P.
Now raise their price targets on the shares after the company's earnings. Company beat fourth quarter earnings estimates and issued first quarter guidance well above the street estimates. And after today's move, shares are up nearly 60% from April's low. AMD moving lower this afternoon after a report from the information that Meta may use Google AI chips in its data centers. And it's been a tough month for AMD. Shares are down more than 20% so far in November. All right, we can talk about crypto now. And Rand Nooner's with me, co-founder, crypto founder, CEO of On-Chain Capital. Joining me now. Good to see you. Thank you so much. What do you make of the weakness we've been seeing? It's obvious, right? We went from 127,000 in early October down to 80. What's going on in Bitcoin? Does that continue?
So it has been a really tough time for crypto, I think, as everybody knows. And I think if you look at when the tough time started, the tough time started somewhere around October 10th. I'm going to actually just share my screen just so that you guys can actually see the screen. Can you guys see the screen over there?
Yeah.
Okay, so as you can see, if you look at when the weakness actually started for Bitcoin and crypto, it started around October 10th. And that was the biggest collapse that crypto has ever seen. We had about $20 billion liquidated in overnight. We had 1.7 million traders liquidated. And it really was a total collapse of a lot of the areas inside crypto. And if you look at crypto since then, crypto hasn't really had a meaningful bounce. Now, until recently, it's been quite a mystery as to why we seem to have tanked exactly around October 10th, because all the macro conditions are good. Crypto, which usually follows the NASDAQ, is also, the NASDAQ was doing very, very, very well, right? So there was a bit of a mystery as to what actually happened. Then a few days ago, we got another big dip down, and you can see it on the chart over there. And now the whole picture is actually starting to make sense. And I want to actually explain to your viewers exactly what we think is going on. So as you may know, one of the biggest buyers of Bitcoin is Michael Saylor and MicroStrategy. They've been one of the biggest buyers of the entire
Hedge flows trying to turn back up, having some difficulty.
3.2% of the total Bitcoin supply. And they've done this by selling Bitcoin or access to Bitcoin to TradFi using credit lines and using pref shares and a whole lot of other sophisticated and engineered structures, right? However, on the 10th of October, something that really wasn't amplified was an announcement that was made by MSCI. Now, obviously, your viewers know who MSCI is. MSCI is effectively an agency that creates indices, so to speak. And if shares are included in those indices, then the passive index followers actually buy those shares. And if the shares are not included in those indices, then the passive index trackers don't actually buy those shares. Now, what the MSCI issued was an extension of the consultation of digital asset treasury companies, where effectively what they're saying is, if a company holds digital assets, which are over 50% of their total assets, then the company...
Hedge flows are trying to turn back up.
From the passive indices.
Still looks like a bear flag for now.
What that would mean is that companies like MicroStrategy, which is one of the biggest Bitcoin buyers of the cycle, and there are many others that deal in a whole lot of other crypto assets, would effectively automatically be excluded from MSCI indices. And that would create a lot less demand for the shares, and it would make it quite tough for them to raise more capital.
I understand. Let's talk a little bit about the big picture here, because I understand what you're saying. When it's over concentrated or it's too much, then it can't be included in indexes, and the funds that are tracking those indexes don't buy it because it's too much. Let's talk about where we're headed. There was even talk of a software glitch at one exchange that maybe put things to the downside.
Still looking for this hedge flows to turn back up. We got a little short covering right now.
Anybody knows or follows Bitcoin, what you know is that Bitcoin has many corrections. And if you can look at my chart over here, what you'll see is this is the history of Bitcoin corrections. What you can see is that in 2017, or in the 2017 cycle, so to speak, Bitcoin had multiple, let me just try and get a better view there. Bitcoin had multiple corrections. Most of them were over 30%. In 2021, the 2021 cycle, most of the corrections were over 30%. And now we've had our first real 30% correction since the ETFs got so heavy into Bitcoin. For those of us who've been here for quite a while, we're not too shocked about the correction, and we see it as a buying opportunity. Specifically, when we know that crypto assets respond very well to increases in global liquidity. And now there's a massive disconnect chart between global liquidity, or the increase in global liquidity, and the price of crypto assets. Historically, when the two have diverged like this, there's usually a catch-up trade when it comes to Bitcoin and crypto assets. Now, you spoke about a whole lot of other crypto assets.
Yeah. What about the other one? So this is a buying opportunity for Bitcoin. You sounds like you're positive on Bitcoin on the longer term, probably back to 100,000 or 125,000, I guess. Is that what you're saying? And then what about the others?
So I think Bitcoin definitely back above all-time highs. When it comes to the others, I think you've got to be very careful when you talk about the others, because I think there are about 50 million different crypto coins. And yes, you heard correctly. I said 50 million different crypto projects, because it's so easy to launch crypto projects. I think if you're looking at the major tokens, Bitcoin, Ethereum, Solana, those are the ones that are being integrated with the global financial system. And if that happens, then those cryptos should recover pretty well. If you're going to start investing your money into, you mentioned some of the dog coins, as we call them.
Looks like a bear flag.
Like that, then
Hedge flows turning. Looks like it's turning back down.
that the value of the network of those coins could ever be worth the fundamental value, right? And so it comes down to whether you want to be playing in more of a casino around sentiment, or you want to be investing in real fundamentals. I think in this kind of market, probably the smarter move is to put your money into the fundamentals, because the coins with good fundamentals have been hit pretty hard, and even they will give you a good recovery, which means that on a risk reward basis, I think you're probably better off playing the majors right now.
And what do you think about the government's involvement in crypto in a way like we've never seen when you see central banks buying crypto?
So I think that if you look at a chart of the Bitcoin price, I actually want to show you something, because I think it's super interesting. So if you look at this chart over here, which is the Bitcoin chart, which I'm going to call up here, what you'll realize is that when Kamala Harris and Joe Biden lost the election last year, right, or here in November 2024, the price of Bitcoin was about $75,000, and today the price of Bitcoin is $86,000, which effectively means that the market we have, for the first time in Bitcoin's history, we have a pro-crypto administration. Now, I didn't say a neutral around crypto administration. We have an administration that is very, very, very pro-crypto. And it's not just any administration. It's the United States government that is super bullish on crypto. Now, the previous administration, unashamedly, wasn't very bullish around crypto. And so if you're saying around the previous administration that the price of Bitcoin was around 75,000, and now with the new administration, with a pro-crypto SEC, with a pro-crypto administration, with talk of a American Bitcoin strategic reserve, and you look at the price, and the price has only gone up about 10%, I think that's another motivator for why right now the price and the fundamentals of the asset just don't make sense. It feels very disconnected for an environment where the majority of where governments are turning favorable towards crypto.
All right, Rand Nooner, thank you, CEO of On-Chain Capital. Great to see you, Rand. Thanks so much. See, he talks about the opportunities, not as worried as some folks. In the meantime, Technical Tuesday.
Just watching for what direction the S&P is going to take over the next couple of hours. Hour and a half to go, hour and 24 minutes to go. See what institutions plan on doing. Are they going to sell this? All right, so we continue to move lower. $67.30s, 67.30s, getting a bid.
sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
All right, the puts are starting to gain some value. The 6730s are bid a little bit over $2 now, $2.35. Just been watching those roll briefly.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Okay, we continue to move lower. S&P.
Welcome back to the watch list. I'm Nicole Petalides. Technical Tuesday. Time to dive into the charts. Kevin Horner, Senior Manager, Trading Services Education, is with us.
MACD is still negative. MACD is still dropping.
You know, it's been down. It's down about 2% for the month. We've seen it try to claw its way back. Some of your thoughts on the technical trends?
Well, the technical aspect here, Nicole, goes back to last week when we fell out of this channel that we've been in for the better part of the last 6+ months. And I think that's the big thing we're paying attention to right here is can we get right back into that channel as quickly as possible? Today, we've managed to push right into the 20-day moving average through the 50-day, but into this banner of resistance that I've pegged at around 6760. We've actually managed to hit this level a number of times over the last 6 to 7 weeks as a resistance area and have pulled back. It happens to be coincident with that uptrend line you see there, dating back to when we first recaptured the 200-day moving average. So we broke it, came back for a retest. That's where I started that.
Still a nice looking candle for today.
Broke when we took out the 50-day, and here today we're back through the 50-day, but our high has missed that 6760 level by about a point and a half. 6758 and change our intraday levels. So if nothing else, Nicole, I think bulls are going to look at that 6760 and say, hey, we can get through here. We can go right back to the highs. That's our target zone. But a rejection here gives the impression that we might need to reach.
Okay, 5 minutes on a sell signal now.
That we just bounced off.
15, 30, 60 still on buy signals, but intraday right now we're pulling back a bit more.
And of course, the Fed is still divided on the rate cut, so that really could drive this market one way or the other. Let's take a look also some of the healthcare names, some of which have been doing well. Take a look.
Yeah, you got it. So the idea here was I wanted to go looking within healthcare because it's been outperforming in the short run. The sector as a whole has been moving up quite nicely, and I found a couple of positions that are in different stages of potential moves. So the first one is Transmedics here. We're looking at this on a 2-year chart, and the reason I'm bringing the 2-year chart into play here is we wanted to tag those prior highs as a potential for a target to the upside. There's a potential breakout in the midst of the action right now, pushing through 146. You can see we got to that peak most recently back in mid-June, and then we pulled back and tested our uptrend line, our short-term uptrend line, in and around that 200-day moving average at 108. Well, now we're trying to push through this 146, make a new 52-week high with a close today. That could be fairly bullish for the position and might lead to a target zone in that neighborhood of 177.
Still looking for a B pivot.
Prior highs that we achieved back in the summer of 2024. So there's a potential for a breakout there, but this is an important level, and certainly we
All right.
not all breakouts.
They're taking a little profits on these puts. Still feels MACD is still bearish.
Closely, and what about this name? What stands out to you on these charts?
Well, the last time this thing bounced off the 200-day moving average, it made a 90% rally to new highs at 103. Now, it has pulled back aggressively here. We have noted that the pullback is more than 35%. Did find the 200-day moving average around that 66 level, 67 level right now, moving off of a zone of horizontal support just above the volume point of control, which is about a $3 range there from, say, 62 to 65 66, somewhere in that area. Now, we're at an important level for a lot of traders. The bounce has been nice, and a lot of traders are going to be feeling a little optimistic, like we could run to the 50-day there at 83 potentially. But if we paused here, you can't be surprised. You know, we've made a good move, and off the lows, we might need a breather or pullback here, make a higher low to keep this short-term thing moving. But if it can make a high over the 76, meaning close above 76, then some traders are going to look at that 83 ledge and the 50-day moving average as a potential spot for the next pause in a short-term bounce. But this was intriguing to me because it found that 200-day moving average, and the last time was such a nice move to the upside. We certainly don't want to
Meta still at the high of the day. Meta
go up another 90% after visiting the 200-day, but it does give traders an area to balance their risk.
Meta having a good day off the low.
On from the trade if it did get back below the 200-day moving average, as an example.
Broadcom looking for a breakout. Broadcom looking for a breakout above 52-week highs for a long setup. Swing trade. Reviewed that a few minutes ago. Broadcom. Looking for this volume contraction pattern to break to the upside.
I think bulls are discouraged by the NASDAQ 100, in particular the NDX is still below the 50-day. Yesterday we ran to that 50-day moving average at around 24,975, and we got there and then held. But today we did the exact same thing, got there and held, but we've not pushed through. If nothing else, once more, we have a feeling that bulls know where they're going to feel.
After a 170% move from the April 7th low, consolidation, going to lead to more upside, most likely. All right, we're catching a bid here off the low.
A deep enough pullback for a lot of traders on this position on this tech-heavy NASDAQ. So it wouldn't shock me at all if we got rejected here at the 50-day moving average. The interesting sector to me is the small caps, the Russell, and the Russell is pushing through today some significant levels. And obviously this is likely tied to the very, very dynamically shifting conversation around yields and our potential for another cut here on the 10th of December. So yes, it's a very important group, but that one has actually managed to push back through its 50-day moving average. So that is catching my eye at this point compared to the other two.
All right. Great to see you, Kevin Horner. Thank you so much. Always enjoy our conversations. And of course, Technical Tuesday, every Tuesday when Kevin Horner comes in. Thank you. All right. Now we're going to discuss some of the retail sales numbers. In fact, we're seeing some great numbers for some of
All right, so we're starting to see a reversal now. All right. Bulls, maybe they take this and run this a bit higher. I'd like to see us close above 67.50. That would set up tomorrow. We're at 67.45 right now. Trying to catch a bid.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
All right, back to point of control. Got rejected there.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
All right, so we can get above this level. That'd be great.
Investors, you know the market moves.
3.8 billion trading in that area. Nice flow. The bulls can handle this.
Whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Market's pretty choppy in this area for the most part.
Where are you going?
Big range with a smaller range here earlier. We broke down through that area. Now we're seeing if we can bounce back. Looking for a B pivot.
Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
All right, welcome back to the watch list. We've got a good look at some of the retail numbers over the past couple of weeks, and there were some.
There's no iron condors for tonight. I'm trying to get into some work day, but I can't get filled, so. Probably could just go ahead and cancel that order. Cancel it.
Actually, I am feeling pretty optimistic about the outlook. I know that a lot of the surveys out there are saying that consumers are probably going to have about flat spending relative to last year. So add some inflation to that, maybe it's 3 to 4% or something like that. But I actually think that we've seen this great divide between consumer confidence, sentiment, and what people actually do. And I would not be surprised if we actually have a stronger holiday shopping season than a lot of people are expecting. People have been finding different ways to economize and maybe save up their money in order to perhaps splurge a little here during the holiday time. So I'm thinking that retail stocks in general, we actually have
Goldman Sachs starting to rise again. All right, that credit spread.
the upside for Black Friday or Cyber Monday. Maybe that can help propel those stocks going into the year end.
Thank you for that. Dick's, Kohl's, Abercrombie, Best Buy, all without that.
Okay, yeah, looks like we might get going here. All right, the put's dropping off pretty dramatically here. The S&P's taking off to the upside. All right, we're back up here, 6760s for a quick trade.
Is affordability. A lot of retailers from Walmart, even today, we saw Kohl's and Best Buy are telling us that we are dealing with a discerning consumer that's very deals oriented. And in a collaboration with Centric Market Intelligence, what we're finding is that this year, especially going into Black Friday, the bulk of retailers are offering significant less discounting than they did.
All right, bought those for 75 cents. Starting to push a bit higher right now. Okay, so I bought some 6760s, just the 10 handles above. We're at 6750. I could have taken those, but we can get the 6760. They were pretty cheap. 70. Okay, we got a high tick alert.
Jewelry always does well during the holiday season. And then
See if we can't rip this back up to the highs. Okay, the institutions are helping us out. This time of day, we're always looking for what institutions are going to do. Are they going to buy? Are they going to buy the dip? What are they going to do? So right now, it looks like hedge flow is turning back up. We'll see how far we get with this.
that she listed there, Five Below, I know my niece likes that place, and I've gone in there, and it's actually kind of impressive, some of the selection that you have. But there's, let's see, what did Kohl's do this morning as far as the stock price? Even though they've had 15 quarters in a row of a decline in sales, now that they have a new CEO who is
Okay, we're already up there. Already $1.55.
he has great pedigree. They're also up the street from us here. It would be nice to see if they could turn things around. Perhaps as people are looking for some of those bargains, they don't necessarily have to scrape the bottom of the proverbial barrel in order to find good deals. I also agree in terms of the
Okay, just sold half at $1.55.
for like Black Friday specials. They've been a little underwhelming. And so I kind of feel like a lot of the retailers that she listed are probably in a good position where they just have good cost discipline in general. And that's one of the reasons why we're optimistic on that sector as a whole.
And a quick thought on Jay Powell does not need to be the Grinch that stole Christmas.
Okay, let's see how far they take this. They run it back up to 67.60. These calls could inflate very quickly. Yesterday, at the close, we saw like a 50 cent call going to like $4 within like 5 minutes. As we watch the S&P and the NASDAQ gain a lot of advancer stocks, market's looking pretty good here.
I do fear that's the thing that could really be the Scrooge or the Grinch that stole Christmas if the Fed doesn't cut rates. There's not a lot
Okay, Bitcoin bouncing. Nice. Bitcoin, nice. Thank you, Mondo.
Is the Fed, and I don't think he really wants to be known as the Grinch who stole Christmas.
Right. I mean, you're saying look, a cut.
Nice pop there. All right, should I take some more off of this? Okay, I'm going to take some more off. Okay, so I just took a little bit more off. I got 5 left. See how far this goes. Same thing with the puts now. The puts are only 50 cents, 55 cents for the 67.30s. If they roll this back over and create a lower high. Note MACD has yet to turn. MACD has yet to turn. Okay, so this could go either way. Are we going to get a lower high or we're going to break out here? So I'll keep some of these in case we break higher. Hedge flows attempting to turn back up. Hedge flows.
Because when we do break down the discount data, the premium sector is actually the one offering the least amount of discounts out of all of the sectors. Whereas the specialty is going to be offering almost 70% of their merchandise on sale, followed by the department stores. But to your point, yes, the high-end designers are wanting to maintain that exclusivity, and therefore they're going to be offering less discounts this holiday season. All right, Jerome Martis of LSEG, and Brian Jacobson. Thank you so much. Annex Wealth Management, Brian Jacobson. Thank you. Good to see you both. Thank you, friends, for being with me here on the Watch List every day at 9 a.m. and 2 p.m. here on Schwab Network. So glad to be with you. Keep it right here. Market on Close is next.
Okay, it looks like we could get something going here now. A little bit more. Looks like they're going to go a little bit more with this. See how far they can take this. S&P.
Webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network.
Okay, here we go. A little bit more. Okay, I got 5 of these calls left, so 75 cents to 250.
Change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas.
Okay, this should look pretty good. 250.
accuracy and precision.
Nice turn. 5, 15, 30, 60 on buy signals. Tick cumulative is still very strong. Love when we see institutions buying in the end of the day.
Actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. 2025 kept investors on their toes. Now, get ready for the road ahead.
MACD is on its. MACD is rising. MACD is starting to cross over, perhaps. Okay, in the lower panel, MACD is trying to turn. Momentum is with the bulls right now.
Tuning on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caton, coming to you live from our Chicago headquarters. And I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the CEO of DigitalOcean to discuss the company's latest quarter and check in on its AI ecosystem and where the company can go from here. Today's overlooked stock is Keysight Technologies, which has rallied to a more than 2-year high after its latest earnings report. And speaking of those earnings, we'll have live reaction to Dell and Zscaler as soon as those reports are released after the closing bell today. Marley, take us through what you're watching today. Sam, I've been keeping an eye on Alphabet as it's closing in on that $4 trillion market cap level on reports that Meta is considering using Google's AI chips in its data centers starting in 2027. That deal said to be worth billions of potential dollars for Google. Nvidia shares also took a nosedive on the news, still down about 4% right now. And it was a day of retail earnings. We saw Kohl's moving almost like a meme stock after a discount store chain surprised investors reporting a profit and a big
S&P going. All right, we're going to take the highs of the day here.
Best Buy also higher today after it topped Wall Street's quarterly sales expectations and hiked its full-year forecast. The electronics retailer says that customers are upgrading their devices, their COVID-era devices, and splurging on new phones, new computers, and new gaming consoles. Now, before we get to that and more top stories, let's check in with the markets as we near the end of the trading session. We are green across the board, a change from earlier in the day. The S&P
All right.
More positioned in equities because they think the outcome for the Fed is skewed to the dovish. But at some point, I think 2026.
MACD is still bullish. Got a crossover now.
Close to being done with the accommodation, and that might mean the Fed part of the bull case is less compelling.
Did we overdo the worry about AI last week, or what was that all about? You think?
Yes, and I think we did overdo it, and I think it was mostly when you decompose it, a couple technical things in the market, some hedge funds selling, some delevering, some ETF selling, some short gamma positions, so it's technical stuff because the fundamentals
I think are still
Hedge flows.
Showing any weakness. Young, you're pretty positive on the market, aren't you? You don't think? You think the Fed is going to cut in December, right?
Yeah, definitely. I do think there's a very high likelihood the Fed will cut in December.
6.2 billion in flows. Not the best, but definitely good.
Will fall in line behind that, and I think the prediction markets reflected that.
Yeah, because it was. I think the thought was, okay, December's 100%. Then December was close to 0%, and now we're back moving towards 100% for December. Is there any risk in that for the rally here?
Well, I think what the risk is the messaging when the Fed cuts rates, because we do think that's going to come in December. I think when the Fed cuts, what's the messaging? Is it a hawkish cut? Is it more of a data-dependent, let's see where things go, or is it more messaging that we're probably at a pause level for the foreseeable future? So I think that's where the risk probably comes in here, but I do think that incoming data will probably be on the soft side and will lean the Fed toward dovish in 2026.
Bryn, is that overall bullish for where we go from here, despite some chop we might have or some increased volatility?
I think it has to be, because if we can actually get long rates to come down, as you pointed out, as they have today, plus don't forget we have midterms, and the second year of a presidential cycle is typically the best of the four. Midterms, I think, are going to be incredibly important. So I think the fiscal side of the economy will start to get.
Okay, we're starting to rip here. Looking really good.
And the long end stays down. That's great for housing. That's great for hard assets like real estate. And so I think it can set up where GDP and the economy are actually starting to pick up. And the key will be obviously if those inflation signals can stay anchored. But I definitely say between earnings, don't fight the Fed, which I'm a big fan of. Even if they're coming kicking and screaming, that definitely bodes well for the economy. And with earnings backing up the economy, I think that would point signs that the market will continue to go higher.
I'll come back to y'all in just a minute. I want to expand this conversation, though, on the prospects of a new Fed chair, and maybe if it is Kevin Hassett.
Nice move here on the S&P
Richard Fisher, he's the former Dallas Fed president.
with 55 minutes to go. 55 minutes to go.
Do you like the report?
Yeah, look, it would follow tradition. Janet Yellen, Ben Bernanke all came as former heads of the Council of Economic Advisors. Even that's where Kevin Hassett was before. And we've always talked about the two Kevins. Now, the only drawback to Kevin Hassett is he's not as photogenic as Kevin Warsh. The president likes good-looking people, and Kevin's a handsome guy. But I think it follows with tradition. I think Hassett is highly respected, probably more respected by the Federal Reserve staff to the board level than Kevin. Although Kevin's very talented, capable.
Looking for more upside. Looking pretty good. The markets are not saying reversal at this point. Looking really good. Hedge flows continue to rise. We're above these levels.
Was there. We had 4 governors vote against him when Reagan had instructed those 4 governors to argue for a discount rate cut, and Volcker resisted. He had 4 governors vote against him. Alan Greenspan had 2 governors and a president vote against him at one interval. As you know, Ben Bernanke had 3 presidents vote against him. I was one of them on a couple of occasions. So there's too much made out of this division. And as Scott Bessent said this morning, I thought it was an excellent interview on Squawk Box. These aren't, they're put up like baseball cards, but
Looks like they're just going to keep pushing this.
best. Focus on what's right for the
Looks like they'll keep pushing it. S&P. Torturing the bears. Very nice day. Very nice day for traders in the room. I see most of you making good money. Nice.
Same thing with Mary Daly, who just talked about this recently. Highly regarded San Francisco Fed.
The reason, Richard, why people aren't necessarily surprised at all by the Hassett name being floated, whether it's a trial balloon to see what the market does or not, who knows? But it's because there is a belief, at least in some corners, that Hassett would simply do the president's bidding. President wants rate cuts. Hassett's he's gonna cut rates, or certainly he's gonna advocate for it with the committee.
Yeah, but look at Myron. He hasn't been able to convince. Good guy, by the way, but he hasn't been able to convince anybody else on committee of his argument.
I know, but with all respect to Myron as a governor, he's not the chair.
That's true, but the chair has to convince the committee, and I just gave you one of those glaring examples. The most powerful, most significant Fed chairman in our history, Paul Volcker, had 4
governors vote against it. So this is
Okay, we're going some more.
to do, and he's going to have to really get the committee behind him and convince they are not dictators. They are consensus builders within the committee. That's how it works, no matter who's the Fed chairman is.
But for a president who I think has made no secret of the fact
All right, here we go. Gonna keep going.
from those that he appoints into
Gonna
positions
keep
that he
going.
has the power to do so, do you take
I keep saying 6750s. Those are from earlier, 6760.
do you take this this name in any
Wow,
way
look at this
that's
freaking market.
true to be a
Holy smokes.
of the Fed, given the person who's making the appointment and how we know he feels about the people he appoints to different
Okay,
jobs?
futures, we just tagged 6778, 6778 on the futures.
He's learned a lot since he's become Secretary of the Treasury, how complicated the Fed is, and how it's just not simply about the rate cuts or the balance sheet or just the regulatory side. It's a complex organization. So I thought that was a way of sort of backing away from the president's focus on rates. Whoever's in charge, in my opinion, given that there are 18 other people at the table that they have to carry, is going to have to worry about what's best in terms of delivering on the dual mandate. And if they go too far, they carry out too far, and let's say they adopted Steve Myron's approach to, and they got the committee to do it.
Google, let's see what the, all right, NVIDIA turning back up, NVIDIA turning up.
I doubt that's going to, even though this president would like to get control of everything, but he also backs off of things once he makes strong declarations, and I think
Snowflake pop.
appointment would be backing on somewhat, particularly given what Bessent said this morning.
Interesting. I'm going to get back to my panel in a second, but last question to you. If you had a vote in December, would you be a yes for a cut?
I probably would be. I'm sort of on the fence, and here's the reason why. In terms of the data, we don't have the hard data we'd like. I would want to listen to all 12 Federal Reserve Bank presidents, what their reports are in terms of what's going on in their districts. My guess is the net balance of what's going on in their districts is a little weakness, maybe more weakness than they expected in the last meeting. And if that's the case, then yes, I would be in favor of a quarter-point cut, as long as they don't report that inflation is getting completely out of control, which I don't believe is yet the case.
Well, it could be a hawkish cut.
Very nice.
So we'll have to wait and see. Wish you a great Thanksgiving, Richard. Thanks for being with us, as always.
Thank you.
That's Richard. That's Richard Fisher. He's the former Dallas Fed president. Give me one quick word on this as you were listening.
I think the balance sheet's what's going to matter the most. I think at the end of the day, if they do 2 or 3 more front ends, it's less important than if they start getting more dovish with the balance sheet. You got to be bullish on equities if they expand the balance sheet.
All right, the other big story we're following over this final stretch, Alphabet's ascent towards $4 trillion in market cap got close today. Dee Bosa is here with more on that stock's remarkable run. It really has been remarkable over the last 6 months, Dee.
It really has been, and TP is sort of the cherry on top because Google already has the best model with Gemini 3. It's got search, Gmail, YouTube, other products. That gives it distribution and data. And now with Meta, a potential custom chip or TPU customer, you have real vindication of that strategy. This vertically integrated play. So even if TPUs are not the NVIDIA disruptor that some are calling for today, wider adoption of them is good business for Google. They only run on Google Cloud, so that is sticky infrastructure revenue and could give it a leg up on the other hyperscalers, Azure and AWS. Now you can see how the market is positioning around that story.
Okay, our little fade now from the high. Snowflake continues to move higher. Meta.
Momentum, Broadcom, they have surged. Meanwhile, the OpenAI exposed GPU ecosystem has pulled back. So this really puts it in perspective over the last few months. But because Google is so vertically integrated, Scott, meaning that it owns the model, the data, the chips, and the cloud that runs them, Alphabet shares, they are the main beneficiary here. As you said, market cap within striking distance of that $4 trillion now.
Yeah, Dee, thanks so much for that perfect look at what's been happening with this stock, which really has been remarkable. Bryn, you own it, so I'd love your take, but also this idea that Tony Pasquarello puts forth today, that, and maybe this is a great reminder of it, there's just going to be a lot of dispersion within this group, more so than maybe we've seen over the last few years.
Yeah, I mean, that could be true, but I think ultimately where I think OpenAI is kind of back-footed here is, Sergey's back. Sergey Brin is back. And I think that you can definitely say it's causation, maybe a little bit of correlation between him coming back, him kicking down the bureaucracy. I mean, understand earlier this year, Gemini was banned from being allowed to code inside of Google. Like, that is insane. And he got rid of that, right? Working with Sundar. And so my knock on Google historically has been, you don't have that founder mode. And I think with Sergey being back, you have this ability, this really need to execute.
S&P, everything's looking pretty good here.
To lose, and especially when you have Sundar with Sergey together, I think this is an exciting
Okay.
name to own for the next year.
Looking pretty good. Looking pretty good into the close. New York Fangs.
Next year, Young Yu, the idea of more dispersion within the cohort of stocks we're talking about, you agree with that?
I agree with that. I think it's very healthy for the market. I think it's a great sign that we see that. It's not the Mag 7 as a monolith. It's some being down 15, 20%, some being up 25%. And it wasn't that long ago that Google or Alphabet 6 and 9 months ago was kind of stuck in low gear. I think that speaks to the rapid developments in the space, the innovation, how quickly things can change, and why we shouldn't get too negative when there's this pullback that takes place, because innovation's right around the corner.
Hey, in your former life as a semiconductor analyst, how would you be viewing what's happening? Would you be putting out negative notes like this is insane, what's happening with some of these chip stocks? Or would it be totally justified in your mind?
Probably some weak triple breaking putt call of, near term, medium term, long term, so that I can't be totally wrong in all directions. Fortunately, I don't do that anymore, so I can take a shot.
But you have to analyze things, right?
I'll take
like,
your question.
Like NVIDIA. I mean, you could say NVIDIA is justifiably where it is in the market.
Look, my North Star for years, as you know, has been semis over software. I think we're in early phases of that, not the long phases. The world can't function. The most important asset on earth is Taiwan Semi. Okay, world can't function without them. If something happens to the three fabs, you have depression followed by hyperinflation, right? So it starts and ends with Taiwan Semi. Can't function without them. There are software companies now that are big that who knows if they'll be companies in 5 or 10 years.
What about Broadcom? When you look at Broadcom, the fact that Broadcom's market cap has overtaken Meta, that's incredible, isn't it?
Well, Hatan and Zuckerberg are buddy. I mean, look, at the end of the day, I think compute broadly probably grows 3, 4, 5% above GDP for the next decade with higher margins, and the businesses are probably going to grow much faster over the next 18 months as data center spends do. So if you want exposure to semis, I think the question is the market right now parsing between cash flow generatives, AI exposure and non-cash flow, or beneficiary or not. I don't really think I'm smart enough. I'm not Bryn. She is. I'm not smart enough to get these 3-month calls right on these big 8 stocks. Because as we just pointed out, Meta was everyone's favorite in January, and Google
Looking for a bounce. S&P futures look like they want to go some more. Crazy market here. Wow. 6760s are doing well. Huh. What are they going to do in the last couple of minutes? I'm going to keep a trade open just in case this thing rips. Wow, this is crazy. Feels like shorts are getting hammered.
On that case again today, looking at both, because both are a big story.
And Scott, just some color on the state of discussions. I've been hearing a credit investor at a reputable bank telling me this morning he's receiving more inbound calls from equity investors asking for clarity on this movement that we're seeing in Oracle's credit default swaps, what that tells us.
Uh-oh. Oracle's in trouble?
The company potentially needs to raise to fund its robust CapEx plans and the rapid development of data centers. Worth noting, Oracle's last debt raise of $18 billion was well received by the market. In fact, it was oversubscribed. So while there may be some more questions about Oracle's deployment of capital, there's clearly demand for it on the credit side. Now, separately, I spoke to D.A. Davidson Skiluria on the sell side. He expects that given the increase in commitments from OpenAI that were made subsequent to signing with Oracle, that it will need to reconsider the capital it's willing to raise and deploy. So if we actually see Oracle slow down its debt raises, that would be significant, Scott.
Yeah. Seema, thanks. A really big story that she really has been at the forefront of. Seema Modi, thank you. Bryn, I come back to you. Much ado about nothing. A market expressing a view in a short period of time that's going to be reversed. Not to mention the fact that Dell reports after the bell, which has been a story in and of itself in the whole AI trade too. How do you see those?
Well, I mean, I think Oracle is much ado about something. Something's called OpenAI, and I think they are, to me, are the most inextricably linked to OpenAI. And when you're like, this company is still nascent in its revenues, it's obviously negative free cash flow. Oracle's now going to go negative free cash flow to build this thing in the future. I think that has to be resolved. And I think, obviously, Larry Ellison has seen so many cycles. And I think with him still as chairman, there's a lot of they will get it done. But to me, as long as,
Okay, can we pop one more time? I mean, we don't have no much time left, so love to see this rip. Yesterday we had this nice rip. We had a nice rip in what was it? 67. What was it? 67.20, something like that. At the end of the day, they were like 50 cents, and like within about 5 minutes, they ran up to $4. Once saw the hedge flows turn back up as dealers were closing positions. So watch for that in the next 30 minutes or so. Watch for any kind of price action that may lend a quick trade, in and out, scalp.
I think there's a give and take here in the market, and these companies are going to take signals from the market. I think that's what people are thinking about or missing, perhaps, when I think there's just going to be too much overinvestment. That if there does look like there's signals in that direction, there can be some pullback in that regard. But I do think there's something real there that they do have to pay attention to.
I mean, I just focus on equities. So within the U.S. equity market, my interpretation would be if the bolus of companies don't raise capex.
Okay, looks like they're going to go here. Looks like they're going to run this one more time. Futures, can we run this?
Still high.
Can we go?
No matter how you do it, I don't think if they cut back on capex now,
67, 67, 65, possible.
I think the short term will be, wait a second, I thought you were confident. So I think Oracle's
Okay, can we pop this one more time? 67, 65.
They got to be neutral, and so they're saying, all right, well, this one's got a bunch of debt, and as Brent points out, that it's more, in the future than everything else, and so Huberson debt caused the end of anything. I'll take something that looks like it's gaining share right now and long it against it. So I think it's a little more tactical, very short term on what's happened to Oracle in terms of it's the easiest big cap lick one to
But
short.
you don't care as long as the capex numbers remain solid. You don't care if it's using some cash, using some debt, whatever you got to do to stay in the race.
I think at this point, the capex has to slowly come up. It's Goldilocks. If it comes up too much, then I think it goes right where people freak out. But if it comes up a little and you still say the return profile is there, AI trade will be on for another 6, 9, 12 months.
All right, we'll leave it there. Brent, thank you. Young you,
See you,
thanks
Brent.
you as
Happy
well.
Thanksgiving.
And Adam, you as well. And happy Thanksgiving to everybody. We appreciate you being with us once again. We're just getting started here. Coming up next, big money on the ice. The puck just dropped on CNBC's NHL team valuation list.
Come on, push it one more time.
Might surprise you.
Push it one more time.
Developments in famed short seller Michael Burry's big battle with NVIDIA. We have the full details coming up. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC.
Okay, watching the hedge flows here, watching hedging flows very closely into the close. I mean, yesterday they had a really nice trade. I missed it, but it was a quick trade. Let's see if that pops up again today. It would be nice. Okay. No? We're going to fade here? Okay. Okay. Meta continues higher. NVIDIA looks like it wants to pop a bit more. NVIDIA. Microsoft at the high of the day. Apple just off the highs. Spaded for much of the day. Okay. Snowflake higher. Looking for a Broadcom to go a bit more. Broadcom. Are we going to go? Are they going to pop this right here? It looks like they're going to pop it. No. S&P. Alphabet, Google. All right, looking good. Google looking good.
which is Google's doing everything. There's nothing wrong. They can't make any mistakes. But that's the kind of market we're in right now. I mean, honestly, I think Meta's a way better buy down here than chasing Google at current levels. But right now, investors, again, are just chasing the momentum.
Well, let me ask you, Brent, because we're talking about Google chips, but I do because I have you. I want your take on Gemini 3 as well. There was a lot of excitement there. I'm curious to your take on that as financial analyst. You know, I saw Salesforce, Mark Benioff, apparently now, Brent, he's a Gemini guy. He says not chat, GPT. What do you make of Gemini 3?
Look, I think there's going to be a world where we use multiple AI agents. So the topic that's happening in our work is it's not Gemini, it's not ChatGPT, it's not Perplexity, we're going to use multiple agents. We're not going to use just one.
Microsoft up, NVIDIA trying to go. All right, looks good. Looks good. Not a bad day. Not a bad day.
Technologies across the platforms are just getting better and better as you use them every day. There are going to be multiple technologies you're going to use. And so we don't believe it's a one vendor take all. We think there's going to be room for multiple agents. There's going to be room for multiple.
Walmart, looking for much more out of Walmart. Have January 100 calls on Walmart. Okay, have Google. Google, I got 320s for February. Like to see Google much higher. All right, we're going to go here. S&P going to go? Are we going to go now? Watch S&P. S&P is probably going to pop here.
Joining us now, the man behind the list, CNBC senior sports reporter Mike Ozanian. It's good to see you. Well, Scott, always great to be with you. Surprise with Toronto?
Hedge flows.
No, not surprised with Toronto. They're going to get a new local TV deal next year. It's probably
Hedge flows continue to rip higher here. Can we push this a bit more?
And one of the things we've seen with this list, Scott, like you'll notice, the Edmonton Oilers.
MACD is starting to turn up. MACD is starting to turn. Okay, watch MACD. MACD is starting to trend here. Looks like it's going to turn up. Looks like we might get something going here. Are they just going to? Are they going to tease us? They're going to tease us. What are they going to do here? S&P.
The peak was 2019. S&P Capital is projecting several $100 million lower in RSN money by 2026. And what's happening is some of these U.S. teams switching to over-the-air or direct-to-consumer. Most of them aren't getting anywhere near the amount of money they were getting from their RSN. The Rangers took an 18% cut from MSG Network.
It's interesting because we normally look at
60 minutes still looks really strong.
when figuring what that
Tick cumulative, beautiful looking tick cumulative. It's been green all day. We crossed over yesterday on the hourly time frame. That's the time frame I usually watch.
It's the local TV and the gate. Like the Rangers get $80 million last year at gate. The average for the league is $80 million. But to your point about the national deals, that's driving really valuations for all the teams because that money gets shared equally among all teams. The Canadian TV deal that starts next year doubled in value, and the U.S. TV deal, which is going to be up for renewal in 3 years, that also is expected to double. So the delta actually will be felt more by the bottom teams because their revenue's lower.
I was kind of expecting the Rangers maybe to be number one because of MSG. You know, you got the building.
And Walmart.
Presumably is worth.
Walmart, for those of you who trade the Dow. Walmart, like Farmer Jim. Walmart turning back up. All of the pharmaceuticals look good, like Merck. Merck at the highs. I did take some profits off the 100 call for January. J&J. The reason I took some off of Merck is I have a pretty large position, probably larger than I should. I have 25 calls, and I took 5 of those off. Lilly, J&J, Lilly. Yeah, Lilly looking really strong. Lilly, these put credits are going to be 0 before too long. Lilly. Lilly. Okay, these put credits are going to be almost 100% profit. Okay, so I got 10 of these, just over $1,000. I did sell some other ones. And credits is Lilly. Okay. Also, I still got some Goldman Sachs credit spreads. Okay, this is looking good. Goldman Sachs. All right, I got both of these here. Both of them. It's almost $2,000 in credits there. Between that and Lilly, very nice. Very nice. $3,000 in credits. Okay, let's see what else is going on here. I don't want to do anything with Dell or HPQ. There just wasn't any premium, so we didn't do anything with those. What's tomorrow? Because I would like to take something over Thanksgiving for that extra delta. Or theta, rather. The extra theta fade. Oh, yeah, we want to look here. Okay, so what's going on for MongoDB? It's 12.1. That's 13%. MDB. Maybe we'll do MDB, huh? Only thing is, I don't like to take it. MDB. Nah. MongoDB. Price action on the S&P is flat at the moment. Not going anywhere at the high. 182.50s. Okay. Apple. Walmart. Thank you, dollar. Apple. I have December 5th, 280s. Apple, you mean 282.50s? Apple. $931 million government contract to modernize data centers. HPE. Okay, that's HPE. I was looking at it earlier. HPQ. All right, different company. HPE. Okay, Lilly's still pushing. Jeez, Lilly just will not stop. Lilly won't stop. Yeah, 282.50. That's what I thought you meant. You know. Okay. Let's see. Earnings. Let's see. Tuesday. After the close, CLSK, Dell, HPQ. After hours, Zscaler, Urban. Urban Outfitters, Workday, NTNX, Nutanix, 11.3%. NTNX, let's see what that looks like. NTNX. NTNX. Wow, that's at the lows. Never mind. Urban Outfitters. Urban Outfitters. That looks pretty good. Urban Outfitters. Let me see what we can do on Urban Outfitters. What do they want? Urban Outfitters. Okay, Urban Outfitters here. Urban, they don't say. Umbrella. All right, that's on the watch list, right? Umbrella. AMBA. Look at AMBA. AMBA. Okay. $22 billion in free cash flow last quarter, up 60%, which is higher than what Wolf tonight. It's interesting that NVIDIA only sent it to sell-side shops, the ones who publish reports. Schmucker, pre-market tomorrow. Michael Burry responded on X saying he stands. Oh, that was this morning. Never mind. PagerDuty, B-Bar.
his own timeline, but he hasn't delivered just yet. He is, though, promoting a newsletter, which is quite expensive, over $300 a year. Wolf Research,
Guess
as well as Bank
Jeans.
of America, saw their memo and wrote reports saying NVIDIA's days of inventory and accounts receivable
AMBA.
numbers
Let's see what that looks like. AMBA.
So the fight matters because if Warren is right, big tech's earnings are inflated. If NVIDIA is right, which many argue is the case, the AI boom is stronger or has
AMBA. Umbrella.
Are you surprised at all that NVIDIA responded to Burry?
Yes. I think it has to speak to the stock
Beyond 150 and 150 and 210. 150, 210. Umbrella. 150, 210. Umbrella. AMBA. I'm looking to put on an Iron Condor. I like to do one of these a day if I can. Zoom, that was about a 50% return. A little bit more than 50%. Actually, it was about 60%, I believe, right? So if you can get $500 to $1,000 overnight in premiums, and you cash it in the next day for 60% of that, $600, and you can manage to do that every day during earnings season, at least one of those trades. I mean, that's $10,000 during earnings season. If you just do that for a month, that's the strategy. I mean, it's pretty brain simple. Okay, let me see what we got here. We said the upper side here. I'm just looking at Amber. Oh, that's BA. Never mind. AMBA. I don't know why I didn't pick that up. AMBA. 75. The call wall's at 95. 75, 95. 95 is the call wall. It's a 30, 40 delta. 15 delta, $1.70. Oh, those are big spreads. I don't think I'll get a fill here. 20 delta. Yeah, they're like a 75-cent spread between the strikes. There's no way I'm going to get filled on Ambarella. What else can we do here? That's Ambarella. Tuesday after hours. HBQ, not really interested. Abercrombie, that was this morning. Dell I didn't like. There was not enough premium. Deckers was this morning. Or was that Dick's? Dick's Sporting Goods, that was this morning. Burlington, C-Scaler Urban Outfitters, Workday, didn't like that one. Nutanix, I don't like that one. After hours, Autodesk. Let's see, Autodesk. Autodesk sometimes is fun. Autodesk, ADSK. Okay, what is Autodesk? ADSK. ADSK. Okay, so put wall's 260. Call wall is 320, 260, 260. Autodesk. Construction's been good, right? Mondo, up north. It's been good here. And they work on a subscription model, so you have to renew every year. 28. Okay, so we said 260 and 320, 260. Call wall 320, 320. 310 is a 30 delta. 320 is a 16 delta. Let's see what we can do here. Sell and Iron Condor. What do we say? 320, 320, 3. Do we have 320, 325? 3. Yes, 320, 325. All right, see 320, 325. And on the downside, on a miss, got 15 deltas, 275. Let's see, 275 has what? $1.35 in premium. 275, 270. Let's see if we can do a quick trade here. 275, 270. And just want to check the open interest. Let's see. Decent open interest. So it looks like this one's popular. $135 per contract. If I can get a fill, I'll do 10 of these real quick. I won't, being what time it is. All right. So $1,270 for $3,700 in total risk. Okay, you would never let it go to that. Your break evens are 321 and 273 on the downside. All right, let me go ahead and do this. See if I get a fill. Spreads are pretty tight. That's good. Except for the 275 put, there's a 60 cents. I might not get a fill. 60 cents on the put side. There's 20 cents on the call side. Okay, so I'm trying to do, okay, you might want to write these down. I'm trying to do 320 on the upside, 320, 325, and on the downside, I'm trying to do 275, 270, 325, 320, 325, 320, 325 on the upside, and 275, 270 on the downside. Those are 15 deltas right around that one. All right, let me see what I got here. Open order. I'm asking for $1.30, $1.27. Let's see. Let me go to $1.25. See if I get a fill here. $1.25, $1,250. If I can get 50% of that, that'd be a good trade. No. Silence. Silence. All right, so I just did 10 for $1.20. 10 for $1.20. ADSK, Iron Condor, did 10 for $1.20 each. 1,200 total. Earnings.
CIFU. WULX.
Okay, here is Autodesk. Oh, no, I want to do the whole thing here. Let me do this. Let me do that and include the call wall, put wall. All right, call wall, put wall. Call wall, put wall. 322.60. 322.60. 320. Put wall's at 260, so that's okay. Let me just double check this. 260 is the put wall. What did I sell? 275, 270 put. 275. Autodesk. 275. I really doubt they get down to 270. 275 is a 15 delta. Puts.
Welcome back. At least one big-time bull says the Fed won't cut in December and won't cut that much next year either. And stocks will still climb even higher. Ed Yardeni, the president of Yardeni Research, joins us now. It's good to see you. Don't shy away from controversial takes. Some might find this to be just that. Why do you think this market can go higher even if the Fed does little?
Well, I think that if the Fed does cut rates, we'll have to watch what the bond market does, because last year when the Fed cut the Fed funds rate by 100 basis points, the bond yield went up by 100 basis points. I think much will depend on the ongoing data here. We do still get initial unemployment claims. We got retail sales numbers today, which are a little bit on the weak side, and the PPI was not too hot. So I'm not committed, to this notion that the Fed isn't going to cut. I mean, I go with the market's perceptions right now, and so I wouldn't say that it's not going to happen. But I don't think it needs to happen for the market to go higher, because earnings have been phenomenally strong. First, second, and third quarters of this year, analysts expected low single-digit increases in earnings. They came in at 10 to 15%.
But you don't want the Fed to make a mistake, even if all of that is correct, right? I mean, you don't want them to make a mistake. The unemployment rate is up. That's got some people nervous. If they wait too long, they get way behind the curve. That's a mistake, and the market would pay for that.
Well, I think you're right about that, and that's apparently increasing the perception of the Fed and increasing the perception of the market. I think the labor market isn't necessarily.
I see you, John Smith. I'll answer your question in a second.
By lowering interest rates, the idea of lowering interest rates is to stimulate demand, economic demand for goods and services that boosts the demand for labor. The problem with that thesis right now is GDP looks like it's growing around 4% in the second and third quarters. Demand is very strong, and yet the labor market is weak for a lot of reasons that probably defy any solution from the Fed. A lot of it has to do with the retiring baby boomers, skills mismatch, a lot of inexperienced workers, and I think companies are going full bore, increasing productivity. That's why GDP is rising faster than payroll employment.
Yeah, but I mean, some would say, yeah, well, imagine what would happen to housing and how that would be freed up pretty dramatically if the Fed was able to cut rates more than one time. It's been all but a non-player. It's been a non-starter.
Correct. Well, the same story was.
Okay, Microsoft's still climbing. Apple's still fading. Okay, so Autodesk. Let me just mark this up here. Mark it up. Okay, what time? I've got 15 minutes to go. All right, I took an Iron Condor trade on Autodesk. I like to do at least one of these a day during earnings season. Average after a close, sell them tomorrow for $30 debit or whatever, like Zoom this morning, make about 60% overnight. Okay, so 320 is here. 325. Okay, 320, 325 call, 16 delta, 16 deltas, misspell deltas, can't do that, can't be misspelling things.
We still have rolling recessions in places, but my main concern is a melt up in the stock market, and that was less of a concern last week. And now, how quickly.
Okay, and on the downside, we got 275, 270. 275 is a 15 delta that's off of the screen, about right there somewhere. Okay. I really doubt we're going to have a bad number on Autodesk. After it already faded. Okay.
Up next, we'll run you through what to watch for from HP and Dell. Those names are reporting in OT, as you know. The market zone's next.
275, 275, 270 put. That's a 15 delta. 15 delta gives you roughly an idea that 85% probability of a win. Okay. $1,200 total. Total credit. Okay. And if I can close this tomorrow for like 30, 40 bucks, That'd be a good win. Okay. All right, so what I'm shooting for is to buy this back for, let's say $30. So $300. Yeah, so like 75%. Make about $900. Okay, so that'll work for me. All right, and the expiration survey says 28 November. So we'll have Thursday as well in between. But if I can close it tomorrow for like 75% profit, that'll be fine by me. Okay. All right, so that's Autodesk. So we had to go through a few. We went through Zscaler, Workday, Dell, HPQ. None of those look good for premium wise. I was only seeing Autodesk here that I decided, okay, let me go ahead and do that. 15 deltas, 85% probability. That looks good. Save this in spreads channel. And let me just upload this to our spreads channel. Okay, so that's good. Hope everybody's having a good day. What time is it? Okay, we got 10 minutes to go. We had that little pop. Okay, those calls went from $2 and change up to $7.80. The 67.65s. I completely missed that because I was in the middle of doing this condor. That would have been a nice 5 or 6. Yeah, that would have been good. Looks like we're going to go some more. Oh, shit. It's going to go more. Look at this. Look at this. $1.75 to $8.50. That to $9. Wow. $1.75 to $9. 67, 65.
Commentator Mike Santoli and 314's Warren Pies here to break down these crucial moments of the trading day. Plus, two big earnings reports to note. SEMA is
Okay.
$2.
$2.
Is covering Dow. Mike, I begin
$2.09.
with you. We got 700 for the Dow. We got 2.25% for the Russell. We got a decent move back in the NASDAQ too, which looks to me to be at the highs of the day. This is a pretty nice move yet again.
Yeah, there's definitely progress on the whole repair from last week's rupture. You know, coming into the week, Scott, I was saying, you know, are we building a more balanced bull? That was my line.
Right.
And it's kind of working according to plan, meaning the market attacked a lot of the AI excesses. It purged a lot of the low quality froth, reset positioning, you know, kind of got everybody's expectations back into line and restored the ability for pleasant surprise.
Wow, that's good, John. That's cool.
Obviously, dovish Fed rhetoric and expectations coming back into the market, which helps, but I think mostly just to remove that like doomsday scenario of late 2018 when the Fed was perceived to be too tight and we melted down into the end of the year. So we're right back at Thursday's high on the S&P 500, right before we fell off that little cliff after the NVIDIA move. So a lot has been done. You know, I still think we're in convalescence mode. You have to be aware that there's upside still to the old highs, and you don't want it to necessarily get too wild in the next 2 days. But everyone knows the history. The days around Thanksgiving tend to have an upward bias.
Tighten that S&P up again for us, guys, please, into control, because you've been talking about V-shaped recovery. Yeah. Look at that. That's a V. This has become very much.
Okay, S&P is still going. All right, $10, $11 now. Wow, look at this market freaking go.
And then here we go. And even
Shit, 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 shit.
That drop in NVIDIA, and there's times when NVIDIA is down 5+%, the rest of the tape's not taking care of it. Today, no real problem. We got non-tech kind of rising to the occasion, and that's allowing the VIX to bleed below 19. And so everything starts to fit together when a lot of that rotation happens.
Well, thank you, Alphabet and Apple. New highs for those stocks, too. Seema, tell us about HP.
Okay, Scott, the big concern is going to be around margins. Morgan Stanley recently lowered its price target on HP from $24 to $21 a share, maintaining an underweight rating on this idea that rising prices of memory chips will challenge margins of the hardware players like HP. Analysts there also referencing the last cycle in which memory spot prices of DRAM and NAND went up from 2016 to 2018. At that time,
Okay, nice trade there, though. Nice trade, S&P 500. Beautiful, beautiful. Ripper here. That thing's still going to go, huh? What do we got? 6 minutes to go? All right, this is probably going to drop off now.
Very similar to what Seema just said. The big focus is whether soaring memory chip prices are going to squeeze profit margins. Memory accounts for roughly 10 to 70% of the bill of materials, depending on the product. So AI servers, for example, it's a lot cheaper. The issue is that Dell's gross margins estimates have barely budged despite these higher memory costs, setting up for a potential for a miss for margins. But there's definitely a bullish counter argument. Dell's inventory did climb. It was under $4 billion to over $7 billion, suggesting they stockpiled memory chips ahead of price increases. And competitor Lenovo just reported that memory pricing isn't hurting their margins, saying they remain confident about the outlook. Beyond margins,
Okay. Damn it. Another day. I knew this was going to happen. They've been doing this a lot late in the evening. Big volume came in right at looks like 331. They popped it, and they just ran that from $3 to $11. All right, now they're going to start selling it. I don't have anything left, right? Let me make sure I don't have anything left here. Okay.
Yeah, thanks for having me. Yeah, we upgraded equities at the end of last week.
Okay, now we're starting to drop. That's exactly what they did yesterday. They start dropping it now.
I'll just give you a few things to think about. Our sentiment model, which is it takes like as many of the most important positioning and sentiment things that we look at. It's registered extreme pessimism, so that's important. Specifically, we look at inverse ETF volume as a way to look at retail capitulation. This speaks to something Mike was talking about. We saw inverse ETF volume spike up to the highest level we've seen in 2 years outside of Liberation Day, and those have always marked near-term bottoms. The other thing I would bring up is that under the surface, there was a lot of pain, really, in this pullback. Even though the index was down 5%, maybe a little more than 5% peak to trough, the median stock was down more than 16% from a 52-week high. So if you back out and look at what does that usually imply for the index, that's usually closer to a 10% correction. So when I put all that together and then combine it with where we're going seasonally, I think we're set up for a very strong end of the year.
Like that mess with you? Yeah, for sure. Tactically, that does all fit together. I do think that the idea that we sort of talked ourselves into this notion that the Fed was going to choke things off, and maybe the economy was seen to be a little bit weaker. We were looking on the AI side. The other piece of it, I'll say, is as we've been in this process, right? So we're at the levels the S&P reached, October 9th or something like that, a month and a half ago. In that month and a half, we've gotten through an earnings season. We've rolled forward where the 12-month forecast is. It's higher. Therefore, you've sanded the edges off the valuation concerns to some degree. And so, yeah, I do believe that there is room. Again, whether it means we're going to get all exuberant again.
Oh, kicking myself. That's all right. So hopefully some of you are still trading. I see Frano was taking some profits into strength. Good job, Frano. That's what happens. Okay, so at least I marked the chart up.
Not to mention, so much for that narrative that the Russell can't get out of its own way, Warren. You look now, we've eclipsed the 10% gain year to date for the Russell 2000.
All right, we're turning over now, S&P.
Yeah, I mean, it's encouraging. I think it's encouraging to see equal weight and Russell do well. I think you have to understand the bet you're making. If you're going to be long Russell 2000, it's very much a rates bet. So it's one of the things we decompose. It's that, of all the subsegments of the market, the Russell is the most sensitive to these rate moves. So yeah, we're down to 4% on the 10-year.
If you're long the Russell here, you're betting on rates continuing to fall at this kind of glide path lower and economic growth hanging in there and being sort of robust. It's a needle that needs to be thread, and it's healthy for one day to see it doing this. But again, this is not. I've been on with you many times saying this is not where I would put my chips right now.
Is the best hedge on all this gold again? Are we back? Are we going to be talking about this again?
Yeah, we like gold. We like it all year.
2 minutes to go. 2 minutes to go.
Secular bull market. We have a 9% pullback. We went from record outflows of the GLD ETF, something we watch for retail sentiment, and now we have outflows. So it kind of goes with what we saw in the equity market. You know, we had to go through something to work off this excess sentiment. You're getting these reports of Kevin Hassett being the next Fed chairman. I mean, we're not here to make normative policy. And my job is to navigate markets. But when I look at that, I think that when you have a really extension of the administration coming into the Fed, that's going to create the environment where I think gold is going to have another strong year next year. That's a conviction prediction for us.
How are you watching this chart, Mike?
All right. So, yeah, Mondo, same thing, man. I'm just kicking myself. I left so much money on the table today. That's what happens when if I wasn't broadcasting or doing all this stuff, to maintain the site and the broadcast and everything else and try to get trades out there for every different kind of investor we have: investors, day traders, scalpers, premium sellers, bond traders, you name it. Yeah, I could catch a lot of these trades. But, I enjoy doing it. I enjoy broadcasting and talking about it. I may not be as precise as some people with exact numbers and everything the way you want to see it. I throw the trade out there. If you like it, take a look at it. You know what I think. Most of the time, I'm looking for a long trade. Very seldom do I take puts unless it's using Trace, S&P with puts during the intraday. But everything else is usually a long trade. And I only have a few strategies, above the 60-minute, above the weekly 10 EMA, above the daily 9 and 21 day. Go long with a trailing stop. I mean, it's pretty straightforward. Anyway, that said, that's a wrap for me. I'm tired for some reason. I slept pretty good. Had plenty of sleep. Didn't exercise yesterday. I might have something to do with it. Anyway, have a great evening, everyone. Take care. I do have Autodesk for an earnings play. Hopefully that one works out good. And that's it for me. Hope you had a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is November the 25th, 4 p.m. All right. Maybe I'll hang out a little bit and see if Autodesk comes up real quick. I'm going to take the mic headset off and just relax for a minute, do some push-ups or whatever. Okay, have a good one.
Exchange, United Worldwide doing the honors at the NASDAQ. We've got another bullish day for stocks as the latest data inflation further cemented bets that the Fed will cut interest rates next month. The Russell 2000 was the standout, with investors betting that a cut would be beneficial for the small cap names. Healthcare, discretionary, those are the leaders today for the S&P. Energy and utilities lagged. All the three names in the S&P healthcare sector closed higher today. The Dow Transports, that was a bright spot, closing higher today for the third straight day as well, outperforming the larger averages. Nearly all 20 components were higher, up more than 1%. The commodity complex seeing moves today. Oil falling more than 1%. Ukraine peace deal talks continue here, and copper and gold both higher in trade today as well. Yields moved lower in reports that Kevin Hassett is now the front runner for the Fed chair, and you had the 10-year Treasury yield briefly dipping below 4% on that report.
And that is the scorecard on Wall Street. But winners stay late. Welcome to Closing Bell Overtime. I'm John Ford alongside Morgan Brennan. Ahead, we are awaiting earnings from Dell, HP, Zscaler, Autodesk as tech stays in focus, and we will hear from Urban Outfitters. But that's
all right.
22% this year.
Plus, markets finally got economic data today. They showed a mixed picture. Inflation was lower, but so was consumer confidence and retail sales. You could call it all dovish. We're going to speak with Treasury Secretary Counselor Joe Livornia.
And we'll tackle the shakeup in the AI.
Oh, there goes Autodesk.
From NVIDIA to Alphabet.
Autodesk with a pop.
Change with that chip.
just logged its third straight day of gains as investors believe that the Fed will cut rates next month. Delayed
All right. So Autodesk is out. I'm out of here. Take care. Have a good one. See you tomorrow.